Welcome, everybody, to Bitcoin Amsterdam 2025. We are here at the Bitcoin Magazine news desk. This event is presented by Treasury. We are super, super excited to be here. We have an all-star lineup at the event this year. We have Adam back. We'll have Jack Mahlers. We'll be hearing later from the Winklevoss twins. Very, very cool stuff. But first, let's get down to business here. We have an all-star panel. I'm Frank Korva, Bitcoin journalist, joined to my left by Jurrien Meyer, COO of Treasury. Again, the title sponsor for the event. Bart Mol, host of the Satoshi Radio podcast, as well as crypto journalist extraordinaire Christine Lee. Ladies and gentlemen, let us dive in. Jurrien, I want to go over to you here. You are the sponsor for this event. You're taking over some of the operations for this event this year. It's sort of like a combined effort with BTC Inc. and Treasury. Tell us a little bit about what it's been like and what you're most excited for at the event.
Yeah, I think if you look at the event itself, there's over 5,000 people coming here right now. It's amazing. If you look at the venue, it's huge. We're very much looking forward to the opening remarks. It's going to be an amazing show. Personally, I'm really looking forward to around 4 o'clock when we're speaking to the Winklevoss twins. That's going to be an amazing chat for sure.
Love that, absolutely. Bart, you've been to this conference many times. We've been doing this
all times,
for years. 4 times now, I think.
Times,
we've been doing it for a while.
Veteran.
Here. We've been doing it for a while here. What are you looking forward to most this year? Every year is kind of a little bit different. What do you think is going to be different this year, and what are you looking forward to?
I mean, the venue. For starters, last 3 years was at the Westergasfabriek. Pretty cool venue, but this is kind of the same, but everything in one. So we have 2 main stages basically. Like last year was 1 big main stage and then a couple of small ones. Now it's 2 big main stages. So really looking forward to that one. We have our own small stage, so our Dutch stage. We can host around 100 people in that small room, so that's pretty cool. We're going to do a live podcast there, so also looking forward to that.
Amazing stuff.
And this is your hometown, obviously, and so you know a lot of the folks here, and you see the community growing.
I would say, like it's still Amsterdam, but no, it's I'm from a different city, but that's an inside joke. But anyway, no, I'm looking forward to it because the whole Europe community is here, so that's pretty cool. Yeah.
Very, very cool stuff. Christine, I want to go over to you. So oftentimes you're covering the broader crypto space. We're here at a Bitcoin conference. And so yesterday you're walking around, taking it all in. Your first impressions, what are you thinking about the conference thus far?
This is not a shitcoin conference, folks. This is Bitcoin. We're going orange coin go up. All right? So that's what we're talking about here.
Orange coin go up. Vibes are high. Bitcoin's price is also high. We're at about 103,000 right now. Jurrien, I want to go over to you. Many different treasury companies popping up this year. Maybe it was the year of the Bitcoin treasury company, if you will. What is Treasury doing to differentiate itself from some of the competitors out there?
Yeah, I think if you look at what we do as differentiating factor, look around where we are right now. We are going to be the owners of Bitcoin Amsterdam conference. And if there's one place where you really meet everyone, where you can build a community, where you can focus on education as well, to the broader community, also to involve politicians, regulators. So we have the finance minister of Luxembourg also coming in today. All those items basically make us like a really differentiating factor to other treasury companies. And I think more broadly, there isn't one yet in the Netherlands. So hopefully we're going to be the first one listed on Euronext Amsterdam Exchange. And hopefully we're followed by many others across Europe.
Yeah, that's what I'm excited about as well. Just hearing more about the European regulators, getting them educated and hearing what their perspective is on this technology, the community, and getting them acquainted with things because it's very fractious in Europe. And I'm sure a lot of our viewers out there are interested to learn, what is the state of Bitcoin in Europe? And so we'll learn a lot about that.
Yeah, I think if you look at adoption, especially if you look at treasury companies overall, then the US has skyrocketed completely. There are like way more treasury companies out there. The amount of Bitcoin which they're holding is also significantly higher compared to Europe. But the great thing is you now see basically European treasury companies popping up in all different countries across Europe. That's already a big positive. And I think the biggest bullish sign for like Bitcoin treasury companies overall is that Strategy recently did its new preferred stock issuance called Stream in Europe, initially starting with 350 million in subscription. And that was heavily oversubscribed, so they really sized that up to over 600 million. So that's really a clear indicator that institutional investors are really ready for Bitcoin treasury companies in Europe.
And it's interesting you say that in the United States, especially, it has skyrocketed because for a while, Europe really had the lead, in Crypto Valley and Switzerland. They were taking the lead. It was the first in Liechtenstein to create a regulated framework for through the Blockchain Act for Bitcoin, cryptocurrencies, and whatnot. But now it seems that the United States has taken over. So it's really the government and the administration, the Trump administration. It really matters who is guiding, leading the front there.
Yeah, definitely. And that's maybe a bit of a downside compared to Europe. Like if you look at the US, they really made a big push towards digital assets or crypto in general. Really a progressive stance overall. And the speed at which they implemented that new regulation, that's really impressive. So they really overtook other jurisdictions which were really pushing ahead. If you look at, for example, some countries in APEC which were doing a big push there. Now the US really overtook everyone and they're making a big push. Stablecoin adoption, that's going to be a big thing, of course. If you look at treasury companies, they're popping up everywhere. So really bullish about all that.
And I would say that could be a good thing and a bad thing at the same time. There's a double-edged sword there. Because the good thing, yes, we want clear regulatory frameworks. But on the flip side, we don't want political instability. So, every 4 years, we don't want to have another administration to deal with that will say, you know what, we don't like this technology. We're just going to start
selling the
prosecuting all the developers, et cetera, and having to deal with all the aftermath of that. And at least in Europe, from what I understand, it is very stable. So with a lot of the countries here, once they create a regulatory framework, they stick to it. They don't backtrack. So there is clarity there.
Kind of depends what you're developing, though, also in Europe.
Could you expand? I was going to ask you also, and I know you're paying attention to a lot of what's happening in the U.S. part, everything from the Trump administration all the way down to, as Christine mentioned, the Samurai trial. We just saw the sentencing. Without diving too far into that, what are you paying attention to, and is it having an effect on Europe in any way?
Yeah, so about the development and the trials, I mean, we had the Samurai trials in the U.S. happening right now as we speak, but also, of course, the Tornado Cash trials were happening in the Netherlands and in the U.S. So that's why we were extra interested in that one. And I will leave it at that one because you're going to talk about that more this afternoon, 3 o'clock, I think. So definitely watch that one. What I've been also looking at is Square, Jack Dorsey. I think that's the way to go. So in short, what he's doing, a lot of things. It's difficult to say in short what he's doing, but making hardware wallets, the Cash app, so buying Bitcoin.
Even mining, right? Block is into mining now, making mining equipment.
Exactly, all that stuff. And now with Square, he's also making it easy for merchants to receive Bitcoin. And that's where my heart, because I don't own treasury company stocks. I'm my own treasury. I own Bitcoin and I want to spend it. And that's impossible. Except for this conference.
I think do you mean more sort of like going to your local coffee shop and buying coffee, right?
Exactly. Because when I'm all in on Bitcoin, I want to spend my Bitcoin because I don't have fiat to spend. It's as simple as that. So otherwise I have to go back to fiat and then no, I don't want that. So I don't want a credit card or a crypto credit card. And what Square is doing, I think, is a really good step. It's, of course, custodial, and that's fine. But I can pay with my own non-custodial wallet, and the merchant can receive dollars or can receive Bitcoin or can receive 50-50, whatever. I think I'm really curious on how many of those 4 million Square merchants are going to use this.
I think if you jump in on that, please. Like yesterday was also the Bitcoin for Corporations event. Basically a lot of Bitcoin treasuries all coming together, talk about it in the broader industry. And Stefan Misi from basically Bitcoin for Africa, he really touched upon this exact same point. And if you look at basically countries where like currency debasement, we always look at like the euro, the dollar, but if you look at real currency debasement, African countries have really experienced that. And as soon as you explain Bitcoin there, all the Africans understand it in like a minute, and everyone's straight away bullish on that. So
the value proposition is very clear, right? And a question to you, I wanted to actually come back to you on this exact topic, Jurien. So you're obviously a treasury company, and you're thinking about Bitcoin as an asset. Sometimes people refer to Bitcoin as digital gold, but obviously we know that it's money. The title of the white paper, Bitcoin peer-to-peer electronic cash. Do you think about it as both? And sometimes the likes of maybe Roy Scheinfeld from Breeze often talks about it as sort of what it has to become money for it to retain its value in the long term. So are you thinking about it in terms of a medium of exchange at this stage, or are you still thinking we're in the process of maybe monetizing Bitcoin so it's good as a treasury asset now and it'll be more widely used as money maybe a little bit further down the road? Your thoughts?
I think the adoption of money, that's definitely coming, and you already see that basically happening already in like the countries, Africa, Latin America, all countries which are basically suffering from very high inflation, governments which may or may not have the best currencies out there. Yep. But I think more broadly, I think treasury companies basically have like a very valuable asset on their balance sheet.
Yep.
And they can effectively become the banks of the future. If you go back to like the 1600s, 1700s, where basically banks were holding tons of gold basically in their vaults.
Yep.
That's effectively what we will be becoming almost.
Yep.
But then we'll be holding large amounts of Bitcoin basically on our balance sheet.
Yep.
We can basically build a conglomerate of Bitcoin-related businesses. We already purchased the Bitcoin Amsterdam conference. So basically you can build out a Bitcoin-related business network out of it. You can finance other M&A transactions with it. Or you can go the route from basically MicroStrategy. They basically have their assets just idle right now. They're a strong believer in that. But you will see a differentiating factor between treasury companies in order to differentiate themselves.
Yeah,
but I also agree with...
Yeah.
Oh, sorry.
No, go ahead.
Yeah, so I also agree with Jack Dorsey on this one. I think it has to become money, because otherwise it fails. And that's for me at one point, because I just think money is cooler than gold. But that's my personal opinion, and you can decide to not care about that. That's fine. But it's also the subject of my keynote tomorrow is that if you look at gold and Bitcoin, then gold just is. Gold, the properties of gold are secured by nothing. It just is. It's the physics. Mother Nature guards that gold is gold. That it's still yellow. That it shines after 1,000 years. That you can't make more of it. It's guarded by physics. Bitcoin's security model is active. And we know that at some point there is no more Bitcoin to mine.
I actually just got word that I think they're already on the main stage.
Yeah,
I didn't mean to cut you off. Please hang out with us for a second. And Christine, please hold that thought you had as well. Ladies and gentlemen, we are heading over to our first talk of this event. We'll be hearing from Khing Oei and David Bailey, CEO of Treasury and the CEO of Nakamoto. Stick with us. We'll be right back after this.
There are whispers beneath the noise.
It's always awkward. My apologies.
Running silently, everlasting. It has no body, but it moves value across the earth. It has no voice, but it speaks in hashes. A language of pure mathematical truth. But pure information is weightless, a promise untethered from the world we can touch. A world we can trust. Years of neglect, rejection, and doubt created a storm too strong to defy, even by the most powerful giants.
My view is surging because there is a massive amount of manipulation. I think it's about
Bitcoin is a pure, Ponzi.
But for a storm to be harnessed, it needs an anchor. A bridge of trust built on old foundations in an entirely new world. A world where Bitcoin takes the spotlight, where the voice is returned to builders and financial democracy is empowered. This served as foundation of Treasury in its ambition to ignite the digital golden age. The market calls for an anchor, for a time and place to feel its unity, the physical manifestation of its ambition. The whispers become summons, a single point where the weightless finds its form. Here, the protocol finds its voice. Treasury finds its proof. Here, we are the code made manifest. Welcome to all who have gathered here, who have led the world to its digital golden age, who, against all odds, have never next faith. Welcome to Bitcoin Amsterdam. Welcome to the stage, founder and CEO of Treasury, Khing Oei.
Welcome, Bitcoin Amsterdam. Wow, what a moment. A very warm welcome to all of you who've come here from all over the world to be here with us today. As someone who grew up not too far from here in Amsterdam, it's a truly special moment to be standing here on this stage today. I could not be prouder to see how far Bitcoin in Europe has come, and all of this here at home is a true testimony to that. When we started building Treasury, to me, it made perfect sense to do it here in Amsterdam. Not only because it's home, but because of the incredible engagement and community and passion that we're all seeing here today. And the more than 5,000 people we'll see here over the next couple of days are again a true testimony to that. When David Bailey is my friend here, who I started talking to Treasury about earlier this year. And when he said, let's get Bitcoin Amsterdam involved in Treasury, that to me was an absolute no-brainer. Because we're not just here to build the largest Bitcoin Treasury company in Europe, but to build community with all of you here together today. The teams at BTC Inc., Amsterdam Decentralized, and Treasury have worked tirelessly to build an incredible program for you, world-class speakers, and an unforgettable experience. So, over the next few days, we'll see top speakers like Cameron Tyler Winklevoss, the Minister of Finance of Luxembourg, Jack Mallers, Adam Back, and David Bailey. David Bailey is CEO of Nakamoto and Kindly MD, and the founder of BTC Inc. He was one of the first people to see how important it is to build community for Bitcoin's global adoption. He started this whole conference ecosystem. He was been a tremendous supporter for Treasury. I'm very grateful for that. So please join me in giving a very round of applause for my friend David Bailey.
Good morning. Good morning. You know, I have to say, every time I come to this conference, I'm reminded how cool the Dutch are. Hosting events inside of power plants or sugar factories. It's very cool. First off, it's funny. Last time we were here was November of last year. How much has changed in a year? What a year. I think this maybe is the craziest year I can remember in Bitcoin since I've been involved in it. And, I think this event especially has a special place in my heart because this was the first international Bitcoin conference that we had ever hosted as a company. This is the 4th ever Bitcoin Amsterdam. How many people here have been to more than one of these events? How many have been to all of them? Let's go. Cool. Well, it's been awesome to see this event grow, to build this event with the Bitcoin community. And for those of you that know BTC Inc., our mission at BTC Inc. is to accelerate hyper-Bitcoinization. And so, what does that really mean? It means taking Bitcoin on the offense. It means not waiting for people to come to Bitcoin, but to take Bitcoin to them. And, one of the coolest things about Bitcoin is that it's this raw technology that creates value, has value, because of the things that the people do. The Bitcoin itself isn't used by just, the technology. It's used by people. And so doing this event here was about how do we take Bitcoin on the offense in Europe? How do we take Bitcoin on the offense internationally? And when I met Khing and he pitched his vision for taking Bitcoin on offense in the Dutch stock market, and to take Bitcoin on offense with TradFi, I knew it was something that we wanted to be a part of, and I knew we needed a home for this event for the Dutch Bitcoin community that's built this event, and to partner with a company that's a Dutch company with Dutch shareholders. And so I'm very honored to have this partnership with you, Khing. I'm very honored and thankful for all of you who have helped build this event. And I look forward to what we get done next year. So thank y'all. Enjoy the show.
Amsterdam 2025, powered or presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined to my left by Nick Hoffman, head of news at Bitcoin Magazine, Bart Mole, host of the Satoshi Radio podcast, and Christine Lee, crypto journalist extraordinaire. Nick, I want to go over to you first here. Nick, you're constantly staying on top of the news, making sure that we're getting it both through the Bitcoin Magazine Twitter handle, through the Bitcoin Magazine website. What are you looking for here? What do you imagine is going to be a newsworthy event here at Bitcoin Amsterdam 2025?
I'm looking forward to just watching all the amazing speakers we have today. They're sharing so much knowledge and just so many exciting alpha on Bitcoin that our audience on Twitter, Instagram, Facebook, across all of our social platforms love to hear. So I'm just going to be working hard on clipping out all those clips, getting them to our audience who may not be currently tuning into the live stream, since the majority of our audience is asleep right now in America. So I'll be sharing that for all of them to see when they wake up.
All right. Appreciate that. Bart, there's something we didn't get to discuss in the morning show that I wanted to touch on. You're going to be doing a stage here in Dutch, right? A workshop stage, I think. Can you tell us a little bit about that?
Yeah, it's just a very nice small stage for around 100, 150 people. We have our program starts at 10. We have a couple of keynotes, a couple of fireside chats. Paul Buitink knows a lot about gold. We have Bas, he's on the board of Chainalysis. We're talking about Bitcoin and privacy there. And we're doing our live podcast there. So and a Q&A and a quiz, so we have everything. It's in Dutch though, but I think there are enough Dutchies here to fill the room.
Excellent, excellent. Okay. We're heading back to the main stage in about 45 seconds, but Christine, I didn't get to ask you in the morning show here, what are you most looking forward to here? What speaker are you most looking forward to hearing from? What event, what aspect of the conference?
Well, I have, as you mentioned, explored a lot of the broader crypto industry and et cetera. And so I'd love to, and I talk a lot about macroeconomics factors as well, Bitcoin price, market movements and whatnot. So what I'd really love to dial in on is the technology and the community here and how they're growing and how they see Bitcoin developing and the evolving in the future.
It is shortly evolving, and we're going to hear more about how it's evolving. We're heading back to the Treasury stage, to the main stage right now. Stick with us. We'll be right back after this.
Let's get some energy in this room. How's it going? There we go. I mean, if David Bailey had the energy to get up here and face you all this morning, then we know we're going to have a good day. It's really fantastic to be here. For those of you that don't know me, my name is Gareth Jenkinson. I'm the head of multimedia at Cointelegraph. I've been writing about Bitcoin since 2017, so fair to say I've seen some ups and downs like the rest of you have. It's been 5 years since Michael Saylor announced that Strategy would convert its fiat treasury holdings into Bitcoin. And fast forward to today, Strategy holds 641,692 Bitcoin. It's a staggering amount, and it puts them firmly atop the list of publicly traded Bitcoin treasury companies. Publicly traded Bitcoin treasury companies now hold more than 1 million Bitcoin, and that's crazy to think, knowing that we only have 21 million Bitcoin that will ever be in existence. But today, we're chatting to some big names on the European landscape, because what happens in Europe is definitely not the same as what happens in the United States. So I've got a fantastic panel here to speak to us today. And I think we're going to start with Khing, but just by introductions, we've got Khing from Treasury, Alex Lizette from Capital B, and then Sander Anderson from H100 Group. Gentlemen, it's great to be here on stage. Khing, it's been a crazy few days. Congrats on Bitcoin Amsterdam.
Yeah, thanks very much, Gary. I think great to be with you here, and fantastic to see everyone here come together. And got a couple of very exciting days ahead of us.
Let's start off with where you're at. I'm sure a lot of people in the crowd, a lot of people in the Netherlands are wanting to know where Treasury is at, when you guys are going to be listing. I know you probably can't give a definitive answer right now, but let's start there.
Yeah, sure. We've announced a fundraise of about $150 million. And now hold over 1,100 Bitcoin. We were funded by Winklevoss twins, David Bay and Nakamoto, and a number of global investors. We're preparing a listing in Amsterdam through reverse listing. That's in process. And we're super excited to keep building the ecosystem with the conference and other things.
Alex, it's been a year since Capital B started its Bitcoin Treasury company. Take us back a year ago, how hard it was to start this, and a year later, how much has happened, and reflecting on the success that you've had.
Yeah, so Capital B is Europe's first and largest Bitcoin treasury company. We have started back in November 2024. Back in the day, we were, now I'm being called a veteran, but back in the day it was a strategy in the US that had started the movement in 2020, then Metaplanet in Japan in early 2024, and Capital B, November 2024, launched the first in Europe. And what's been happening is quite impressive. It's plus 3,000% growth and the most liquid stock on the Euronext Growth Paris market, and the most volumes overall, with a lot of interest from different institutions and investors. And frankly, that's been followed by a massive wave of other Bitcoin treasury companies, and now we have a strong European leaders in the space, and frankly, that's proving that there is a major opportunity. At the same time, it's been also challenging for the overall industry because there has been so much new companies and stable demand, and so the price has been going down a bit. I think you need to take a step back and look at the overall context. It's monetary devaluation all over the world, and what we are doing is protecting the investors from that monetary devaluation and providing for an additional opportunity to maximize the potential returns of Bitcoin.
Sander, H100 Group is the first Swedish Bitcoin treasury company. Can you talk to us a bit about the genesis and the journey so far?
Yeah, so we did a reverse takeover in April this year, and we actually started quite small. We bought 4.39 Bitcoin as the first purchase. And back then, that actually put on top 100 Bitcoin treasury companies in the world. And since then, we have raised 120 million. And we have seen that the Nordic markets has some unique opportunities. And we see that international investors are seeing the opportunity in the Nordics. And also now we see more and more adoption locally, especially on the credit side when Michael Saylor entered the credit market in Europe.
I want to talk a little bit about how to start a treasury company, because there's lots of different flavors. You know, someone like David Bailey has been on, I guess, the really difficult front of a pipe deal that has very depressed prices right now. That is just one way of listing or starting a Bitcoin treasury company. Obviously, Treasury is doing a reverse listing. H100 did a reverse merger, and I think Blockchain Group at the time was already listed, right? So there were different ways of expediting the process. What's the best way to do it? What's the easiest way to do it? I don't think there is an easy way to do it, but Khing, maybe we can start because you've got a very good background in this.
Yeah, it's very interesting. It really depends on the market you're in, as in jurisdiction, on the opportunities there, but also the market environment. And certainly for us in the US obviously led this whole wave with first MicroStrategy and then a number of others. You saw that it took over time more time to list through, for instance, a reverse listing. So that's now become a less attractive method in the US. Certainly in Europe, it's still an effective method. And I think overall, the other thing is the markets are clearly always in flux. And there's always the question whether you raise your money privately through so-called PIPE, private investment in public equity, or publicly in other ways. And the best way there is an at-the-market program, selling shares in the market. So it really depends on all those things. I would say at the moment where we are, I still do think that the pipes are an interesting way. We raised our money through a private round, and then from there on able to grow, and then grow into the public markets.
Sander, maybe you can jump in here and just give your general thoughts on how you approached it versus a pipe offering or something like that.
I would say like the most important thing, especially as an early stage Bitcoin treasury companies, is the investors you have with you, and what time horizon and what type of volatility they are prepared for. We were very lucky to be backed by Adam Back very early, and he's been crucial for us to structure the raises and the capital in a way where we attract long-term holders. So I would say like the investor base is the most important thing you do to get a good speed out of the gate.
Alex, can you talk a little bit about your process and how you eventually decided to go for a Bitcoin treasury company, considering what the company was doing before?
Yeah, I think a Bitcoin treasury company really has 3 different stages. The first one, when you start, you build a very strong capitalization table, as Sander mentioned. You have very long-term oriented investors, like we have as well, Adam Back, Fulgor Ventures, UTXO Management, Tobam, the first asset manager in Europe to implement a Bitcoin fund and a Bitcoin treasury company fund. And when you have raised that amount of capital, about 1,000 to 2,000 Bitcoin, then you go out to the institutions, the early stage BTC native or curious institutions. And we've had the likes of Generali and the likes of comparable to Generali, but in other regions. And we have added more recently with a raise of 58 million euros back in September. 30 plus additional institutions. Now we are at 40 different institutions in our capitalization table, and 90 plus different countries over retail and institutional investors. And so that provides you with a view of what can be the growth in the first phase, the second phase of early institutionalization. And the third phase is really when you reach a critical size above 5,000 to 10,000 Bitcoin and probably even beyond, is when you are in the capacity to actually issue publicly listed securities that provide a form of credit exposure to investors. So to put it simple, not everyone in this room want necessarily to have the full volatility of the Bitcoin treasury company. Probably some of you want only Bitcoin, some of you want Bitcoin with a potential outperformance of Bitcoin, and some of you also may want maybe 10% yield on a stable way. And probably different type of investors will have different allocations. And the Bitcoin treasury company is really building the central bank for digital capital markets. So that is the ambition at Capital B since the beginning, is to build the largest balance sheet on the continent and to be the best credit issuer on the continent, to allow for different types of investors to get the exposure they want and to keep away the volatility they don't want.
You made mention of your balance sheet, right? If I look at the key metrics here, Capital B has 2,818 Bitcoin, Treasury has 1,111 Bitcoin, H100 Group now has 1,046 Bitcoin. But Sander, you mentioned that you started small, right? Does it actually matter how much Bitcoin you have at start? I'll start with you and then I'll throw it over to Khing, because you guys aren't listed yet, but when you do, investors will know that you have a sizable position of Bitcoin, or a sizable holding of Bitcoin on your balance sheet.
I think how you start is more dependent on what type of management team you have, and we had the opportunity to create a lot of momentum very early by starting small, and it fitted our team and our investor well. So I would say that was our way of doing it. I think it's multiple way of doing it. The most important thing is that you have the long-term view on Bitcoin and Bitcoin capital markets, and if that's integrated into the management team, I see multiple strategies being very successful in this industry.
Khing?
Yeah, for us as well. The investors we had are real Bitcoin core believers. So for them, when we funded the deal, it was very important to have that Bitcoin immediately and start with that. And that is kind of unique, actually, because, for instance, in the US, most deals still have to wait until they can buy the Bitcoin. And then clearly starting with 1111 is fantastic. And the goal of a Bitcoin Treasury company is to grow Bitcoin per share over time. So that's obviously the main thing we're working on, is to grow through different parts of the capital structure and able to grow that balance. Being having a listing on Euronext Amsterdam, which we're in the process of, is obviously a key benefit of it being a great and a very liquid exchange. So that's part of the thesis for us.
Let's talk about that. Does it actually matter what stock exchange you're listed on as, capital markets become more and more accessible around the world?
Yeah, there is obviously a key thing for a Bitcoin Treasury company is liquidity, and different exchanges have different liquidity. The other thing is very important is the regulation around it and what it allows for. Again, the US is kind of leader in this. What's important for what strategy has shown is at-the-market programs where you can issue equity, in essence, every day to buy Bitcoin, and being able to issue a whole load of debt instruments, converts, pref securities. And the beauty is in Euronext Amsterdam, all of those are at our fingertips.
Yeah. Alex, I'm going to take it back to you. You got ahead of the market in Europe. How important was that for the growth of Capital B in particular? And is there still room for more players to come into the industry at this stage?
Yes, there will always be room for competition. In fact, we are happy competitors, and we are literally on the same mission to accumulate the most Bitcoin possible. At the end of the day, what we are doing is really decentralizing Bitcoin. It doesn't seem like that, but it is the case. Through the demand that we provide in the market, there are now several tens and tens of banks that are now providing Bitcoin custody. That provides more Bitcoin custody options for individuals, for corporations. And so overall, I'd like to say, yes, we are competitors, but at the same time, we contribute to buying more Bitcoin, holding it forever, and contributing to the overall adoption of Bitcoin through those institutions. Then in terms of competition, there will always be different risk-return profiles. You will always have, well, first of all, we are all competitors of strategy and of Metaplanet, and so you always have a different risk-return profile when you have a company. Maybe you will more identify with the strategy of Metaplanet, Capital B, Treasury, H100. Yes, and so there will always be room. At the same time, as I mentioned, there are certain sizes where you can do certain things and certain steps where you can really accelerate and issue products that have a significance. Because when you look at the Bitcoin that strategy is able to acquire through the preferreds, well, you can do the parallel, and if you have very small number of Bitcoin, then it's not really that significant today. It will be tomorrow, but it takes a bit of time. And so, yes, the exchange is important, the capital market is important, the financial instruments that you can issue are important, and the size matters a lot, because when you work with institutions, what they see is what is the size of your balance sheet, what is the volumes of your market, what is the volatility of your stock. And so that's been quite fortunate over in France at Capital B, is the capacity to have the most liquid, investable Bitcoin treasury company over the continent today, and I'm sure that you will have as well over time. And that's definitely something that matters for investors, and that's something that maximizes the capacity to raise more capital and to increase more Bitcoin per share.
I've had some interesting conversations with various people in the wider cryptocurrency industry in recent months, and Arthur Hayes was one person that kind of said to me, there's going to be a handful of Bitcoin treasury companies that will win in their markets or overall. And he pointed at, obviously, strategy. Michael Saylor had such an advantage, and he's released so many different products now that are tied to Bitcoin. Metaplanet was a really fascinating example, just given the way that Japan taxed Bitcoin and how kind of difficult it was to buy and trade or hold Bitcoin in Japan. And they just figured out this beautiful way to take advantage of the tax advantages of investing in Japanese stock markets. And I think that's why Metaplanet is so successful. What is the opportunity in Europe? And why are you guys so bullish on your companies? Khing, I think we'll start there.
Yeah, sure. I mean, we're with 450 million Europeans, and the one big benefit of a Bitcoin Treasury company is very easy access. And both goes for individual investors, who just want to buy it in a trading app, or for institutional investors. And both are massive opportunities. For individuals, again, it's also people are new to Bitcoin. It's very easy. You're buying amplified Bitcoin. And for institutions that have many times have restrictions in what they can buy, which venues you can use, it's very, so both are very, very large. I agree with over time, like any industry, size kind of tends to matter. So there will be overall probably a couple of key players in each region. And about competition, I like to think we're all competing with traditional finance more than with each other. That's the most important thing.
Sander, do you want to jump in on that one a little bit, just on the opportunity that you see, just considering it's only been 6 months or so since you guys launched?
I think each market opens up for different types of opportunities. And speaking for the Nordics, we have less bureaucracy. We have a lot of trust in the society. So executing strategies and products is relatively faster in the Nordics. And that, of course, opens up one type of opportunity. But on the other side, I think what we need to spend more time on is the Bitcoin capital markets. What will happen on top of Bitcoin? How can we make the Bitcoin capital markets more efficient? We will see more tokenization projects. Maybe this is the way where Bitcoin treasury companies can collaborate to create one deep global market built on top of Bitcoin. I see that as a mission and something Bitcoin treasury companies should focus on. And then over time, maybe where you're listed will be less important. But to take the Nordics again as an example, 40% of Swedish listed bonds is non-credited, credit rated, which means that the Nordics are very used to investing into products that doesn't necessarily need to be prepared a year ahead. So I would say like each individual market opens up for different opportunities, and therefore it's also very important for the investor to look into the local capital markets to when they do a decision on which Bitcoin treasury company they should invest in.
I just want to gauge the room very quickly to see people's appetites. Does anyone here, I'm not going to say do you own any Bitcoin treasury stocks because I don't want to dox anyone or do that, but are you interested in owning a Bitcoin treasury stock? I'm going to put up my hand because I'll say yes. Okay, there's quite a few people. Are you interested in owning Bitcoin in a self-custodial way? Okay, a lot more people. That's teeing me up for the next question. Why would I invest in a Bitcoin treasury company stock versus self-custodying Bitcoin? And I think when you look at it from an institutional perspective, it makes sense for institutions. But for people in the room that could perhaps buy strategy stock on eToro, why should they do it? What are the key metrics? How do they decide what company to put their money into? Khing?
Yeah, I think if you buy a Bitcoin treasury stock, if that company does a good job, if the management team executes well, then that stock should actually outperform Bitcoin. Because it does two things. On the one hand, it uses some leverage on the balance sheet in a smart way. And secondly, it can do something with the Bitcoin at some point. And if you look at strategy itself, I think the numbers from the last report were over the last 5 years, Bitcoin is up 30% per annum, and strategy is up 50% per annum. So that in itself, I think, could be a reason. The other one's obviously easy access, and perhaps it's just it's a form allocation, right? If you're a core Bitcoin holder, then to get a bit of, I guess, amplified Bitcoin exposure, you buy into a Bitcoin treasury company.
Alex?
I would say if most of you are already owning Bitcoin today, it's probably because you like shorting the euro, probably because you believe that the euro is going to zero. Well, the Bitcoin treasury company is a double short. You have the opportunity, to short the euro a first time with Bitcoin, and every time that we raise capital with a form of financial leverage that an individual cannot access, you double short the euro. And when you buy Bitcoin the first time and then you have to wait, well, the Bitcoin treasury company is literally buying Bitcoin for you every day. So when you see at the beginning there is a slight premium that you pay against the Bitcoin, that is the price that you pay for a dedicated team that will work for you every day for their entire life to buy you more Bitcoin for you and your family. So that is really the difference of Bitcoin versus a Bitcoin treasury company. It is not this one or the other. It's this one and the other to maximize the number of Bitcoin over time at the end. So a Bitcoin treasury company, you can also see it as a form of infiltration of global capital markets, and in a way that you will have all the banks that will surrender to you in the future because they will have no choice but to accept your Bitcoin. Because you will be sitting on a pile of capital that is literally the best money on earth and the best collateral on earth, and probably because of all the financialization that is happening, you will have the capacity to not sell your Bitcoin anytime soon because the financial system can provide you with some loans against it to buy your house, and that the stocks you don't have to sell as well because it's capital. One day I had a sovereign wealth fund that asked me the question, and what is the exit strategy? When do I get out? What is the right answer? The answer is never get out. When do you get out of Bitcoin? You don't get out of Bitcoin. Because you don't sell your Bitcoin, because for what will you say it? What a Bitcoin treasury company is literally Bitcoin plus future Bitcoin. It's compound Bitcoin. So a Bitcoin treasury company is really the capacity to expand your ability to buy Bitcoin in the future without having to work for it. So that's a future extension of your past proof of work.
I love that. I love that a lot. Sander, I'm going to ask you to... Yeah, there we go. Let's give him a round of applause. There you go. That's your first orange pill for the morning. Sander, when it comes to the KPIs that Bitcoin treasury companies should be focusing on, a lot of people talk about MNAV. Maybe you can just give us a quick TLDR and what pretty much everyone is focusing on across the board.
I don't think the KPIs has changed or should change. I think we are, what you do when you invest in a Bitcoin treasury company, you invest in a management team that work for you to accumulate as much Bitcoin as possible. And I think Bitcoin per share is still a very good metric. Of course, you will have how much do you get diluted on the other side. But at the end of the day, you will see Bitcoin per share as the main KPI also going forward. When it comes to the MNAV, each low MNAV opens up for a lot of new types of opportunities, new products coming to the market, especially to the more risk-averse investor. So I actually estimate that Bitcoin treasury companies will raise more money at a lower MNAV because that will attract more institutional capital. But on the other side, what's good with Bitcoin treasury companies is that you have tools to monitor and actually capitalize on a high MNAV as well, which opens up for opportunities in every type of cycle in Bitcoin and also more specifically Bitcoin treasury companies.
I've also had the opportunity to chat to a lot of founders of alternative currency, digital asset treasuries, whether it's Ethereum, Solana. The Winklevoss twins invested, directly in treasury, and this week they announced that they're launching a Zcash treasury company. And my question to you guys is that the real competitor in the room now, these alternative cryptocurrency digital asset treasuries, and are they going to try and eat some of your pie?
No.
There we go. That's a very straight answer. Khing, maybe you can elaborate a bit more.
So yeah, look, Bitcoin is a base. Bitcoin is digital gold, and Bitcoin treasury companies are the absolute core of this whole industry we've created, and that's where the growth will be. Obviously, Bitcoin itself is gold 2.0, so there's the upside is tremendous. I think there's a few select currencies, cryptocurrencies that have a real reason to exist. That makes sense in a DAT format, in a treasury format. I think in the last hype cycle summer, we've seen a number that don't really have a reason to exist in this format, or maybe altogether. And we've seen sort of the market respond on that. Zcash is very interesting, where Bitcoin is a hedge against fiat. In a way, Zcash is a hedge against Bitcoin, and certainly the privacy element of it. And again, like anything we were saying before, if you're a core Bitcoin hodler, you have your own stack. If you want a bit of amplified Bitcoin, you buy a bit of any of the treasury companies. And if you feel privacy is an important issue to you, then Zcash is another one, and it's easy access.
Yeah. Alex?
Well, I will have quite a different view. I think that all of our crypto assets have zero reason to exist, except for one. If you still have some, you can buy Bitcoin with it. Yeah. And so the second reason to exist is when we tokenize capital B stock, and you can buy it with digital assets, well, you can sell your crypto assets, buy Bitcoin, and then buy the Bitcoin Treasury company. So I think that is because of the centralization. You cannot have something that is a hedge against a decentralized network that is a centralized network. And you cannot have a decentralized thing that is decentralized without a link to digital, to the real world. And Bitcoin is the only asset on Earth that is backed by 21 nuclear reactors all around the world. And so I don't even know what is a DAT. I don't know. A DAT is something that's been marketed to raise capital from some investors that believe in something that doesn't really exist. What exists is Bitcoin backed by 21 nuclear reactors over the world. What exists is people that are working every day to acquire Bitcoin. And the main use case for different crypto assets other than Bitcoin has always been for the founders to buy more Bitcoin with it. So don't fall into this and at least buy Bitcoin and probably look at Bitcoin Treasury companies.
Well said. Very, very well said. Ladies and gentlemen, we are out of time. Thank you so much for joining us this morning. We've got a jam-packed day ahead, so don't go anywhere. Enjoy Bitcoin Amsterdam. Thank you.
Welcome back to the Bitcoin Magazine News Desk here at Bitcoin Amsterdam 2025, presented by Treasury. I'm joined to my left by Nick Hoffman, head of news at Bitcoin Magazine, Joel Lenz, head of comms at Relay, as well as crypto journalist extraordinaire Christine Lee. And I am Frank Corva, Bitcoin journalist. Joel, I want to go over to you to talk a little bit about happenings at Relay. You've recently gotten a certain license. Please tell us about what that license is and what that means for Relay and maybe the customers you can now serve in Europe.
Sure. So for all the American listeners, we got the European MiCA license, which is basically you get a license in one of the countries, you register, if you're approved, you can branch out to all the countries.
I'm curious, which country did you decide to get licensed
We went
in?
for France, so we went the hard way.
Okay, that is the hard way.
Yeah.
That's it.
Not going to comment further on that, but yeah, we're now able to implement Euro instant payments, higher trading limits, locked-in prices, stuff like that.
And also, I remember speaking with, I think it's your boss, the CEO of Relay, Julian. So there's also, so you're in France. When you get this license, though, automatically now you can serve every member of the EU. Can you serve beyond that, or is it just more EU that you're focused on?
It's currently EU, and we're looking at maybe the UK and then the Middle East.
Okay.
So,
and why did you decide to go the hard way?
Don't ask me. If it were down to me, I would have gone the easy way. Somewhere in Malta.
Let's say, what are the benefits of having gone the hard way? How about that?
I mean, it's like basically the whole regulation was based on the French framework, so that's where they went. It's the strictest one. If we go this way, we're safe for eternity, essentially.
Okay. Do French people like Bitcoin as much as the Dutch people here at Bitcoin Amsterdam 2025?
I think the Dutch people are more on point with Bitcoin.
What makes you feel that way? Yeah.
The color.
The color, right? Yeah. We got orange is kind of the color of the Netherlands. That's a good point. Yeah.
I'm getting this sense of commerce was here. This is where the Dutch East Indies happened.
That's right.
The sex workers want to be regulated here. So there's
keep it spicy
more
here
capitalism, commerce here, and self-sovereignty.
Some people do refer to Amsterdam. It's kind of like the center of the origins of capitalism, right? So the first publicly traded company was the Dutch East India Company, as Christine just mentioned. And we're here talking about the future of money. You really can't beat that. On that note, I think we're actually going to go back to the main stage. We'll be hearing from a gentleman that's talking about a circular economy on an island off the coast of France. And I'll leave it at that. So we're headed back to the main stage. Stick with us. We'll be right back after this.
Und Damen, good morning, ladies and gentlemen. Welcome here to Bitcoin Amsterdam. I'm from the little island of Alderney, which you may know are sister islands, Jersey and Guernsey, that are traditional finance centres. However, we are also a Channel Island, but we are semi-independent. We are part of the bailiwick of Alderney, and we're located 8 miles from France. Why do we think Alderney could be attractive for potential Bitcoin entrepreneurs? We're looking for somebody to take us on this journey. We are self-governing jurisdiction. We're British Crown dependency. But we're in partial fiscal union with our sister island in the Bailiwick of Guernsey. We have an excellent regulatory reputation done by Moneyval, which is the OECD ranking. We're only 8 miles from Europe. Most importantly, we already have an established e-gaming industry which produces a GDP around about 84 million. We have more natural energy resources per capita than Saudi Arabia. More about that in a minute. We are safe and secure and a community living infrastructure with 2,000 residents with direct flights and ferry to UK, Channel Islands and France. So what do we think we can offer the Bitcoin community? Firstly, we're small and stable government, and we have a big appetite to diversify our economy. We have an excellent opportunity to establish a Bitcoin hub of technical expertise. And we have an open canvas for you to match the business lifestyle requirements that we know that you're looking for and have been unable to find without having to travel probably thousands of miles to more remote offshore centres. We also are regulated by the Guernsey Financial Services Commission, and they're open to engage with us and with you about making the regulatory framework more usable for Bitcoin. We have no financial entry requirements for residency or house purchase. So you can come, you can buy a house, you do not have to pay vast fortunes in early buying expensive houses. We're English language based, and we have a unique privileged lifestyle. So we're also very attractive from a tax point of view. No corporation tax, no capital gains tax, no VAT, no inheritance tax, and personal income tax of only 20%. I'm sure you all like that. We also have practically a zero crime rate. As you can see, this made the headlines in our local newspaper when someone stole a flower pot. And so you have no personal security risk, which is a huge expense now in Europe, but people often ignore. And we have, therefore, with that, you have low insurance costs. However, we also have a very interesting aspect. Our island is located in one of the strongest tidal flows in the world. And we are looking to, at some stage, with our exceptional tidal flow, as well as alternative, to link Bitcoin mining with renewable energy. And if you look here, our island has had a little bit of a history of war. And in fact, these Victorian forts are already waiting for somebody to come and maybe set up some kind of Bitcoin community entrepreneur, and also potentially to store Bitcoin mining systems. So we have also obviously a town, and we have residential opportunities, and we're looking to create a community hub which would be perfect for the Bitcoin community. So what are we all here for? Why are we here? We're here to listen, look and learn from you, and to find the right partner, looking for the technical expertise, consultant, partner to take us on the journey from start to finish. So there's an opportunity for somebody here to come and talk to us in the Whale Lounge to let us know whether you're interested in being a partner with us on this journey. We are not Bitcoin specialists. I am from the government of the States of Alderney, but we are here to listen and learn. So you have a perfect opportunity to grow a business in a jurisdiction that you probably have not thought about. So we want to mirror all the success in e-gaming, where we have our own e-gaming commission, and we have professional staff who handle that. And ditto, we've done the same with our renewables as well. So what we're looking to is to extend that to Bitcoin. And we can also offer a test bed for decentralized offshore privacy, preserving Bitcoin technologies. So these are the scope that we're looking for: attracting new Bitcoin businesses to our island, attracting Bitcoin entrepreneurs to the island to catalyze further entrepreneurships, establishment of Bitcoin research, engineering campus, some kind of business park, a potential neobank, public and government Bitcoin education to teach our community all about what you're really about, to dispel some of the skepticisms and rumors, and also a leadership and talent pipeline modeled on the already very successful gambling commission that we have. We also want somebody to help us contribute to a community-driven charter of digital rights, which is more attractive for the Bitcoin community. And we'll be working with our Guernsey Financial Services Commission to ensure the best in class for regulatory oversight. And we will only be working with Bitcoin, no other asset. So what are the potential negatives? Well, as everyone knows, local skepticism is always an issue with Bitcoin, misinformation about Bitcoin, and the availability of finding the necessary expertise, and also the normal physical limitations that come with being on an island. So what we're looking for whoever wants to come on this journey, we're looking for a production of some kind of strategic document, a facilitating value-added meeting between us, the states members, and Bitcoin community leaders. We're also looking for someone who can implement a plan and provide local education in Bitcoin and capacity building, and also to execute that plan with mutual agreement from ourselves as the states of Alderney. So if you want to find out more, you can find us on, if you look, the Guernsey Financial Services Commission has a page now digital. You can look us up in Moneyval. You'll find that we got an excellent report for regulatory. And you can visit the Alderney website, which is visitalderney.com. And we have a States of Alderney Bitcoin page, we're just constructing it. But again, we are not putting anything out because we want to hear what that person's view in how best we can promote the island to suit your community. So basically, we're here to meet you. We've just opened up a digital hub, which is called Open Alderney, www.openalderney.com, and that would be the first point for the beginning of the acorn to build the Bitcoin business. We're an exciting little island. I do believe that we are probably one of the only centres in Europe that's offering this kind of thing. And I think we have a very exciting future together of the two communities. So if you'd like to come and meet us, we'll be around in the Whale Lounge. We'll be here to talk. And my colleague Jeannie Cameron is with us. And we would really welcome your views. As I said, we're here to look, listen, and learn. Thank you very much.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Korva, Bitcoin journalist, joined to my left by Nick Hoffman, head of news at Bitcoin Magazine, Joel Lenz, head of comms at Relay, and Christine Lee, crypto journalist. The price of Bitcoin is at 88,000 euros, not dollars. I think we're at about 103, 104,000 in terms of dollars. Anyway, Bitcoin...
I was just saying that in terms of the US dollar weakening, it's hit a lot of milestones a lot faster than stronger currencies like the euro, like the Swiss franc. And so it's taken a while for stronger currencies to reach the same milestones of the United States.
Appreciate that perspective. Very, very important. We do tend to, especially at Bitcoin Magazine, we're based in the United States, we tend to look at it through that lens. Always good to be in other countries and thinking about it in these sorts of terms. In reference to the speech we just heard about another region of the world, another jurisdiction in the world talking about being friendly to Bitcoin, inviting people to use it as money, to come there for certain tax advantages. We've seen this with El Salvador. We see this with Bitcoin circular economies like Bitcoin Beach or Bitcoin Akazi. I think I have my Bitcoin Akazi shirt on. We got a shout out to Bitcoin Akazi in South Africa. So we're seeing these jurisdictions, whether they're towns or villages, pop up around the world, or countries even that are becoming more friendly to Bitcoin. Does this trend only accelerate? I'll go over to you first, Gilles.
I would say so, yeah. The more it gets adopted, the more people see the benefit of it, the more they want to use it.
Yeah, Nick, are other jurisdictions around the world taking note of something like that, a talk like that, saying, hey, maybe we really need to think our strategy and try to invite more Bitcoiners in?
I'd say so. I mean, just 2 years ago here at the Bitcoin Amsterdam conference, we had the president of Madeira, which is a jurisdiction off Portugal, announced pretty much the same thing, that they were interested in Bitcoin and they were going to be adopting it or, start researching into it. I think it's a trend that's going to be getting even bigger. I remember at the Bitcoin 2022 conference in Miami, Samson Mao had a few jurisdictions that he was announcing that was also getting into Bitcoin. So I think whenever I see news like this, I just think Bitcoin is a grassroots movement. It starts really small. The more adoption we get, it just sets a better foundation for bigger countries.
Also famously at Bitcoin Miami was the president of El Salvador who announced that he was going to be making Bitcoin a
legal tender
yeah,
right,
in the country. And so we're seeing this continuing on from Bitcoin conference to Bitcoin conference.
Yeah.
But also if you are a country that is landlocked or needs some economic development, but I understand that we need to wrap because we're going to have another conversation at another stage.
We are going back to the main stage, ladies and gentlemen, to hear about upgrading your personal values as a result of embracing Bitcoin. Let's head back to the Treasury stage. Stick with us. We'll be right back after this. I have no...
Yeah, I always enjoy conversations, so it's great to be sharing a stage with you today. I think you mentioned time preference. I think, and when it comes to values and upgrading values, I think one of the main points is not necessarily a Bitcoin-specific thing, but rather what happens when you are on a hard money standard as opposed to a discretionary, centrally planned fiat standard, and what are the repercussions of being on one or the other. And so, I mean, centrally planned fiat is basically at the core of consumerism. And so when you are on that kind of a standard, you see the fruits of that all around you. For example, in architecture, you have planned obsolescence where buildings are built not to withstand centuries, but rather just a few years until they are redundant. You see its implications in the quality of our food and just the destruction of the environment from overconsumption. So I think the first thing is with respect to time preference. So when you are on a hard money standard, then you're incentivized to save for the future, not overconsume, not lever up in order to consume today because, the value of your money is going to fall in the future, but rather you're incentivized to delay gratification because if you delayed the gratification, it's going to be better gratification in the future because your money is worth more and you can buy more with that money. So I think, to your point, that's probably the first and probably the most important value that comes out of being on a hard money standard.
Yeah. What I also really enjoy is that it invites you to build, right? Like what you're saying is that when your reward is denominated in fiat money, you're not really incentivized to save that, right? Like in order to create something in the future, something big or something adventurous, like building something or maybe starting a family or moving somewhere or buying a home, right? Whatever your long-term goal is. If you already know that the capital that you're saving for that is going to lose value over time, you're also not really incentivized or motivated to do that. And also I think you cannot really create time and space to actually try something and fail, right? But if you are on a hard money standard and you know that your capital is growing in purchasing power over time, you can actually take the time and space and the risk to try something big, and then it's actually okay if you fail. And so in a weird way, I also feel that a hard money standard would actually kind of introduce what in my mind would be capitalism, as in like people can actually try different things and are also actually allowed at failing at their attempts, and that would be all okay, and it would actually help them to find their purpose in life, or like what they are actually good at with regard to delivering value.
Yeah, I agree with that. Maybe the next thing we talked about was authenticity and how Bitcoin brings that out in people. And when I wrote Principles of Bitcoin, one of the things I spent a lot of time thinking about, because I'm from the traditional financial world, I spent 11 years at Goldman Sachs. That's very much my space. I'm a lawyer, Wall Street lawyer, and all of that. And then I came into Bitcoin. So one thing I spent a lot of time thinking about was, why is Bitcoin so hard for people to understand? And I think one of the main reasons for that is just people are quite arrogant. People are quite lazy also to put in the work and try to understand something as complex as Bitcoin, but they're also very arrogant. They come from a place, if you've had a very successful career on Wall Street and you've made tens of millions of dollars, and someone comes along and tells you you've missed the greatest investment opportunity of a lifetime, you're going to react defensively to that, and you're not going to be open to that. So what Bitcoin kind of encourages is open-mindedness, curiosity. It's for people who are intellectually humble and open-minded. And it is, in many ways, this historic transfer of wealth from the people who are resistant to change or just very intellectually arrogant, to the curious and the open-minded and those who are open to new technologies and new ideas, and also open to the idea that maybe you missed something and maybe you're wrong about something. And so from that, I think, comes authenticity, which is something you see, I think, in this space quite a lot.
Yeah, I find it so interesting that change is never ending, right? Like there is always change, and people are very apprehensive towards change. They kind of like dismiss it, but sometimes I hear that, or when I'm in my Twitter X discussions with some critics, they say like Bitcoin is a cult, right? These people all have this same idea towards the future. They're crazy because they see this reality not as I see it. And my standard reply now is, if Bitcoin was a cult, it would be the only cult in the world that would invite its members to not trust other people and think for themselves, right? Like use your own mind. That's the whole point. And I think this is also why adoption is sometimes slower than what we want, because, when you have figured it out and are like, okay, I want to store my time and energy in money that cannot be debased, why aren't other people choosing for that? But I agree with you. It's change is just hard, and you have to, kind of like I always say, like take a little red pill before you take the orange pill. Like you have to come to terms with the fact that, you don't really understand how money works, that you never really thought about that, even when you are a certain type of professional or you have a successful career. At one point, I just realized, I'm a subject in this system rather than an actor, although I was doing all these different types of things. And that really stuck with me. Like I felt like an idiot for not realizing that. And I think you need certain triggers along the way that kind of like, open your mind to that. And eventually, one of the principles of Bitcoin, I think, is also that, don't trust, verify. Like you can listen to other people, you can listen to podcasts, right? But the message is always study Bitcoin and not buy Bitcoin, right? Like you have to figure it out for yourself.
Yeah, absolutely. And coming back to your first point, I think it's also about when you talk about time preference and so on. It's you learn what is of real value in life, because again, if you're not on that hamster wheel trying to spend in order to, keep the wheel spinning, at all costs, and you spend money, bridges to nowhere kind of thing, you introduce in your life what people call the Bitcoin hurdle rate, right? So you don't invest in things that produce a lower return than Bitcoin is returning, and that just broadly, creates better value in society and conscious consumption along the way. And you and I talked about Bitcoin's impact on violence as well, and wars, by virtue of the dematerialization of wealth. What are your thoughts on that? I mean, that's...
Yeah, I think that is an idea that is still quite out there, right? I like the the comparisons that Saifedean Ammous does in his books about like two standing armies that have a limited amount of men, a limited amount of supplies, a limited amount of funds, right? And at one point when one side seems to be winning, the other side would, come to them and propose like a truce or a certain agreement, because they just had a limited amount of resources that they could literally physically spend on whatever their objective was, right? And fiat money has totally distorted that. Like there is no limit, and there's basically moral hazard everywhere, right? There is no one that is basically forcing themselves to have a certain type of financial austerity, to also have a limit to the attempts that they're doing in order to reach whatever the goals are, right? And so that's what I really like on a personal level, is that it makes you way more aware of what you're doing in order to create value, if that's working or not. And then when you get value in return, right, when you get rewarded for whatever you put out there, you are more responsible about how you save and how you spend it. And I think value is a really interesting word in that sense. Like spending money is also an expression of value, right? Like you show or say what you deem valuable. And I think if people have that Bitcoin appreciation as a hurdle rate for themselves, right, they're just going to be way more conscious about what they're spending the wealth on that they've acquired. And I know you're big on the consumerism thing, like that. I think would combat that as well. And I think it would also bring back like these old, like things that people were proud of in the past. I once told you that a few months ago I was in Belgium at a building that was built in like 1572 or something. And I was standing in front of it and I was just thinking like, wow, like what has been built in my lifetime that will stand for 500 years? And how would the people feel that actually worked on it, that what they put their time and energy into is actually still something that exists today and that other people can see, right? Like I think these things are something that we've kind of forgotten in 2025.
Yeah. So I think, I mean, on the, if you think about through history, virtually all human conflict, all wars have been fought to acquire or defend physical property. Right, the course of history and civilization has been shaped by wars that have been just either defending land, gold, other physical wealth, or trying to acquire it. So what are the implications when wealth is completely dematerialized? And all you rely on is cryptography. You don't need warships and fighter jets and nuclear weapons. You just rely on SHA-256 or whatever quantum-resistant cryptography to secure millions, billions, trillions of dollars, someday. So the return on your, I think Trace Mayer said this. I remember hearing him talk about it in 2015 or so. The return on your investment in violence is rapidly diminishing because you're not going to get very much. There's nothing to acquire. There's nothing physical to acquire anymore if it is all just dematerialized and you can walk across borders with nothing but the shirt on your back and carry millions of dollars with you, right? And that's incredibly revolutionary. And so then what does that do to society if you're not investing in violence and armies and so on? The only way to acquire wealth is actually by offering you value and getting Bitcoin in return. And you know, that's pretty revolutionary. And in terms of upgrading your values, I mean, that's the, you know, kind of right at the heart of it.
Yeah. I see we have a minute left, but we have one more thing to share. Is we often talked about like how Bitcoin is a mirror, and I think we both have two different ways of talking about that. I'll share my point of view. I see Bitcoin really as like a parallel system for money, and all the characteristics of Bitcoin are the total opposite of the characteristics of fiat money. And Bitcoin forces you to be transparent, it forces you to deliver value, it forces you to think on a long time frame, and also to think for yourself and be a critical thinker. And I think if we as Bitcoiners keep on doing this and keep on showing it, people will eventually come to Bitcoin because they know that we've upgraded our lives through Bitcoin.
Yeah, I think it's a mirror in that it shows you, you know, sort of, how open-minded you are and how honest, how intellectually honest you are, and if sort of, you know, everyone buys Bitcoin at the price they deserve, you know, as they say. So it's, I think it does kind of show you who you are, and it makes you, it keeps you honest. Yeah.
Awesome. Thanks, man. Cheers.
Thanks.
Thank you.
Thanks.
Welcome back to the Bitcoin Magazine News Desk here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Korva, Bitcoin journalist, joined to my left by Nick Hoffman, head of news at Bitcoin Magazine, as well as Win Ong of the Human Rights Foundation, and Christine Lee, crypto journalist. Win, I want to go right over to you. You have an incredible story of how Bitcoin was the only asset you were able to take with you, or some other crypto assets as well, when you had to flee your home country of Myanmar. You had to leave because of political violence that was happening in your country, and you now do work with people around the world who have a similar story like you, who use Bitcoin as a means, whether they're an activist or they're fleeing their homeland, they use it with this very sort of human rights-centric focus. Can you speak a little bit more to this for us?
Definitely, because I was born in Burma, and also known as Myanmar, and it happened 4 years ago, and I got into the Bitcoin cryptocurrency in 2019 because I was working so hard, and I knew that I was not able to save it. And we don't have a stock market, we don't have access to buy Tesla stock or Facebook stock, anything like that. And the only thing is, something, either you buy gold or save in fiat currency. Obviously, nobody's going to do that. Or, buying a real estate. But the problem is not like in America, we don't have a 30-year mortgage. So the only way is Bitcoin and cryptocurrency. That's like what I discovered from the issue. And in 2021, I was an activist and, fight against a Burmese military junta. And obviously, they have access to freeze your bank account. And I lost almost everything. I saved in the fiat bank account. But I was able to flee with Bitcoin and some other cryptocurrency at that time because obviously they cannot overreach all my, Bitcoin cryptocurrency. It is in the cyberspace.
They can't gain access to it because we hold the private keys to it, right? So self-sovereignty, super, super important. Nick, your thoughts on this? We cover a lot of what HRF does, right? We're constantly sort of highlighting the awards they're giving out. We have to head back to the main stage in about 15 seconds, but sort of maybe just a quick comment on the synergy between Bitcoin Magazine and HRF.
Yeah, I mean, the HRF has done a fantastic job. They've provided more than $9.6 million in Bitcoin to over 319 projects across 62 countries. since launching their Bitcoin development fund in 2020. So they've been doing fantastic work.
We appreciate that, Nick. Appreciate that statistics. We got a researcher over here. This is great stuff. Anyway, ladies and gentlemen, we're heading back to the main stage for an announcement from Mick, the CEO of Geyser Fund, a fundraising platform using Bitcoin. We'll be right back after this.
Through you. You guys are the crowds, and if the crowds self-organize, we can actually make things happen. So the goal of the presentation is really to show you the power of crowdfunding, the history of it, and the innovation that is happening around it, thanks to different layers of Bitcoin. So let's get started. So first of all, for those of you who don't know, crowdfunding is really people coming together to make things happen in the exchange of recognition and products rewards. So we're not talking about equity here. We're talking about Bitcoiners coming together and funding things that are in our collective interest. So I'll just show you a few things here. This is the timeline. And what you see is that crowdfunding has been around for a long time. Geyser has not innovated crowdfunding or invented it. It's been around for millennia, really. From the Romans to the Greeks, we used to build temples, just people funding things without asking for permission from the government, just building things, right? No, the government is not the only one building roads. We build a lot of public works just through our own collective engagements. It actually, in the Greek term of the word, it used to be the act of benefactors donating their city of the construction temples, public works, and festivities. It's really all sorts of things were built through this powerful thing called crowdfunding. So we have Alexander Pope, who also did crowdfunding. Earlier you go in history and more, actually, it's like big donors making important financial sort of contributions to these things. Alexander Pope was able to crowdfund the translation of Homer's Iliad into English from Latin, one of the first times this happened. And it was, as a reward, he put the names of all the benefactors on one of the first pages of the book, right? And so this was made possible, this cultural evolution was made possible through the crowds, but at the time, actually, it was mostly more noblemen, richer people that contributed. You then have Pulitzer, and this is interesting because this really talks about the crowd. This is where the entire American population came together to fund the base of the Statue of Liberty. So you had 120,000 contributors donating what at the time was $3.3 million towards the base of the Statue of Liberty, which was a donation from France to the United States. No base, no statue, right? So thanks to the people, something this important was made possible. And they gave access to a small replica of the statue, and also, importantly, recognized the funders in the front page of the New York World newspaper at the time. So again, recognition is incredibly powerful, and again, showcases the power of our collective coming together to fund important things that matter. And then came the internet, and the internet changed everything across all sorts of different industries. In 2004, 2006, you have the emergence of social media, and then off the back of that, you had the crowdfunding platform Indiegogo, Kickstarter, and GoFundMe emerge as platforms that enable the crowds online this time to fund important things that matter. The problem was that while social media is global and anyone can access it, the payment systems are still, even today, outdated, right? So PayPal, Stripe, they all access only 30 to 50 countries. And so that really puts the power of the crowds, to the bottom. And then came Bitcoin, right? Bitcoin fixes this. And you've actually had an evolution of crowdfunding even in the Bitcoin space. You had Lighthouse that emerged, and then also Tallycoin off the back of the Bitcoin main layer. And then came Lightning in 2018, but really developed around 2021. And that's where Geyser was born, because we saw the power of Lightning as a really powerful tool to really becoming the main payment layer of the internet. And so Geyser is Lightning native, built on Bitcoin, of course. And then more recently, we have the emergence of Rootstock and smart contracts and their bridges as well, more recently, that makes all sorts of new interesting things possible. So let's talk about that. Geyser was all about donations, products, and now we built out the all-or-nothing crowdfunding model, which is what Kickstarter was doing. And what it does is that you send funds toward an initiative, and the funds get locked until the goal is reached. If the goal is reached, it goes to the main ideator, the creator of the project. If the goal is not reached, the funds go back to the funders. And that is incredibly powerful, especially for things that have a prototype. If you have a high upfront cost and you're not going to be able to make it happen without that large amount, it doesn't create that awkwardness. And really, it's all about aligning incentives. Creators are incentivized to launch projects because they can now get the money only if they reach that goal that they need to make that idea happen. Contributors are not like, oh, I'm not sure if that really is going to happen, if it's going to raise enough money. Well, all or nothing fixes that. And finally, also through Geyser. Geyser does not monetize unless the goal is reached. And that's really important. We only make money. So the three alignments of incentives are really what makes this happen. And the product position of Geyser and Bitcoin is that we really slash the fees. The mainstream platform, the fiat platforms, have like 8 to 15%, and we have a low 5% fixed fee. And then obviously this is global, so anyone can access this. And so if you look at the product proposition, of all these different layers of Bitcoin, you have mining secures the network. Buying and selling Bitcoin enables people to join the Bitcoin network. Lending is a way, collateral Bitcoin is a way to use your Bitcoin to spend in the fiat world. And Geyser and crowdfunding, what we believe is that we want to build the Bitcoin economy. We want to build people using and spending their Bitcoin in the real world. And so we're creating, and there's thousands of creators on Geyser that are selling products, that are funding ideas, and it's all on Bitcoin. And that's what we see Bitcoin as the new money. And so we believe that this really adds to the power of this vision of kickstarting the Bitcoin economy through education, culture, and art. So far, all sorts of projects have launched on Geyser. You have Rattel, but I'll talk about quickly No Good, which is probably a lot of you know. Thomas, a Dutch artist, also launched a book on Geyser. This would be even more powerful right now on All or Nothing. You have Bitcoin books, video games launched. Again, really, really powerful stuff through All or Nothing that can be done now. Hardware, Bitcoin ATM machines, new wallet types, seed hammer engraving your seed phrases, all funded through the community. And this is how it works technically, right? It just uses Rootstock. It's entirely Bitcoin. Like, you don't need to know anything about the smart contracts. It just works. You just use Bitcoin. You just spend your Bitcoin on chain on Lightning, and it just works. You don't have to know about the complexity. It's also importantly non-custodial, so we never custody the funds. And so you can check the open source code. You can just scan this code, and you can actually build on this all or nothing contract on your own. You can fork it. You can do your own things. Shout out to the Rootstock guys for supporting us in actually building out the smart contract layers and making it open source. And there you go, guys. We've launched, so really excited to see projects launch in December, and then it'll be open for everyone to use in January. So if you scan this code or go to Geyser, you can register your interest, drop your email, drop your idea. And really going back to the beginning, this is all about you guys and us, right? Organizing, self-organizing to make important things happen. Bitcoin adoption, change will not happen unless we can organize. And now through Bitcoin, there is no limits. Us as people in collective humanity can really make things happen through funding and self-organization. So I'll leave it to you guys to change the world. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined to my left by Nick Hoffman, head of news at Bitcoin Magazine. To his left, the one and only Susie Violet Ward, CEO of Bitcoin Policy UK, as well as host of the Roxham TV show My Two Sats. She also does a lot of other things. We'll get into that in just a second, though. And Christine Lee, crypto journalist. Susie, I'm going right over to you. Is the end of the world coming to the UK right now? We're hearing all this about digital ID. We're hearing about unfriendliness to Bitcoin. Fill us in. What's happening politically as far as Bitcoin and privacy in the UK?
Oh, good grief. I don't know if I can unpack that in a couple of minutes.
Just in 3 minutes, please. Give us all of that. Yes.
Privacy is definitely under attack in the UK. We've got the online safety bill, which is just creating backdoors for encryption. I mean, they seem to think that if you create a backdoor to encryption, that bad guys are not going to exploit it, that it will just be the good guys that do, which is utterly ridiculous. They brought in recently about digital IDs. That was not part of their manifesto. No one wanted it. In actual fact, that was, I think, the second largest petition that we've ever had in the UK was against
what entity, government officials that is driving this kind of path forward? Okay.
Yeah.
Labour, did you say there?
Labour, and they're
Party.
very, very unpopular.
And I'm, as an American/Canadian, not familiar with UK politics, so maybe you could kind of
is Labour,
give us a...
Is it maybe comparable to the Democratic Party in the US, like more to the left politically?
So, yeah,
okay.
Left, but... they're all blending now, aren't they? There is no left and right.
The uniparty, if you will, yes.
And also I think that the terms left and right are just inherently unuseful terms. I think we need to actually start redefining it as authoritarianism and libertarianism, because I just don't think left and right is useful.
Does this come from a lack of education or an understanding of the technology and the nuances, or is it from legacy traditional institutions trying to insert themselves and try not to make decentralization the status quo?
So I would love it if they understood it well enough to want to fight against that, but they just don't. I think it comes down to a lack of education, but also the mainstream media, because they have just pumped out a lot of mis and disinformation about Bitcoin, and I think that it has been deliberate sometimes, and sometimes it's incompetence, but unfortunately our politicians do actually read those newspapers and form their opinions based on that. So if you've got a whole group of people forming policy based off the narratives that they're reading in misinformed mainstream media articles, you're pretty screwed.
And I want to, before we head back to the main stage, just say thank you for trying to do this education.
Yeah.
That is very important. Susie is trying to take the UK from regressing back to 1984. We're here at Bitcoin Amsterdam 2025, and we are heading back to the main stage to hear more about art and Bitcoin as a cultural revolution. Don't go anywhere. We'll be right back here after this.
So, good morning everyone, and welcome to our panel, Painting the Orange Pill, Art and Bitcoin as Cultural Revolution. My name is Stephen Reis. I'm an art historian and cultural researcher, and I come from an academic background. I've taught at a university, worked at research projects and curated multiple exhibitions, and over the past few years I've also begun advising corporate collections and private collectors on building and managing collections, and now in the last few months or years also with a focus on Bitcoin and Bitcoin art and the cultural movements around it. So my own research is mainly about Bitcoin and is evolving as beyond a financial and a technical system, so to say, how it's becoming a medium of meaning and a new kind of cultural infrastructure. And with me today are two people who approach that from a different but also from a complementary angle. So first one is Brandon Bailey, who works in corporate development at Nakamoto. Formerly he has co-founded Second Gate and was VP at mining at Galaxy Digital, covering research and special projects, right? And I think he's one of the figures that's exploring the Bitcoin culture and how it connects corporate and institutions to it. And the second one on stage with me is Michael. He's one of the members of Smashtoshi, which just launched the History of Bitcoin project. That's a collaboration with 128 artists and more than 100 writers, turning the Bitcoin history into a form of a living archive. And together we will explore a bit about art and archives and institutions and how they are building or how they are changing Bitcoin's cultural identity, I think. Maybe we can talk about painting the orange pill, what this actually means and describes. So for me, personally, it's less about turning Bitcoin into art and more about realizing that Bitcoin itself has become a form of medium for culture. And I'm not just speaking about or specifically about on-chain stuff, but about a broader cultural awareness. And I think this is something where Bitcoin shapes images, symbols, and so on. And I think to start with you, Michael, your History of Bitcoin project visualizes key moments of Bitcoin's history through art. Why was it important for you not just to write about the history of Bitcoin, but visualize it with those many artists?
Yes, thank you very much. So I think art has a way of teaching people when words often don't. I think Bitcoin in particular can be quite intimidating for a new crowd, and art has a way of dumbing things down and appealing to a new crowd, and certainly has a way of visualizing quite kind of technical things as well. So obviously, I feel like art is a great gateway into Bitcoin, because when you can see an artwork, have a feeling with it, that might be and the emotions you feel, then that might be kind of the next step in you taking your journey and kind of going down the rabbit hole of finding out what Bitcoin's about.
And what do you think? What role do artists and cultural researchers bring in shaping how Bitcoin will be remembered in, let's say, 20 years or so?
Yeah, well, when you think about it, most people were illiterate for human history, so that's the way that people used to learn, through visuals, and then often the history can be written by certain individuals, and in Bitcoin we might have financial journalists writing the history. And I think it's therefore very important that artists can kind of come along and show their interpretation of Bitcoin, and really kind of the feeling, the emotion, the soul around it that maybe a financial journalist might not be able to articulate.
Okay. And Brandon, we actually first met in Amsterdam 2 years ago, and I remember back then you're working on some thoughtful analysis about ordinals and inscriptions, and your research looked at the whole topic not just from a technical perspective or financial perspective, but also from a cultural perspective. And I really liked that a lot, because it reminded me of how the traditional art world studies itself, with annual reports like the Art Basel and UBS report that analyzes or identifies the collectors and also the pricing and also the trends that's happening right now. Today you're at Nakamoto, and you're working exactly where Bitcoin and corporates and institutions interact. From that perspective, what do you think companies or collectors, or why do you think companies and collectors are starting to interact with Bitcoin, not just in a financial way, but also from the cultural and artistic angle?
Yeah, I think it's a great question. I think
what is really sort of piquing the interest of institutions and individual collectors is sort of this opportunity to express themselves. So I think art is a great way to kind of tell a story or express sort of a sense of identity. I think that while we're all Bitcoiners in this room, I think that Bitcoiners as a whole are a very diverse group of people. We've all come to Bitcoin for various reasons. Some of us have approached Bitcoin through a more technical lens, others from a more idealistic lens or for various reasons. And so I think art allows us to be able to express, why we're so passionate about Bitcoin, what it means to us, the type of Bitcoiner we are. If you're a Bitcoin miner or if you are a developer, there's ways that you can represent that through collectibles or through various types of art.
Perfect. And in our preparation call, you've said that art makes Bitcoin approachable for new audiences. What kind of people do you think could be interested in Bitcoin through art and who might not otherwise could be interested in Bitcoin itself?
Yeah, I think the biggest thing about art is that it really is sort of a universal language. It allows you to basically meet people where they're at. It allows you to have a conversation about a very technical topic in the case of Bitcoin in a way that feels familiar and comfortable with people. I think everyone can appreciate art, and more or less in some respect. And for many, many people, and I think Michael hit the nail on the head with this, like Bitcoin is a very technical thing and can be very, very hard to grasp. It requires an understanding of multiple disciplines to be able to fully grok it. And I think that art allows us to be able to have a conversation about some of the principles behind Bitcoin that really drive it in a way that is much more approachable. And the only other thing I would add here is that despite our love for Bitcoin in this room, I think Bitcoin still carries a lot of stigmas or negative biases with people more broadly outside of the community. And so I think art is a way to kind of open a door to a broader conversation to kind of overcome some of those biases that people may have about it.
Yeah, thanks. And do you think could Bitcoin culture and Bitcoin art eventually become something that treasury companies, for example, or other Bitcoin companies, that they express their mission like the banks did in the mid-20th century, like Goldman Sachs or Deutsche Bank and so on, and also high-profile private collectors did then. So to shape art and the culture around it, and also the medium they're expressing.
Yeah, I would say from an institutional perspective, I think that there's incredibly strong alignment with respect to, with respect to how, for example, a Bitcoin treasury company views its mission, which is to basically just further the adoption of Bitcoin, particularly on corporate balance sheets. And one of the primary ways that treasury companies are trying to do that, and you see it a lot with Michael Saylor, is trying to articulate why Bitcoin is important, right? It's all about educating the broader audience or traditional finance, Wall Street, what have you, governments, about why Bitcoin is important, why we should value this technology, why decentralization is important. And I think with art, there's really, really strong narrative and brand alignment with that mission. And art, again, just becomes another opportunity to make these exact same points, but in a way that could be maybe a little bit more digestible. It's really, really hard to explain something like why proof of work is important to a senator or a congressman or someone that just doesn't understand that background. But you can use art and history to articulate what has happened in the past and what could have been done differently with respect to adhering to certain principles that Bitcoin is trying to instill.
Yeah, thanks. So, in coming back to some of my writings, I think now, because I've often returned to this idea of a cultural revolution that happens as soon as somebody understands or uses technology itself as the kind of medium for cultural adoption. So, in my one of my last articles for Bitcoin magazine, I wrote about avant-garde and Bitcoin, and I compare Bitcoin ideas to avant-garde movements of the early and mid 20th century. So, to those groups that try to decentralize art and ideas, and also break free from institutions that controlled those movements. And I mean, in many ways, Bitcoin does the same, right? It turns money into something that produces meaning via its own structure. So, like the avant-gardes did it before. Bitcoin experiments with time and autonomy and material itself. And so my thesis is that Bitcoin art was long there before Bitcoin was there, because the cultural ideas and philosophical ideas of those movements are dated back to the early 20th century. So, and since we are talking also about the companies, in another article I wrote, I talked about how Bitcoin and Bitcoin art could be bought by treasury companies and to establish some kind of corporate collection, like companies like Nakamoto or Strategy or MetaPlanet or whatever. And all of those might follow a similar path that banks, as I already mentioned, like UBS and Deutsche Bank and Goldman Sachs did before, to shape a new movement, a new meaning in this culture itself. So, coming back to Michael with this, if Bitcoin art reflects both the avant-garde and the institutions, are we witnessing something genuine cultural revolution, or is this more like the beginning of an establishment? And your project, History of Bitcoin, archives all of this that happens right as it happens, or a bit after it. But do you see it more as a documentation or as a myth building that could shape the narrative for future generations and how Bitcoin will be remembered by them?
Yeah, well, it's really important to remember we're so early. It's just, we're not even 20 years in. So it'd be really interesting in 100 years' time how people look back at today, whether they just see it as the super early stuff. So, yeah, I mean, the art needs to be factual, of course. So all the artists that were involved in our project, they spent a lot of time reading the research, and it was their opportunity to have a look at that particular moment in time and, use their artistic lens on it. Wasn't supposed to be a comic book of the history as well. It's an opportunity for each artist to take a moment, and then for the viewers to look at that moment and really kind of feel, what was trying to be articulated. And so, yeah, I hope in like 100 years' time, people will kind of look back on the early history and look at some of the early artworks and know kind of what was going on. Things like Alex Schaefer's burning of the banks, you just look at that and you struggle to sort of not have an emotion to what that kind of means. But then it can also be fun stuff, even like the magic internet money meme of 2013 and the Reddit adverts. How many people that actually are kind of orange-pilled into Bitcoin. So, it doesn't always have to be like super high-quality stuff. It can also just be fun meme stuff as well. So, yeah.
Okay, thanks. And Brandon, from your side, if you see Bitcoin as a form of an avant-garde movement, can institutions really be part of such an avant-garde movement, or are they sometimes back behind? And also, if those companies would like to integrate art into their collections or starting such collections, do you think there is something missing, like recognition, or more like a structural thing of the whole part?
Yeah, I think it's a really interesting question. I think there's an opportunity for there to be a little bit of a balance of both. When I think about treasury companies specifically, I think the way that many of them view themselves is as pioneers. And I think that what they really want to be is stewards, right? They want to be excellent stewards of Bitcoin culture. And I could see certain institutions taking a lead on furthering that, right? So I could see certain Bitcoin companies. It doesn't necessarily have to be treasury companies exclusively, but what it could look like is providing opportunities for exhibition or providing space for exhibitions, supporting different curatorial events, supporting archival work of Bitcoin culture. And I think that those are some of the ways that some of the institutions could help lead this cultural shift. But from a collector standpoint, I think that there's a tremendous opportunity for regular people to have an opportunity to collect a lot of what could ultimately become some of the most prominent works as it relates to Bitcoin culture. And I think a great example of that is just looking at the galleries that exist even in a conference like this today, where you have those opportunities to go speak directly with artists, get to build and foster a relationship with them, get to ask them about their work, get to understand their story, and even have an opportunity to bid or buy those works. Whereas in the traditional art space, normally you have to go through a gallery and there's this sense of having to be the right sort of collector. There's significantly more gatekeepers that exist in the traditional art world where that does not exist today for both off-chain and on-chain art, which I think presents a pretty interesting opportunity for people.
Thanks. Michael, do you have something in mind for this, like what's missing, recognition or more something structural?
I think for the institutions to buy, they're going to need to see some big auction sales and know that what they're buying is going to go up in value. You know, maybe that's the kind of sad thing about the institutions buying artwork. Individuals buy it because they like something and want to put it on their walls, whereas the institutions are buying it as an investment. So you're starting to see some Bitcoin art in the auction houses. You have Robert Alice who's going to be at Sotheby's, I think next week, alongside Warhol's and Damien Hirst. I think the estimate on that piece is like $800,000. So I think it's actually a really good moment in the history of Bitcoin art. And so yeah, when they start to see sales like that and start to see it going up in value, they'll kind of see it as a new asset class.
Okay, thanks. And maybe to wrap this up, because time is running, I think we talk often about developers, miners, economists, and financial infrastructure, but I think what we're sometimes missing is that every technological revolution also needs people that are, who can read those cultural signals, because culture needs interpretation. And so painting the orange pill is maybe really about shaping that shared money so that the present and future generations understand why Bitcoin is important for us and also for our society. Yeah, thanks.
Bitcoin Magazine News Desk. We're here at Bitcoin 2025, presented by Treasury. Vibes are high. Bitcoin's price is high, relatively speaking. Not quite at all-time highs, but we're doing pretty well. We're hanging in above 100K US dollars.
There's a buy wall being set up at at 99,000, so we have, not broken that line.
She is the buy wall. We have a whale at the desk with us. She is setting up the buy wall. That's beautiful. We appreciate that.
The ship. Yes.
She does this for fun. This does not work for her. She's just a Bitcoin whale. To my left, we have Nick Hoffman, head of news at Bitcoin Magazine, Susie Violet Ward, CEO of Bitcoin Policy UK, and host of the My Two Stats show on Roxham, and Christine Lee, Bitcoin whale. So we're back here. We were just talking about Susie off off camera, we were talking about other payment processors. So a little bit about Bitcoin as money, how that compares to other payment processors that, let's just say, you're not as fond of. So maybe in so many words, if you'd like to tell us a little bit more about what you were sharing off camera, that'd be fantastic.
In a diplomatic way, okay. Yes. Yeah, so it's very important that Bitcoin becomes a medium of exchange. I think that the store of value treasury companies, I know obviously like where we are and stuff, that treasury companies are becoming a big thing, but really Bitcoin's value lies in the self-custody, being able to look after it yourself and being able to use it as a medium of exchange. And so I've been going to quite a few... I went to the Labour Party conference, and then I went to the Texas Bankers Association, APPG, which is an all-party parliamentary group, where we go and talk to people in the industry about Bitcoin and what's happening. And Visa always seems to be at these events, and you know, they're talking to a small audience. It's not like they're writing it down and letting people know. But a few key things that have come out for me when Visa have been speaking that has really concerned me is they want to link IDs with payments. They've said that out loud. And when I went to the Texas Banking Association at Chatham House the other day, they talked about the fact that they're working on programmable money and smart contracts. And I think the one phrase that they used, which terrified me, is that they want it, and they're very much focused on stable coins as well, that they want it to be a trusted and controlled experience.
A trusted and controlled experience. Christine, when you hear these words, what do you think?
Well, this is what I was asking you about, what was going on in the UK, because I've been hearing a lot about digital identity and, you know, what's happening with the education with government officials. Are they getting educated? Do they understand that the advantages and the benefits of decentralization? Or are institutions from the legacy system entering the conversation and trying to derail that innovation in that direction? And so I suppose in this case, you're definitely seeing a legacy institution like Visa that wants to keep the status quo, wants to keep the control around the world versus the proliferation of decentralization, people having self-sovereignty. So, you know, on the flip side, is there someone like you or other strong lobbies that are trying to advocate for decentralization?
I want to actually put a pin in that. We're going to come back to strong lobbies. And I want you thinking about that out there as well. To everybody who's tuning in through YouTube, Rumble, and X, thank you. Hit that like and subscribe button. We're headed back over to the main stage to hear about how Bitcoin is being used as money for crowdfunding via Geyser. Stick with us. We'll be right back after this talk.
On that previous panel a little bit and talk about the symbolism and design language of Bitcoin. I don't think this topic is analyzed enough, but I think it's critical. Too often we're caught up in the charts, the debates, and the technical details. We forget that design is the interface between Bitcoin and culture, whether it's the branding, the products we build, or even the events that we attend. Design is how Bitcoin meets culture. So I've spent over a decade working on full-time on Bitcoin design, and in that time, I've built some of the most recognizable brands in the space, designed the world's largest Bitcoin conference, had a front row seat as Bitcoin went from a fringe experiment to a global cultural revolution. And like all great revolutions, I've seen Bitcoin develop its own set of symbols, its own cultural identity, and even its own shared mythology. Today, the Bitcoin brand is everywhere. Millions have embraced it. Billions have at least heard of it, but it wasn't always that way. To understand how we got here, we got to look back to where it all began. With the cypherpunks. And I have a huge amount of respect for the cypherpunks. They defended cryptography, privacy, and freedom to write code long before it was popular. But when it came to branding, UI, and design, let's just say they weren't exactly fans. In the cypherpunk world, text was their interface, code was their culture, and mathematics was the message. The goal was logic, not aesthetics. To them, symbols and brands were tools wielded by corporations, states, and institutions to sway and influence the general public, exactly what they were fighting against. They viewed brands and logos as ways to mask the truth, right? A beautiful interface was considered suspect, an unnecessary layer between the user and reality. Logos were rejected in favor of ASCII-like text displays and terminals, and manifestos were delivered in raw HTML. They believed the truth shouldn't need packaging. But in doing so, they underestimated something critical, the cultural layer of technology adoption. Because here is the key part. No matter how hard you try, you can't suppress our instinct to create meaning. You can't stop the mind from forming symbols. And even if you reduce everything to pure code, humans will still find a way to fill that empty space with a story. And there are many symbols in Bitcoin today that carry the DNA of those earlier days. For example, you have Satoshi Nakamoto, right? The hooded anonymous creator. This is our creation myth. It represents privacy, rebellion, hacker culture, and the idea that a single individual can change the world devoid of ego. Every movement has an origin story, and this is ours. We also have the Guy Fawkes mask, right? Originally, this symbol was used as a warning against rebellion, a reminder of a failed uprising. But over time, it was reclaimed, reinterpreted, and reborn. These days, it represents speaking truth to power, decentralized resistance, and the individual against the institution. This is a perfect example of how symbols change over time. And finally, we have the code itself, right? In the absence of logos and branding, the raw code became the identity. The hex dumps, command line outputs, the Genesis block itself. These forms became visual symbols in their own right, so much so that we now see it on an American Express card today. But as you can see, these early symbols were dark, cryptic, technical, almost ominous in their flavor. The visual language said, we operate in the shadows, and if you don't know how to use a terminal, forget about it. They're inherently limiting, powerful for insiders, but inaccessible for everyone else. We needed something brighter. We needed something more hopeful, right? We needed the Bitcoin symbol. And this is the logo I was greeted at when I first started working in Bitcoin full-time. As many of you know, this is actually the third iteration of the Bitcoin logo, evolving from Satoshi's original design. And it was posted on the Bitcoin talk forums by a user named BitBoy. And it was clear this guy must have been an engineer, because if you break it down, there's tons of intentional structure and symbolism within it. The two vertical lines are, of course, adapted from other currency symbols, but the motif actually traces back to the Spanish peso, where the two bars are speculated to represent the Pillars of Hercules, or Atlas, holding up the world. Bitcoin inherits that lineage, a currency for the future. The logo's rotated at precisely 13.88 degrees, leaning forward. And the scaling ratio of the circle is based off of 42, which, as we all know, is the answer to life, the universe, and everything. A little cosmic humor baked directly into the brand. You can tell an engineer made this, but here's the thing. It still holds up, it's solid, and it's iconic. And then there's the orange, right? The orange was brilliant. Orange is the color of energy. Orange is the color of fire. And orange is the color of the Dutch, right? It's loud. There you go. It's loud, optimistic, and it says, we are not hiding anymore. We are here. But here's where it gets interesting, right? In 2010, BitBoy openly admitted that he drew inspiration from Visa and MasterCard, the very institutions that Bitcoin was trying to disrupt. He said, the irony is, as much as I hate MasterCard and Visa, it's all about perception when it comes to consumer confidence and behavior. And that's the key insight here, right? It's all about perception, not just the code, not just the technology, but how people feel when they encounter it. Around this time, Bitcoin started making news headlines, but the imagery was all over the place. Cache coins, price charts, generic stock imagery that you still see today. There was no coherent visual identity. And while this was a feature in the code, to the general public, a lack of a shared design language was confusing. So this is me in 2014, an intern at my first design job, and this was the landscape I was stepping into, surrounded by engineers, crypto anarchists, and it was here that we designed the first Bitcoin payment URLs, long before the average user even knew what to do with a QR code, and the first multi-sig wallets, all open source. But I had this question that kept me up at night as I entered into this industry, which was, how does a decentralized group agree on a symbol at all, right? And the truth is, there is no official Bitcoin logo, right? The orange Bitcoin symbol that we all know and love is MIT licensed and open to anybody. Anyone can create their own variation on it, and many have tried. We saw this play out in the block size wars. Competing forks had to brand themselves to differentiate. And at some level, this was a battle over the Bitcoin brand itself. It was not just a technical debate. It was a struggle over identity and a battle on who gets to be Bitcoin. And in the end, the orange Bitcoin brand did not win because it was the best design. It won because it was the oldest and most widely distributed and most repeated. Rather than a mimetic evolution, like we see with memes, where we go from variation to competition and selection, Bitcoin logo followed more of a thermodynamic model, right? Initial energy, replication, and a reversibility. And so the orange B became the banner that we still fly to this day. But this was just the beginning of something much larger. Once we had a banner to rally around, something deeper formed, a tribe, a movement, a revolution. We watched an entire culture emerge in real time over the years. And while Bitcoin is a global community, and while our politics, backgrounds, and financial situations may all be different, we are gathered under one shared symbol and one shared belief. From there, symbols expanded into the cultural pillars that every enduring movement has. Symbols, language, values, right? We didn't just create a new form of money, we created a new culture. But human beings have always done this, right? This is no surprise. Since ancient times, we've used symbols to compress complex ideas into forms we can share. Symbols are how we define who belongs, communicates what we believe, and visualize meaning together. And like all early cultures, we turn to animals to express this story first. We have the bull, right? Symbol is all the civilization itself, representing strength and conviction and an unstoppable force. We also have the rabbit, right? This is my personal favorite, representing curiosity, hidden knowledge, and unseen realities. Going down the rabbit hole, it speaks to the intellectual journey that we've all been on and functions as an initiation ritual. We also have the frog, of course. The frog is a creature that lives between worlds, both outsider and insider. It represents the underground culture, the humor, the irreverence, and the internet native identity of Bitcoin. And last but not least, we have the honey badger, right? Honey badger doesn't care. It's immune to threat, intimidation, and attack. It keeps going. It represents the anti-fragile nature of Bitcoin. I don't know of any other movement that's adapted the honey badger, but we love it. And so quite naturally, we just saw how we developed a modern mythology, like organically. Some of these symbols are unique to Bitcoin, and some are borrowed and reinterpreted from other cultures, which is exactly how myth has always evolved. No matter how strange or playful these symbols may seem on the outside, it's hard to deny that they carry real meaning. They've taken on lives of their own. And so once we have a set of symbols, the next layer always emerges, right? Language, short phrases, inside jokes, ritual sayings. These become the glue that hold the identity together. And you already know these, right? Some of them are up here on the screen. HODL, not your keys, not your coins, don't trust, verify, always has been. But these are more than memes. These are compressed wisdom. And many of them have a visual representation to go along with them. But they weren't accidental either, right? These serve a critical psychological function. I believe Bitcoin has a collective unconscious. And while one person might have come up with each individual meme, we have a hive mind of sorts that propagates and adapts them. A shared identity that celebrates together, suffers together, learns together, and pushes forward together. They aren't marketing slogans, they're survival codes for the digital frontier, and they helped us endure volatility, resist censorship, and shrug off ridicule over the years. But most importantly, these symbols and mantras preserved our history and reinforced the mythology as we grew. And we have learned a lot of lessons along the way, lessons that need to be remembered as we enter the next epoch. So what holds us together? Financial incentives are at the core of how Bitcoin works, of course, but there is something deeper happening here. Identity, meaning, belonging. Kind of sounds like a religion, right? Well, I think it may look like that from the outside, but I think there's a clear distinction here. We're not trying to answer the meaning of life with Bitcoin. We're trying to answer something more concrete. How do you build a strong society on stable monetary foundation? But despite this, the similarities are striking, right? We have the moon, transcendence, and hope. We have Satoshi, the absent deity, right? The founding prophet. We have the Genesis block, the creation myth. And we even have halvings and holidays, which act as calendars. But I would argue that these emerged organically and within the individual, but not by decree. Because Bitcoin doesn't just shape culture, it shapes the individual. It spreads peer-to-peer through memes, nodes, and shared experience. It's the recoding of the self. It rewires your head, right? Your reason, your verification, your long-term thinking. It rewires your heart, right? Hope, sovereignty, belief in human freedom, prosperity. And it rewires your hands, right? How to build things, how to take action, how to hold custody, just making things, right? And anyone who's gone through a full cycle knows that this is trial by fire. So the question becomes, what story are we telling now? What challenges lie ahead? How do we carry these symbols forward as we build the future? And from my point of view, I think Bitcoin's at a crossroads right now. In the US, many believe Bitcoin has already won, that it has gone mainstream. But this moment is different from the early days of Bitcoin. We are no longer wondering, will Bitcoin survive? We are wondering, what will Bitcoin become? And history shows what happens when revolutions go mainstream. When Christianity became legalized under Constantine, the rebel faith became the imperial faith. When punk rock was signed to major labels, anti-establishment music became a commercial product. When the early internet met venture capital, the frontier became an industry. But in every case, success forces a movement to confront itself. And so Bitcoin, as we know, acts like a mirror. The identity of the outsider no longer fits, but the identity of the establishment feels like betrayal. This is the tension. This is the moment we are in. And so we have three routes, I think, we can go from here, right? The purest insurrection, reassert founding principles, and protect the cultural core at all costs. We could go institutional translation, right? Transform Bitcoin's principles into something palatable for corporations and states. But we risk dilution or even capture. Or mythic reinvention. Stop defining Bitcoin by what we're resisting and start defining it by what we will build. Balaji describes the rise of network states, right? Communities like ours coordinating digitally, gathering capital and conviction until we begin to shape the physical world around us. And I believe that the next 10 years in Bitcoin will be defined by this. When we say fix the money, fix the world, we should stand by that. But it won't happen automatically. It requires builders, capital, and creators. So here's my ask of you, especially to all the designers, the artists, and creators in this room. When we design the next institutions, the next products, even cities, right? Let's carry the Bitcoin symbolism with us. Let's continue to break out into public works and architecture. Let's fight against the aesthetic of monoculture and create timeless brands again. Let's let our symbols continue to encode our lessons so we do not forget where we came from. And at the Bitcoin conference, all of these ideas were top of mind when we developed this year's theme, Foundation 2.0. We see the Bitcoin conference evolving into the new World's Fair, a place where emerging technologies meets capital, where builders meet culture, and where the best in the world come together to chart what's next. This is the frontier, and the Bitcoin conference is where history is written. But I'll leave you with this, right? We've fought this hard to get here. This is not the time for Bitcoiners to retire off into the sunset. This is the time to double down. We must become stewards of what comes next, and our symbols will live beyond us. Thank you, Amsterdam, and I'll see you next year.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Korva, Bitcoin journalist, joined to my left by the extraordinary Roy Scheinfeld, CEO and founder of Breeze, as well as Susie Violet Ward, CEO of Bitcoin Policy UK and host of the My Two Sats show on Roxham, and crypto journalist Christine Lee, ladies and gentlemen. Roy, we're going to dive right in here. You've contributed a number of pieces to Bitcoin Magazine over the previous years. Most recent one was about Bitcoin as a value transfer mechanism. Can you break that down for the audience a little bit?
Yes, sure. I think there's a lot of discourse around Bitcoin as an asset, and everyone is starting to understand the importance of Bitcoin as an asset. It's the best asset in the world. That is becoming mainstream. What people fail to recognize is the ability, what I call the utility of Bitcoin. So Bitcoin has a much greater in terms of potential to influence humanity, basically. So I see Bitcoin as a way to transfer value. It's a transfer value layer. It's a transfer value network that, in the similar way to the internet, like the way that the internet unlock information, Bitcoin can unlock value. And that's kind of the narrative I'm trying to explain.
To spread, definitely, yeah. So I don't know if I think we might be having technical difficulties over here. Can you hear Roy okay in the headphones, ladies?
I can hear. Yes.
Okay, sounds good.
Wait, I can hear him now. Okay.
Perfect. All right, we're back, ladies and gentlemen. So this idea, so we were talking about this a little bit offline, right? This idea of transferring value via Bitcoin. Do you feel like, this is something that it's often not talked about enough? We're here, obviously this is sponsored by a treasury company. Mm-hmm. And like you said, Roy, it's good that we're starting to look at Bitcoin as an asset. But when it comes to maybe some of the language that both of you use...
Well, okay, what I asked him is, when you're using Breeze, what is it being used for by users? And that just triggered all sorts of controversy there, because I was thinking, is it being used to buy some coffee? Are people using it to go to merchants?
And you got into trouble.
Yeah, and then I got into trouble with Roy. Why, Roy?
Yeah, because I reject the framework. Basically, people equate Bitcoin adoption as a medium of exchange with merchant adoption. And I think these are not equal. And I think Bitcoin, the first time in history we have an asset, we have a currency that is the best store of value, but also the best medium of exchange. And people use Bitcoin as a medium of exchange all the time. And one particular specific example is trading, because Bitcoin as an asset is a highly tradable asset. The trading volume on Bitcoin, I think it was around $9 trillion in 2024. That's 9x than its market share. So Bitcoin is being used as a medium of exchange all the time. Yes, you're right, it's being used as a speculative asset in the context of trading, but it doesn't mean it's not a great medium of exchange.
Because when it comes to mainstream adoption...
Could you hold that thought if you don't mind? I just got word. We do have to head back over to the main stage where, oddly enough, we'll be talking about Bitcoin payments via Lightning and Arc, two different Bitcoin Layer 2s. So, ladies and gentlemen, we'll be over at the Treasury stage, and we'll be right back here after this.
Hello, everyone. How are you doing? Woo! My name is Veronica. I'm happy to guide the conversation today. I work with Arc Labs. And before we get started, just a brief overview. Is there anyone who is using Bitcoin as this store of value thing? Anyone hodling here? What about using Bitcoin for payments? Okay, that's getting less. And who has heard of Arc? Oh, that's quite a lot. So I'm super glad to be here today with some of those that are actually at the very forefront of developing this technology, Arc and Lightning. So please welcome on stage Bastien Teinturier, Eric Desmet, and René Picard. Can you please give a brief introduction of who you are and what you do?
Yeah, hello everyone. I'm René Picard and I'm working as an open source developer and researcher in the Lightning space. So I'm researching how to make payments more reliable and work on liquidity management. And I was very excited when the ARC paper first came out because I thought it's a really neat infrastructure to help with payment reliability and liquidity management.
Hi, my name is Eric de Smet. I'm the CTO of Second. At Second, we're building an implementation of ARC, which is focused at sending and receiving Bitcoin, and basically building the best experience to send and receive Bitcoin.
Good morning, my name is Bastien Tenturier and I'm CTO at A5, one of the 3 companies that actually created the Lightning Network, and I've been working on developing the Lightning Network since then.
Thank you. So today we want to focus on like 3 things. On one hand, what are the actual limitations of Lightning? And then we'll look at 2 potential use cases of ARC. It's quite a new technology. One of those is using ARC rather as a payment solution, where you'd have potentially different ARC instances, and Lightning would be the connective tissue. And then we have a second USP, where we have ARC rather as an infrastructural piece where you can build virtual channel and channel factories on top and then plug this kind of into Lightning to support it. Bastien, you're like working on Lightning or developing Lightning technology and engineering the protocol since, I don't know, probably nearly a decade. Or can you give us an overview of where we are at now, what is possible, especially with Phoenix, the wallet your company develops, and also maybe give us an overview of which limitations do we have with Lightning that are just built into the protocol? What is stuff that we won't just not get around?
Yeah, so first of all, zooming out, we've actually come a very long way since the early beginnings of Lightning, because in the early days it was really, really hard to use because this was quite complex technology that we've been able to simplify over the years and mostly simplify the UX as well by adding more protocols. So right now I'd say that we're at a stage where there are a few wallets that make it really easy to use Lightning in a purely self-custodial way, and that's one of the main benefits of Lightning. The goal is to allow you to make payments, everyday payments, using Bitcoin for a small fee and with instant confirmation. We're at a point where this works, and people who say it doesn't actually haven't used Lightning in the past few years, because if you just try it and download the wallet, you will see that it works actually quite well. But there is still a bar that we need to raise to make sure that self-custody on Bitcoin payments is as good as custodial way of transacting on Bitcoin. And the main reason this is hard to do is that Lightning has 2 key limitations to be used as a global payment networks. It's onboarding. Onboarding has a cost because onboarding a user on Lightning requires making an on-chain transaction. So you cannot easily onboard, you cannot at all onboard 1 billion people on Lightning today. There's just not enough block space, and it's just going to cost too much for most users to be able to have an on-chain UTXO to be able to create a Lightning channel. So this is a big limitation. If we want the whole world to have a UTXO and use Bitcoin for payments, which maybe we don't, maybe we do, I don't know. It depends on what people want to do with that. And the other second limitation is that is really specific to Lightning, is that you have to manage liquidity. Basically, you have to think about obviously when you have money in a Lightning app, you cannot send more money than what you have, but you also have a limitation on how much you can receive. And that's something that users usually don't have to think about, because in most payment apps, you can receive as much as people want to send you, and that's just it. But with Lightning, it's harder, because we have to manage that pesky liquidity, and I'll dive more into that tomorrow on my talk with slides, so it's going to be easier to understand. But those are the 2 main issues with Lightning, and they create UX issues and potentially unpredictability in fees for users, which is really bad UX-wise.
Referring to the second problem of liquidity requirements and everything, René, you are doing a lot of research on exactly that. How can wealth be distributed in the Lightning Network, etc.? Can you give us a TLDR of what you do there and the outcomes of your research?
Yeah, so I will try my best because it's like extremely mathematical, but I will try to hide all of this from you. So yeah, you're welcome. So the main result of my research is that if you have two-party channels, the liquidity is basically locked in that particular payment channel and is not really accessible to other users in the network. You can route some of your wealth to your peers and they can forward it to their peers. But what you can really see is in order to be capital efficient, you need more peers in a channel than just two peers. So multi-party channels are a really great tool. And this would actually solve two main problems. It's the onboarding thing, because you can onboard several people at once in one on-chain multi-party. And then, of course, the liquidity management and the capital efficiency is better. So that's the TLDR of that research.
Okay, thank you. And I think the second issue that Bastien mentioned was that of restricted block space. Yeah, so we have to open and close channels and everything. And in the end, Lightning is also just a transaction batching protocol. We have two peers that are sharing an on-chain UTXO. What we can do with ARC now, though, is, which some call a layer 2, we at ARC Labs, we rather refer to it also as a transaction batching protocol. And you can have many transactions and many users, therefore, share one on-chain UTXO. Can you, from the payments perspective, Eric, give us an overview of what is ARC, how does it work, and then you have these in-round, out-of-round things?
Yes, so ARC is basically another way to share a UTXO. And what's the key idea of ARC is that we want to have many users share a single UTXO. And basically, they all get a little share in it, and we call that a VTXO or virtual UTXO. So your VTXO is like a Bitcoin UTXO. You just can pay the fees and bring it on chain. What's kind of unique in ARC is there's a system where there's an ARC server. And basically, the server will host rounds at regular intervals. And what you can do is, if you have a VTXO, you can wait for a round and basically exchange it against a new VTXO in a round. And that's one way to transact. We don't really like that way for payments because it has one big downside. You need to wait for a round, and waiting an hour for a payment, that feels like banking in the 90s. What you can also do is you can pay out of round. And it slightly changes the security model, but what you basically do, your VTXO is just like a normal Bitcoin output, and we add another transaction on top of it. It slightly changes the security model in the way that the finality is different. As a receiver, you have to trust that the sender and the ARC server don't collude, and you can basically get rid of that security model in the next round. So it's a bit like on Bitcoin, if someone sends you Bitcoin, would you trust someone who zero-confs you? I might trust Veronica, but I don't know you guys, so that might be hard. And with ARC, it's the same. So initially, your security model might be a bit weaker, but after a round, you can get to a very strong security model again.
And actually, that's something that Eric raised here that's really interesting, is that whenever any system that wants to use Bitcoin as payments is actually a set of trade-offs. There's no perfect solution that is going to be perfectly self-custodial, perfectly private, perfectly secure, extremely fast, and extremely cheap. You have to choose some of those properties and choose a medium or of what you want to achieve within those properties. And Lightning is one choice of trade-offs. ARC is another choice of trade-offs. And there are other different things that we can build on top of Bitcoin, which all have different trade-offs. And that's a really good thing, because what is really healthy in this ecosystem is that people openly discuss those trade-offs. People don't try to hide those trade-offs under the carpet and say, oh, my thing is perfect, you should all use it. Everyone is quite open about the trade-offs so that users can choose the trade-offs that they are comfortable with. Because some users don't care about privacy at all and just want low fees and instant confirmations. Some users want much more privacy and are willing to pay more fees for that. And it's actually really good that we're able to create different protocols, different products that cater to different needs compared to existing payment systems that just all do the same thing and have all exactly the same properties.
Yeah. Then one thing when it comes to ARC, what I want to emphasize, if you make ARC payments, they don't have to be in the ARC protocol. So we work very hard at making everything interoperable with Lightning. So there's no fun at starting on an ARC island. So if you are on ARC, you can basically swap your ARC VTXOs against a Lightning invoice and vice versa. And that's a very clean model, so that if you use ARC, you can use all cool Bitcoin payment solutions which exist today. And I think that's also one of the wins of the Lightning Network. Lightning is really becoming the language of Bitcoin payments. It's the standard. And I guess if you develop another protocol, you just have to ensure you can speak Lightning or you're lost. And we work hard to speak Lightning.
Oh, but as a user, I'm super confused now. Do I use this ARC or do you use this Lightning? Or do I even have to choose in the future? Or how will these protocols and also with this cashew thing, and how will this be made interoperable? Do we have maybe something like unified QR codes or so?
So I think I want to reiterate on what Bastien said about trade-offs. All of these protocols come at various trade-offs. And that is why I like to think of ARC as an infrastructure protocol for Lightning. It is really useful to use ARC to help with liquidity management in Lightning and to provide VTXOs as payment channels. We already have understood payments very well on the Lightning side. We have Bolt 11 invoices, we have Bolt 12 offers. They are already a really great standard, and merchants are adopting this. I mean, you probably have seen the news, how many new merchants are being onboarded these days. So I think it makes really a lot of sense to use ARC kind of like as an intermediary protocol between the Bitcoin base layer and the Lightning network layer. And this helps us with interoperability, but it is for us developers to decide how to build the bridges and how to make these protocols interoperable.
Yeah, I think that's a really good point, because in theory, ARC could have been developed 6-7 years ago already, but it's really because we spent a lot of time doing Lightning, discovering all the things that can go wrong when you build on top of Bitcoin and you try to keep trustless properties, security, privacy, that we find what trade-offs are actually hard to work around with just Lightning, and that we see that there are potential, we need ways to improve on what we have, and there's room for other protocols to actually solve these issues better than Lightning. And I think we're seeing for the past few years, we started seeing a kind of explosion of new layer 2s. There are a lot of projects that are appearing right now that weren't actually even conceived 10 years ago when Lightning started. And in a way, this is good, because this shows that we think that people want to use Bitcoin for payments, and we need to solve all the remaining issues that we have today. And we'll see which protocols actually work in the long term. But eventually, we are at this explosion phase where there are indeed a lot of technologies, and users are confused when they see all these names about these fancy things. But eventually, all these things are going to merge together to bundle the right set of properties, so that you just download an app and it has the trade-offs that you want as a user, because this is that set of trade-offs that you want to use, and you just use it for payments and you don't have to think much about it. And more technical people will actually use more tailor-made solutions where they choose to bundle different technologies together to actually match their very specific needs.
Me as a user, I'm very glad to hear that we'll see a unified landscape. And I already mentioned, and you just mentioned these virtual channels. What was interesting to me, like 2-3 years ago, when the idea of ARC got published, one of the first opinions or statements that we saw on X was from you, René, that was like, hey, we can suddenly build virtual, like payment channels, Lightning payment channels, or even channel factories on top of ARC. Can you lay out a little bit how you see that happening?
Yeah, so when the ARC paper was first emerged, Burak proposed that these ARC rounds or batches or whatever they're currently called, and by the way, we should find a uniform notion for all these things, but he proposed that every 5 seconds those things would emerge, so ARC would be used for payments. And this comes at a huge liquidity cost. There is trust involved because blocks aren't emerging that quickly. And you know, when a new technology comes, everybody's looking at the developers and be like, hey, what do you know about this? What is your opinion? And I found the ARC proposal interesting because at that time I was researching limits of Lightning. And I was like, I think Burak maybe got his idea like very focused in one niche, but the one where we use the VTXO just to create a payment channel and use this for liquidity management, it's just so much more natural. And it slows down the liquidity overhead that the ARC service provider has. So in that sense, it's just really nice. I mean, the VTXO could just be shared by 2 users. They can have a payment channel. And when the payment channel runs out of liquidity, which happens very often on the Lightning Network, you can actually just splice something in, you can close the channel, you can open it, and all of this doesn't have to hit the chain because now it uses the full power of the ARC system. So even force closed on a payment channel, if one of the peers disappears, can be resolved later on in the ARC. So, I mean, that's really nice. So it's really like this sweet spot that makes Lightning much more usable.
And you already mentioned some technicalities. Eric, I think you are building something like that at Second. Can you give us a bit of a notion of what happens potentially in a unilateral exit? Or these VTXOs, they have an expiry. What happens to my channel if I have to refresh or renew my VTXO?
Yeah.
And therefore my channel.
So basically how it works is in ARC, you basically have a channel. And in ARC, one of the questions is each VTXO has an expiry. And basically what you as a user do, actually you won't do it, your Bitcoin wallet, your app on your phone will do it for you in the background. It will be like, okay, I exchange my channel, which is going to expire for a new one. And it turns out that once we start researching these things, it turns out that a lot of these things seem very challenging in the beginning, but the more we think about them, the easier they become. So it's just like you open a new channel and you transfer the funds and you're done. So it's kind of straightforward. So we have been doing some research at implementing it, but it isn't implemented yet and it will still be very reckless for the next 1 or 2 years.
Bastien, how do you see these developments? Are you looking into ARC? And how would you see that be is it even possible? Would that be well interoperable with Lightning itself?
It actually took me a while to understand ARC well enough to really understand the trade-offs, and the documentation that was built by Eric's team was really great for that and really helped me. And one thing that's really interesting with ARC is how many people in the audience know what covenants are? Can you raise your hand if you know what covenants are for Bitcoin? Okay, so this is a very technical topic, but this is potentially a change that would be made to Bitcoin to allow more complex things to happen in layer 2s like Lightning and ARC. And kind of the issue I had with that is that Lightning doesn't benefit that much. This is a huge change for Bitcoin. This is something that people have been talking about for years, and there's been a lot of tension in the community about how should we do covenants, should we do them at all? And this is really a heated debate in the community. I hope that some form of it will eventually happen, but it wasn't helping Lightning that much. But it is actually really helping ARC improve its UX and improve its usability. So that's why I'm really excited, because ARC is going to benefit a lot from covenants on Bitcoin, and then that allows Lightning to benefit from ARC to scale onboarding. Basically, onboarding users will be much easier and much cheaper, and we can potentially onboard hundreds of millions of users, which we cannot do with just Lightning. And it will also help with liquidity management by shifting some of the burden that is right now on every user. It's gonna help shift it only to the service providers, whose job it is to actually manage that liquidity to make money and ensure that they have an economically viable product. So I think this is interesting because there is really a nice healthy way of combining those two technologies together, especially in a future where Bitcoin activates covenants.
I fully support your statement about covenants and how useful they would be in order to create all these second layer protocols. Just want to add like a tiny bit about the usefulness for Lightning. So for example, Christian Decker has been very vocal about proposing L2 as a different mechanism to create payment channels. And I think those would also benefit from covenants. And we would get a similar power out of them like Arc, because we could also build multi-party channels. I think the interactivity requirements would be a little bit differently, and this is where Arc also is like very shiny, because in Arc you don't have to like interact new state changes with everybody all the time. You have the service provider in the middle who is helping us with that. But I just want to say Arc is like one of the potential solutions in this like off-layer space. Others could be possible and thinkable once we get covenants.
Yeah, and as you mentioned, interactivity is really, really annoying, because if you want many users to be able to share one on-chain UTXO without covenants and Arc, if you just want to use Lightning with something called channel factories, you need all those users to be online at the same time to be able to actually make changes and move liquidity around. And when users are using just mobile wallets on their cell phones and are just in the subway or living their life, annoying users, it's really hard to do. So it's really nice to have anything that we can do that reduces the interactivity requirements, and that's something that Arc is going to be able to do well once Bitcoin supports covenants. So that's what I'm excited about.
Yeah, I think maybe one side note. So when it comes to Arc, what's nice about the interactivity requirements is you have interactivity during a round, but like that's optional. Like if someone disappears later, it doesn't affect all the other users, which is very messy. If the entirety of this room would share like a channel in the channel factory, if one of them, their phone breaks down, everyone would need to do a unilateral exit, which is absurd. With Arc, we could still say we all try to come together to combine in a round, but if anyone walks out, we can just continue. So that's a lot better. What we can do with covenants is even like, you guys don't need to be online at the time. You can just all tell the server what you want, go back, go home, have a coffee, and then come back and see, it's okay. And that basically makes the protocol a lot more stable, which is really nice.
Since we only have 1 minute left, please, one lightning statement, pun intended. What would you wish for to happen, or how do you imagine the future of payments in Bitcoin?
Yeah, so I would envision an honest debate between Arc and Lightning developers, also to look at the limits of both systems.
I see that a lot of people are not doing Bitcoin payments yet, and I think that's a shame. So I hope like in 1 or 2 years from now, everyone here will be, of course I make payments using Lightning or Arc. Like, what else would I use?
Yeah, same thing here. I would really like to see people actually use Bitcoin for payments and not just hodl it, because if nobody uses Bitcoin for payments, then companies that are building payment systems on top of Bitcoin are just going to die once they run out of VC funds, and that's sad. So if you want to be able to do Bitcoin payments, just use it, please. Thanks.
Perfect. Thank you, guys. It was a pleasure.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, where vibes are high. I am Frank Korva, Bitcoin journalist, joined by none other than Roy Steinfeld, CEO of Breeze, Susie Violet Ward, CEO of Bitcoin Policy Institute and host of the My Two Sats show on Roxham TV, and Christine Lee, crypto journalist extraordinaire. Roy, we were just speaking offline, and this is a perfect segue from this conversation we were just listening to about about Lightning as the common language of Bitcoin. Could you maybe unpack that a little bit for the audience?
Sure. But as a segue from the previous panel, if I may, touch on the topic of Bitcoin payments. I want people to understand what payments are and kind of to define a payment and explain why Bitcoin is greater than payments, than being used for a means of payment. Payments are basically an instruction to settle a debt. It means that if you buy something, Christine, to your point of buying a coffee, for example,
Yes.
you need to pay for your coffee, meaning you have a debt to settle with the merchant. And payments, basically fiat payments, are an instruction to settle a debt. That means two things. One, that you don't transfer value when you make a payment. You're basically sending an instruction to an intermediary to settle, to transfer value on your behalf. That means it's all permissioned, basically.
Yep.
That's one thing. The second thing is that you can only do that in order to settle a debt. Meaning, if I want to give you now, Frank, some money, I can't really do that. I can't really send you value unless you're authorized by the intermediaries to accept a payment.
The third party in between you and I.
Exactly.
That's correct.
Exactly. So we're kind of all trapped in this payment fiat mindset. And we want to bring back cash, basically. What's Bitcoin? It's the reimagination of cash in the digital world.
Yep.
We want the ability to transfer value at any time, do that by anyone, anywhere.
Yep.
And that's why I do subscribe, Susie, to the kind of peer-to-peer electronic cash. That it's not kind of the peer-to-peer that excites me. It's bringing back cash to society.
Yes. And how about making it work offline? Sorry, no, sorry, Frank. I know
Too big of an issue right now. Let's talk about maybe some of the challenges associated with making it cash. Susie, in the UK, you're constantly speaking with regulators. Yes, too big of an issue. Do we see Bitcoin more widespread become cash in the next maybe, let's say, 5 to 10 years? Ideally sooner than that, but do we see this happening maybe in the UK? Or if not in the UK, maybe where in the world do you see this becoming more ubiquitous?
Well, the recent strike announcement is a big deal. How many merchants is that now reaching? It's like 4 million.
Square, yes. I was going to say, do you know
sorry,
the strike
no, I
announcement?
don't know. I'm sorry.
Yeah.
No, I get confused by those two. Don't tell anyone.
So reaching 4 million merchants, I do think that's going to be big, sure. And I would say maybe to your point, so that's sort of under the umbrella of value transfer.
Of course.
Yeah.
Payments are a subset of value
transfer. Okay, I think that's a fair way to look at it.
It's going to be really difficult for us because every time we have something called the bed and breakfast rule, so I think you can spend and replace within 30 days, but otherwise it always triggers a capital gains. And so I think until we actually change our tax treatment, it's going to be really difficult for us to use it properly.
If you do buy a coffee, or you have to track every transaction for tax purposes, and that's a fundamental misunderstanding of Bitcoin.
Of the technology. Yeah. I was luckily, on a quick note before we head back to the main stage, was lucky enough to ask the White House press secretary when the President of the United States is thinking about pushing for that de minimis exemption. We want to see this de minimis exemption exist. I think there are maybe some naughty people out there who maybe spend their Bitcoin without reporting it, right? But for
as
the
long
general...
as you replace it in the UK, as long as you replace it within 30 days, then it is actually fine. But you've still got to track it, though.
Okay.
That can be solved with technology, right?
Which we don't want to do. I apologize, Suze. I do have to cut it there because we are cutting back to the main stage to learn more about the tension between Bitcoin's ideals and institutional adoption. Over to the Treasury stage, and we'll be right back over here after this.
We're going to talk about a contentious subject. It's going to have a... try to make the best of it and have a neutral positions here and not be too, strict in our point of views because we see the centralized world and the decentralized world are colliding, and we're at a crossroads where a lot of Bitcoiners can't make sense of what's happening. Okay, like on the one side you have Bitcoin as a decentralized public network. Anybody can join, but at the same time, the entire point of it is that we try to avoid centralized parties. Oh, sorry. So this is better, right? Thank you. when we look at Bitcoin, the entire point of having a decentralized network is that we use it without going through a third party. But now we see all the third parties of the centralized world coming in, and the culture here doesn't really know what to do, how to make sense of it, okay? So joining with me is Tom and Vijay. We're going to try to have a rational conversation about this. I'm going to start with Vijay. So obviously, custodians and institutions, they provide a very user experience, good user experience for the masses who don't really know how to interact with Bitcoin, the machine, in the correct way, in the technical way, in a way that makes them self-sovereign. So institutions help and custodians provide like this very intuitive experience. Sign up to your email, password, log in, that's it. But what are we doing here? Like, this was not what Bitcoin was about, right? Like, it was about owning your keys, being self-sovereign, not relying on third parties. So how do you make sense of that?
Yeah, I agree with you. Bitcoin was created to disrupt monetary policy and central banking. It was intended to be unconfiscatable gold. You look at, Satoshi's writings, and you just look at the Bitcoin protocol. There's various clues about Order 6102. He was trying to create unconfiscatable gold, and so all those properties, which are censorship resistance, permissionlessness, unconfiscatability, these are core and fundamental to Bitcoin. It's the reason it exists. And it also solves all the problems that gold had, right? I mean, it improves on gold's scarcity, but it also solves problems like portability. Gold was not portable, which is why fiat currency came about, paper money came about, because it was to solve gold's portability problem, solve gold's divisibility problem, gold's verifiability problem. And Bitcoin solved all of that, and it became, the perfect money, the best money that humans have ever created. Now, if you put it in a corporation and hold shares in it, or you put it in a third-party, sort of a custody service provider, you have lost all of those properties, right? So, obviously, so that's a problem from that perspective. But on the other hand, I would argue that it's the natural process of adoption. It was always going to happen. Corporations adopting Bitcoin is not something new. People talk about it now like it's just, unexpected or something. Hal Finney talked about it in 2011 when he talked about Bitcoin banks.
No, I was actually preparing a quote from Hal Finney, just so I can, challenge the people who say, Bitcoin was not meant to be used by banks, and it was not meant to be scaled that way. So Hal Finney is the second user of Bitcoin after Satoshi Nakamoto. He is one of the cypherpunks, right? One of the few. He said, actually, there is a very good reason for Bitcoin-backed banks to exist, issuing their own digital cash currency, redeemable for Bitcoin. Bitcoin itself cannot scale to have every single financial transaction in the world be broadcasted to everyone and included in the blockchain. George Selgin has worked out the theory of competitive free banking in details, and he argues that such a system would be stable, inflationary resistant, and self-regulating. I believe this will be the ultimate fate of Bitcoin, to be the high-powered money that serves as a reserve currency for banks that issue their own digital cash, and most Bitcoin transactions will occur between banks to settle net transfer. So this is the way that Hal Finney envisioned how Bitcoin will scale in the future. He expected that transactions will not be all broadcasted and included in the blockchain, but rather settled between banks, okay? And so to come to you, Tom, we knew about this since 2009. There's nothing new. Banks and institutions, they're going to come. They're going to offer their services. And it's actually good because it's competition. Don't we want like competition between all of these service providers?
Yeah, well, as they say, Bitcoin is for enemies. So this is, I think, when you talk about nuance, I agree. But I'm not really agreeing with the competition part, because what you see is that it also forms centralization. And for me, this is the biggest risk. So I follow market economics, Austrian economics, and for me, competition is the part that's most important, and property rights. And we lose the property rights when you use a custodian. So for me, we need to be very careful of what the building blocks are that we're building this system on. I always use history to explain it, because when we used gold, everybody had their own keys. When we had real gold, golden coins, everybody had their own coins. It was decentralized, and there were property rights. But when we came into banking and governments, we started having paper gold, because they said, "Oh, we'll hold your gold for you because it's easier." Of course, there was a reason for it. But what happened is that fractional reserves and fiat currencies came to be because of decentralization. It couldn't be done without the custodian. And how it happened, if we look at now, when ETFs and everything, the banks started doing delayed settlements, and they could loan out your gold because you were not going to settle your gold. You were not going to come back for it. So pay to your mind that it's because of delayed settlements. And what do we see now with like the ETFs? I think there's like 32, 35 Bitcoin spot ETFs at the moment. Only 2 of those have verifiable proof of reserves. So, and for the rest, you have to trust something, trust somebody who's saying, no, we've got accountants, it's all okay. But all of the spot Bitcoin ETFs have delayed settlements. So even if we can say, well, at the moment it looks okay, but there's always this very big risk where the delayed settlements can be leveraged, and they can use it for fractional reserves.
I agree with you, but at the same time, in Bitcoin, settlement is very fast. It's hyper, especially on Lightning Network. Like if you see how custodians settle transactions with each other, and how cheap it is. Like gold, yeah, but obviously.
This is very different from the ETFs. ETFs, they have like settlement from at least 3 to 5 days. And like when you look at the laws that support it, they can say, well, it can be up to 15 days. So in this time, of course, it's not going to be like 50% fractional reserves or something.
But this is what I'm saying. Like
it opens a door for fractional reserves. And this is what I see as a big risk.
But that's the ETF. That's one class of custodians. We have many other custodians who are providing fast settlement and actual redemption of the asset, where you can withdraw it and put it into self-custody. And then you have the, as you said, the institutions who don't allow us to take custody of our funds. So there are plenty of types. Some of them offer like exchange services. Some of them are pure Bitcoin custodians, there are ones in El Salvador. You could think about them just as Bitcoin banks. They allow you to interact with the network very fast, send it on Lightning, receive it, and then withdraw it to self-custody. And so we have different types of custodians, and to just say that we only have like this ETF, BlackRock, that will imprison us in this like walled garden. I think there's competition.
No, for sure.
There's a lot of types.
I agree with you fully, and there's many different types, of course. But what I see with like I'm focusing on the Dutch regulation and the European regulation, and they are pushing us into using trusted custodials because they are getting regulated. Like from 2026 in January, the European Council is collecting all our Dutch tax statements of everything that you're buying Bitcoin on exchanges. The exchanges are being pushed to this. They have no option. And from 2027, there's no transactions. Companies can't transact Bitcoin anymore without having KYC.
Right.
So you see that companies are starting, well, yeah, there's other options, like with Lightning, and I can have it non-custodial. There's a lot of different options, but you can see that the regulation is pushing people at using those custodians, using the exchanges, because even the Bitcoin companies that are using Bitcoin Treasury, they use Coinbase to keep their coins. And even like cold storage option at Coinbase, they don't truly have their own keys. So you can see it's all like percentages of not being Bitcoin anymore, in my opinion.
Okay, I understand this, and this is a valid point. I think that there's a confusion in us as educators. How do we approach this to the people who are newly onboarded onto Bitcoin? Because it's easy to tell them like, go sign up to this custodian, you will accumulate, but you will have to take selfies and give up your privacy and do all of that. So it's how do we onboard new users? I'm asking you, VJ. How do we onboard new users in a way that uses Bitcoin just the way as it was kind of intended, without compromising our principles and without having like this massive, weird complexity in user experience?
Yes, so look, ultimately to your point about delayed settlement and so on, the market will move wherever the customers want it to go, or where the customers take it. So if we get to a point where customers say, we're not going to tolerate delayed settlement, that's where custodians have to go, or customers will vote with their feet, right? So you're right. So it comes down to education, right? And this is where I would say, in a sense, there's no such thing as bad publicity, right? So any adoption is good adoption. I would argue that there are thousands, maybe hundreds of thousands of individuals who have been onboarded into the Bitcoin ecosystem via ETFs, who would not have been onboarded otherwise, right? If you are a retail customer and you bought, BlackRock ETF when Bitcoin was around whatever $50,000, and now you've doubled your money, you're quite happy about that, and you'll probably pick up a book on Bitcoin or listen to a podcast and educate yourself on this asset that's produced that's been the best performing asset over a period of time. So that's education, that's good publicity, and that's helping the adoption story. And maybe that particular individual will do the reading and understand that Bitcoin is more than just number go up and like a good ROI. And it's all about censorship resistance and permissionlessness and unconfiscatability. And then they they swap their, IBIT shares for cold storage Bitcoin, right? Maybe that is their adoption path. But, it's education is education. The hardest part is getting someone to the table. The hardest part is getting someone to pick up a piece of paper and read it, or listen to a podcast or something like that and think about something. And I think that institutional adoption is helping that cause.
Not only education for the individual, but also for the institutions that are coming in. I think it's okay. Like, this is a public network. We're not going to do anything to stop you. I mean, we welcome you, actually. But I think it's better to play. If you want to offer your services to Bitcoiners, you better provide good services for them. And if I just see some kind of custodian who's trying to be my friend suddenly, and forget all the past, all the collapses, all the financial collapses that happen, and now they're asking us use our service now that will trap you inside these walls and you can't get out. So this is what I mean about ETFs. Yes, is that you can have a very good user experience and maybe have skin in the game, so you can start reading more about the asset that you're holding. At the same time, whatever amount of money that you accumulate on the ETF, it cannot get you to self-custody, Whereas if you use a centralized exchange, yes, it's centralized, and yes, it can rug pull you, confiscate your money, do all of that, but at least at some threshold, you're able to take self-custody, and you're at that point, I think you will be well-versed in Bitcoin technology, because you'll have skin in the game and you will be reading about self-custody and managing keys. You'll have the technical knowledge to actually click withdraw into your own wallet so you can have your own keys. So, Tom, I want to see how we can reach kind of consensus in our culture on how to approach this topic, because if we have this divide between the hardcore libertarians and the people who are more pragmatic, who say like, okay, we need to this is a natural way of adoption. So how do we square these point of views?
Yeah, well, of course, I'm going to stay the hardcore libertarian at the end, which is also needed, because then maybe we can end somewhere in the middle. I would agree, of course, that when companies are getting exposure to Bitcoin and put Bitcoin on their balance sheet, then it's an easier step for them as well to start accepting Bitcoin, because maybe they have it on an exchange first, then they learn about, oh, maybe I should put it in self-custody, it's better. And then when they have it in self-custody and have everything under control, they can think, well, then I can start accepting Bitcoin because I already know how to store it. It's some steps, so I would agree. Every adoption is worth it. But I think it's my job, and it's everybody's job, it's your job, and everybody in the audience to stay vigilant and to stay the activist for which Bitcoin was meant to be, because we have the power. We can choose to use the companies that don't just want to have exposure to Bitcoin and just put it on their balance sheet to make their balance sheet look healthy. We can choose for the companies that want to use the Bitcoin philosophy, and they want to teach the world about centralized and decentralized currencies. So for me, I'm not going to meet everybody in the middle. It's my job to stay on the side and just speak to
you're not going to compromise at all. Okay.
No, I'm going to meet you guys in the middle. I'm going to play devil's advocate. But I think it's very important that there are people who are going to stay vigilant and say, this is not the end goal of Bitcoin.
Well, for me, I actually like that a lot of businesses, a lot of companies are holding Bitcoin. I think that we haven't seen companies trading Bitcoin internationally and using Bitcoin as an international settlement layer for the entire global system. So if we have companies who are holding Bitcoin slowly, increasing the liquidity of Bitcoin, everyone is doing that, then at some point they will trade with each other, okay? So I want to support Bitcoin businesses. And I don't want to invest in businesses that are stacking fiat, that are just not in the game entirely. So even though I'm investing in this stock that is paper Bitcoin, that doesn't allow me to hold actual Bitcoin. Let's first agree that we're going to have Bitcoin in cold storage. If you don't have Bitcoin in cold storage, okay, do not ever talk about treasuries or anything. First of all, understand that holding Bitcoin, the actual asset, in Lightning wallets, in hot wallets, that's the superior thing. That's the superior asset. But then, people have maybe 5%, 10% that they invest in their own business, in their own lives, in other people's businesses. Okay, so why not have that money invested in Bitcoin businesses? These are support mom and pop shop. These are local businesses. Okay, so why the hostility against them? Okay, I don't know. Do you agree?
Yeah. Look, I mean, Bitcoin is different things for different people, and that's its greatest strength. So, if you're a person in Iran or Syria or North Korea or any other authoritarian, jurisdiction, Bitcoin is one thing for you. You're using it as a medium of exchange. You're using it as a censorship-resistant, unconfiscatable store of wealth, and to basically earn a living potentially. If you're in a Western world where you have a bank account, you're not unbanked, you're not under any immediate threat from your government of confiscation of your wealth, you're going to view it differently, right? So for you, it's going to be a financial an asset that you invest in because it's been the best performing asset over the last over any 15-year period in history, right? So that's what it is for you. So I don't think, and it's not the right approach to tell people this is how you should use Bitcoin and this isn't. You shouldn't be chasing a high return on your investment. That is wrong. You should be using it as only this. Of course, I agree with you. I don't think anyone should, sell all their Bitcoin and buy, some Bitcoin treasury company. But at the same time, I don't think it's wrong to chase Bitcoin yield through, using a certain portion of your overall Bitcoin exposure. There's nothing wrong with that.
I do agree, but I think we should accept that everybody acts in their own interest, and companies will act in their own interest. We should act in our own interest, but the old fiat system also acts in its own interest, and we can't just say, well, Bitcoin's for banks and everything's okay. I don't think banks and the old financial fiat institutions will give up their money printer willingly. So we do need to keep it in mind and stay vigilant. For me, Bitcoin was not meant to be another block inside the fiat pyramid. It was meant to burn this fiat pyramid down.
Well, I agree with you, and thank you. I just want to say Bitcoin resets the scale of trust to zero. So if you have a company or a business now, you're going to have to build your reputation from the start, okay? And I think that we as Bitcoiners, we are seeing the kind of players who have been here for like 10 years or more, offering real valuable services. We're not going to treat everyone like FTX. This is unfair, I think. I think there are a lot of good businesses that we need to study and stay vigilant and watch what they do for us. Do they publish their proof of reserves? Do they have technical reliability, legal reliability? Are they fighting for our rights? Are they trying to change public opinion, change politicians' opinion? Are they trying to build a better world? Okay, so it's not just that just a company, centralized company, immediately X, I have Bitcoin, I'm out into the decentralized world and I will. No, we're all going to interact with these companies. This is, I hate to say it, we live in a society, but like we do. We're all like, we're here one way or another, we're gonna interact with centralized parties. So let's I guess, bring the best ones, the most efficient ones into the market and try to convince them to play in our rules, okay? The way that Bitcoin was meant to be. Yeah, thank you. Okay, we're gonna wrap it up. So my name is Bamski, founder of B21 Arabic Educational and Media Channel, and Cypherbox Self-Custody and Lightning Wallet. Tom with me, can you just tell us where we can find you?
Yeah, sure. Well, you can find me on social media. I'm Tom van Lamoen. I'm the leader of the Dutch Libertarian Party. So vote Libertarian.
I'm Vijay Selvam on Twitter. Yeah. Thank you.
Yes, Vijay, you said you work for Gemini, right?
I work at Gemini. I'm International General Counsel there. And I'm author of Principles of Bitcoin. Yeah.
All right, thank you so much, guys. Enjoy your night. I think the next panel will be exciting.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined to my left by Roy Scheinfeld, CEO of Breeze, Susie Violet Ward, CEO of Bitcoin Policy UK, as well as host of the My Two Sats show on Roxham TV, as well as Bram Kanstein, the host of the Bitcoin for Millennials podcast. Bram, I'm going over to you first. I want to talk a little bit about reaching people with a Bitcoin message, reaching the millennial generation. What has it been like getting your podcast off the ground? It's now the only thing you do. It's your primary focus. Yeah. What has that process been like? What is it that resonates with people? What has worked for you as a podcaster?
Well, I think in general it's still a grind, right? When I learned about Bitcoin, I think a lot of people were actually talking about Bitcoin itself, and I think over time I just realized we need to talk about the problem more, right? So Bitcoin is obviously a solution, we think, for storing value over time and space as compared to fiat money, where you cannot really do that. And I think not a lot of people actually talk about how hard it is to kind of like see through that veil or that scam or bamboozlement, however you want to define that, right? And especially in the Western world, or I grew up in this country. Yeah, money just works, right? So when I was younger, I got some bills and I got some coins, and I went to the store and I gave them to the store owner, and they gave me bread or lollipop or whatever. And that was basically my introduction to money. Like, right. Okay, this is money. And it only, it took me until I was like 30, 31 years old, working at a bank, having a mortgage, then having a colleague tell me, did you know the money in the bank is not yours? And blowing my mind in an hour-long conversation to really help me realize that, the money is broken. And so talking about that more, I think, is what we all should do. And I think over time I've kind of tried to find a balance between talking about that problem and then, of course, talking about why Bitcoin is the solution.
Bitcoin. Susie, I'm assuming when you go to a politician or maybe someone in a regulatory body and say, hey, did you know the money is broken and banks are no good? They don't necessarily take kindly to that. So how do you get through to the political class when you speak with them?
Well, this is the thing. They don't want to hear how they have been a part of the problem. No one wants to hear that. So if you sit down and say, right, everything's broken because you've broken it, they're just not going to listen. So I think that solutions is the way that you approach it. So we have so many solutions that Bitcoin can offer: balancing grids, demand response.
Bitcoin mining you're speaking about.
Bitcoin mining, exactly. So actually going to them with solutions of how it can fix their problems is the way that you actually get through. And we went and had a meeting with somebody, I can't say their name, and their perception of Bitcoin was very much, it's a Ponzi scheme, it's for criminals, it's bad for the environment. We sat down with them and we discussed, we went through all of those issues, and by the end of it, they were blown away with what Bitcoin could do. But we can't sit down with every single person one-on-one and explain it to them like that. So this is the problem.
Yeah. I think it's a little bit of, it's what we're trying to do here, right? We're trying to broadcast to a larger audience to let them know. That's why we have you at the desk with us, Susie. It's spreading the good word, if you will. We're heading back to the main stage, ladies and gentlemen. We'll be talking about the institutional use case for Bitcoin. Over to the Treasury stage, and we'll be back after this.
Thanks so much for joining us today. This is the institutional case for investing in Bitcoin treasury companies is the topic that we're going to discuss. My name is Brian Dixon. I'll be moderating today. I am the CEO of Off the Chain Capital. Off the Chain Capital is a Warren Buffett, Benjamin Graham style of value investor in the blockchain space. And as of today, we have about half the portfolio in Bitcoin treasury investments with the goal to outperform Bitcoin as our strategy. So I'm excited to be up here with Robert, Michael, and Pascal to discuss the opportunity here and more about investing. First, I want to go through and please just if you do an introduction for each of yourself. Let's start with you.
Yeah, hello everyone. I'm Rob Harrison. I'm a managing director at Yorkville Advisors. Yorkville is a hedge fund based in the New York City metro area, and we've been a large investor in the Bitcoin treasury space this year.
Hi, I'm Michael Block. I'm partner at A&O Sherman. We're an international law firm headquartered in London and New York with 40 offices worldwide. My personal expertise is in capital markets, particularly on public equity.
Yes, hello, Pascal Hügli. I work for a traditional Swiss bank who has been in Bitcoin for plus 5 years, and we onboard and bank a lot of the clients and people throughout the industry, private and corporates.
Perfect. So before we jump in, just to briefly define what a Bitcoin treasury company is, very simply, is it's a company that buys Bitcoin for its balance sheet. Now, there's private companies that do this, and we're now seeing companies going public to do the same thing as well. This concept was really pioneered by Michael Saylor of Strategy, who basically decided that during the COVID pandemic, when the government was printing all this money, where were they going to place their treasury assets and the free cash flow that the business was developing to outpace the rate of inflation? And so when his team searched around the world of what they were going to do, they ultimately decided that Bitcoin would be the best asset to do that. And they really transformed and pioneered this opportunity of what a publicly traded Bitcoin treasury company is today by issuing debt into the markets and issuing equity into the markets and creating very novel credit instruments to then suck in fiat capital to convert into Bitcoin on the corporate's balance sheet. And so that's what a Bitcoin treasury company is. It's basically taking the tools of either the private or public markets, being able to suck in fiat capital, convert it into Bitcoin on the balance sheet to then create long-term balance sheet value for the organization. And so there's a variety of ways you can look at these companies from an investment landscape to see how you should be investing in them. But I'd love to get your guys' feedback on when you're looking at investing in Bitcoin treasury companies and the important characteristics that you need to look at for your due diligence. What are some things that you look at? Let's start with you, Rob.
Yeah, I think the most important thing is the management team. You want to know that the person managing the business is truly committed to adding Bitcoin to the balance sheet. And to put it bluntly, it's not just a pump and dump scheme to get rich quick. I think in most bull markets, the bad element of any business comes to the forefront. I think that's certainly been the case in the U.S. recently, second half of this year, with what I would call the digital asset treasury case, which was founded with Bitcoin treasuries. So I think that's the most important thing for me, is knowing that they're actually intending to do what they're telling investors they're going to do. I think beyond that, I look for cash leakage. And by that, I mean a lot of these businesses have historic operating businesses. That requires operational expenses. So how much of the money you're raising is actually going towards Bitcoin? The answer is never 100%, because you're paying investment bankers, lawyers, various fees. So it's never 100%, but you want to know that there is minimal leakage so that as much Bitcoin as possible goes to the balance sheet, and you can accrete the value of the company as the price of Bitcoin continues to increase over the long term. I would say those are the two main things that are most important to me when I'm looking at an investment opportunity.
How about you, Michael?
Yeah, I think, if you look at it from the legal risk perspective, the number one principle for public capital markets is disclosure, disclosure, and disclosure. Again, it goes to the point about the management team, what the strategy is, whether you can trust that. And I think that's consistent with what we just heard about the fundamental principles of Bitcoin. Don't trust, verify. The ultimate verification is the disclosure to the market. And then the other thing I think that is really kind of critical from a structuring perspective is the extent to which institutional investors are comfortable with the level of regulatory compliance that the organization has internally. There are a lot of risks associated in people's minds with cryptocurrencies, particularly around cybersecurity and in financial fraud. And the more you can demonstrate that you have a good relationship with the regulators, the more there's going to be that confidence to invest in a public Bitcoin treasury company.
And Pascal, I know you work with a very traditional financial institution, a traditional bank. Maybe give us your insight into how a very traditional organization like that would look at Bitcoin treasury companies.
Yes, exactly. So at our bank, obviously, we've been following the space for sure. We haven't done any investments just because we are very traditional, as you said, and it's always like security over returns. That's sort of our motto that we have at the bank. But then again, I mean, if we look at treasury companies, I think we have to look at them quite closely, because they could potentially turn into our competitors further down the line. Everyone has been speaking about, like, are these the future banks? So that's why we are looking at them. And I mean, in the end, just people from the investment team I work in, we've checked these things out. And one thing that stuck to us out is really that they are ultimately a leveraged play on Bitcoin, these treasury companies. And so you actually want them to have leverage in some short form or another. So you want to look at this, how do they create the leverage, where does it come from? And mostly then it's then also through different products that they're issuing, these preferreds, convertible notes that they're putting out there. And so you want to look at this as well. Is it sustainable, what you're doing there? Are they maybe even raising something like my colleague called it a strategic fiat reserve? Well, we all have a Bitcoin strategic reserve, but if you are on the Bitcoin standard, like these companies, you want to maybe have this strategic fiat reserve. And so ultimately it comes really down to how are they leveraged, but then not to the extent that it's sort of threatening their business model. And that's what we're trying to track closely, which is also quite hard at this point in time, because a lot of things are still missing out there. But that's probably how we would approach it from our bank.
And one thing I'll layer on in addition to all of your comments is something that we look for in terms of investing in these types of businesses. One is very, very important is custody. You want to make sure the custody provider that's holding the Bitcoin for something that could grow substantial over time is a very secure, well-known, prominent, with the right cybersecurity in terms of the custody. You want to make sure that the leading team I believe, has to have a really good built-in marketing machine, because how are the public markets going to be aware of what the value is and their unique value proposition to the market without raising that awareness? And the last thing that we look for a lot too is, what's the strategy and how quickly can they double their Bitcoin stack? Right? So it's a lot easier for a company to go from 1,000 Bitcoin on the balance sheet to 2,000 than it is for strategy in the United States to go from 642,000 to 1 million, right? Much more challenging to do that. And so what we're seeing in some of the emerging markets is the businesses that lead and execute effectively on it and have the ability to double that stack quicker of Bitcoin, the markets may pay a premium for that, which could actually expand the premium, or the MNAV as it's known, on top of the Bitcoin balance. So we're seeing a huge increase of these companies pop up all over the world. From your guys' perspective, and Pascal, we'll start with you, what do you find interesting about what's going on with these businesses in Europe?
Well, I mean, yeah, that's the thing. I can talk to Switzerland, obviously. There, the structures like these preferreds that are now very popular in the US, it's not really a thing as of yet. And I'm not sure about the other countries in Europe, but I mean, in Switzerland, traditionally, our stock exchanges, they have never really issued these products or listed them then eventually, you know. And so I think there you would have to, or there would need to be a mind shift that would need to happen for people then also for investors to really access these type of things. And then I think the legal structure, as you mentioned, is also somewhat different, you know, tax-wise, maybe preferred shares are treated differently. And in general, I guess Swiss people they're really conservative and traditional, and that's why they would have to get comfortable with this. I guess in the end, there would be a lot of demand, especially coming out of Switzerland, because if we look at fixed income in Switzerland, I mean, it's just hard. You know, you get paid almost nothing, and at some point you had to pay additionally, you know, because of negative interest rates. So these things are definitely interesting, and that's why I think you will see demand coming out of this. We've seen it with Strategy, who's now sort of expanding into Europe and other places at that. But I think we're still very early, and I guess most of the investors that we talk to also at our bank, they don't have it on their radar. They're not familiar with this at all as of yet.
Michael, what are your thoughts?
Yeah, I mean, we're obviously talking about institutional money here, and I think when you look at Bitcoin, the challenge for institutional money is whether they can actually access it from an investment perspective. You know, they may have problems with the banking side of things in terms of investing directly in Bitcoin. They may have tax wrappers that they need to use. They may have fund management mandates that they have to comply with. But the one thing in Europe as a very well-developed financial market is that public equities, the public debt is very well understood. It's very highly regulated. There's not a new system or with the regulation that you need to put in place in order to create the products and list them and invest in them in the same way as you would with ETFs or other Bitcoin derivative products.
Yeah, I think what excites me is, A, the prominence of fixed income. As you mentioned, I think that this is a great product for fixed income. I think Strategy's pref issuances have been incredibly successful. I think, you know, given the very low interest rates, much lower than the United States right now, here in Europe, I think that's a really attractive opportunity. And that's a huge pool of capital to flow into purchasing more Bitcoin, which certainly will help the price over there on the side stage. So I think that's very attractive. The other thing that I like is it's still new here in Europe. So you can learn from, candidly, some of the things that went wrong over the summer in the United States, and you can put those lessons to work here in Europe. And I think the last thing is, because it's new, there are new markets that haven't already had a MicroStrategy come to the market in them, right? So here in the Netherlands, I think Treasury has an opportunity to be the MicroStrategy or the strategy of the Netherlands. I think that's an attractive opportunity that just doesn't exist in the United States. There already is a strategy in the United States. So I think all of these new markets that haven't been as saturated as the United States is a really attractive opportunity for both retail investors, fixed income, institutional investors, and also the sponsors themselves that are bringing these opportunities to the market.
Very good. So one of the interesting things about Bitcoin treasury companies specific to the public markets is that these assets can trade at their Bitcoin balance. They can trade at a premium to their Bitcoin balance, which is referred to as the MNAV, or they can trade at a discount to their Bitcoin balance. And that really has to do with what's going on in the market dynamics, what are the short interest on companies when you start to get more of the advanced derivatives trading that's going on. Generally what we've seen historically is that with Bitcoin treasury companies on the downside, they can go down to 10 to 20% below the Bitcoin balance, but the upside potential has been significant. We've seen some companies trade at 1, 2, 3, 4, 500% over their Bitcoin balance, depending on the market conditions. I'd love to learn from you guys, from your perspective, what creates that mechanics of the discounts versus the premiums, and walk us through, let's start with you, Rob, walk us through how that actually works.
Yeah, so famously, strategy trades at a very large premium to its Bitcoin balance. And if you ask people, what is strategy, and you talk to somebody that's on Wall Street, they would say you give them $1 and they get the credit for having $3 or $4 on the balance sheet when they turned into Bitcoin. That is an anomaly, really. If you look at the number of Bitcoin treasuries that were raised in the United States this year, my guess, for ones that have had the float come in, and by that I mean they usually raise a large amount of equity capital. That capital, as Michael knows, has to be registered for resale in the United States. So that float, that selling pressure doesn't exist until the registration statement is effective and that resale becomes possible, right? So you look at these companies, they announce they're going to raise $500 million, whatever it is, to buy Bitcoin. The stock rips. But the stock rips because there's no float. There might be 2 or 3 million shares available, and there's 10 million shares of buying pressure, and supply-demand economics say the price goes up because there's more people that want the stock than is available. Then when the hundreds of millions of shares that are coming to the float from the raise come in, the price goes down to whatever price those investors bought it at. That's just logical supply-demand economics. So when you ask me what drives premiums, typically it is retail investor excitement following the announcement of the Treasury strategy, but prior to the float coming in. So it's an artificially constrained float with demand that people think, the Treasury strategy started immediately. So a lot of these companies might go out and buy 10 Bitcoin, 20 Bitcoin, but they're raising $500 million to go out and buy, hundreds of thousands of Bitcoin over several years. And, people think, all right, they announced this, they have the $500 million today, they're buying Bitcoin today. Sometimes that's true, sometimes it's not, it just depends. But I think that's the key dynamic when you see these really dramatic stock spikes. It's really because there's an artificially constrained float, and then when that float comes in, with the sole exception of strategy, to the raise, every single one has come down as that selling pressure comes into the market. So that's the biggest key, and I hope people leave with that today, because as you go home and you invest in your own portfolio, just keep that in mind. You can get caught on the wrong side of that trade.
Michael, is there any mechanics that you really look at in regards to that?
Yeah, the thing I would say is this isn't something that is unique to Bitcoin treasury companies. It's true of investment funds, particularly in sectors like infrastructure. It's true of REITs. So, some of the solutions and strategies that those entities are using is going to be an important part of how you deal with that. I think one of the really positive things for Europe, and I include UK in that as well, is that there's been a lot of focus on getting retail into equity and other types of capital market products. If we can unlock that and we can get that confidence from the pension funds in terms of investing in these types of companies because of the strategy that's being pursued by management, but also the way in which the regulation protects those kinds of investors, then that will really unlock that retail investment element.
To me, ultimately, this MNAV is really like a sentiment indicator in the sense of as you said, it's not particular to Bitcoin treasury companies. We had it back with these tokens, ICO boom, we all know. And there we had these ridiculous prices for these tokens, also because of the dynamics that you described. The more interesting question for me long-term is is there a possibility for companies to sustain an MNAV above 1 in the long term? Is it justified, And the way I rationalize this is that I say, okay, yes, these companies, they are sort of Bitcoin, I'd like to call them, or a friend of mine also calls them Bitcoin arbitrage companies. It's not like they're arbitraging, and what are they doing? They're trying to get as many Bitcoin as fast as possible, also go as hard as possible or go home. This is sort of how you can describe it. And then if they can sustain this, and that's what you mentioned with the data replace metrics that you can look at, if we can really keep it up, then maybe such a MNAV above 1 is justified. I suspect that you're going against gravity here, and that this is really pulling you down, and we will see. I think the jury is still out, but I guess from our perspective, to finish this up, once these companies really go below 1 NAV, then I guess it could potentially be an interesting investment opportunity because it can outburst to the upside as it can to the downside, and that's certainly where we as institutional investors would then look even closer to these plays.
Just if I can build on that for 1 second, I 100% agree. I think MNAVs will consolidate down to 1. There's no reason with the number of Bitcoin treasury companies that exist in the market today, particularly in the United States, any premium should be associated to MNAV. It just isn't logical.
I agree with that. So historically with the Bitcoin cycles, we know that they go through these very structured 4-year cycles based on the Bitcoin halving. And when you look at performance specific to Bitcoin, the best time to be exposed to the space is throughout the 12 to 18 months following the Bitcoin cycle. And if you're starting to build a position before, about 6 months before the cycle. So that's purely from just a standpoint of that's where there's the best performance, what we've seen throughout inception. Now, I guess the question is, will we continue these 4-year cycles? And if so, how do Bitcoin treasury companies operate throughout the periods of these 4-year cycles? We'll start with you, Rob.
Whether or not there's going to continue to be 4-year cycles, I'm probably not the most qualified panelist today to give an opinion on that, but I will tell you that I believe the volatility of Bitcoin is coming down, and I believe the price spectrum of Bitcoin will continue to consolidate. I think even in the most recent pullback, to see Bitcoin really hold that floor at $100,000, I think is a great sign. If you're a Bitcoin enthusiast, I think if you're just a market participant, it's a great sign, because as Bitcoin becomes more diversified in ownership, and the large whales, if you will, that sometimes dump Bitcoin into the market, and that can negatively impact the price. You don't see things like that happen in the precious metals market, gold, silver. That just doesn't happen anymore because ownership is so diversified. As Bitcoin adoption continues to, disperse into the market and ownership becomes more diversified, I think that the drawdowns will become more consolidated. The volatility will come down. I think that's great for Bitcoin. I think it's great for the market. Whether it happens in 4-year cycles or not, I can't say, but you'll continue to have bear and bull cycles as you will with any asset. But I think it's great that you're seeing that volatility come down, and I think that will continue.
Michael?
The legal answer is probably risk disclosure, making sure that people understand what is likely to happen to these kinds of, the share price, but also the derivative products that are being potentially issued off the back of this. So I think that would be the main point. I'm not qualified to give investment advice, so this definitely isn't investment advice, but clearly when Bitcoin is cheaper, that's an opportunity for Bitcoin treasury companies to scale up. And we may see that scaling up in terms of then going out, raising capital in order to buy Bitcoin. We may see consolidation through M&A.
Yes, in regards to the cycle, we all don't know whether it's over or not. I guess everything moves in cycle. That's how the world just works. Maybe it's sometimes a little extended or shortened. I would assume that Bitcoin will still sort of behave like this, but as you mentioned, the volatility is coming down just because of the institutionalization. Right now I'm very much amazed, Bitcoin is still above 100K, and despite the very much OG selling that we've been seeing lately, and coming from a bank again, I can really speak to this. We do sell a lot of Bitcoin for our clients, so sorry, but we see it happening, and so in the end, how should treasury companies manage or navigate an upcoming bear market, if we want to call it like this? Eventually the strategic fiat reserve that I mentioned is certainly something which is interesting, and I guess something that we're seeing as well, and I guess when the bear market accelerates, we will see it even more intensely, is like Bitcoin treasury companies that are also in talks to us or with us about putting their Bitcoin to work to potentially produce a yield on top of Bitcoin, to then again have some more dry powder or just a buffer to potentially fund their dividends and stuff like this. And so we are in talks with these type of companies, and I think this will only accelerate in that sense.
Very good. So as we close out, the last question I want to discuss is, where do you guys think we're headed? So we kind of see what's occurred so far. A lot has changed in this particular segment of the market over the last 6 months with all these companies coming online. I think we have a lot more companies that are going to come online around the world. But what do you think is the next step for Bitcoin treasury companies? Let's go Michael, Pascal, and Rob this time.
So I mentioned M&A. I think that is likely to happen in the next couple of years, maybe even next year. We'll see some of the smaller Bitcoin treasury companies being consolidated. I think it's a good way to acquire the underlying asset, but it's also a great way for a management team to show how active they're being in the market. I think the other thing that we may well see, we're really talking about the financialization here of Bitcoin, and what we may well see is that there's a correlation between Bitcoin prices and public equity prices, rather than Bitcoin being a kind of counter-cyclical hedge. And if that happens, then I think it only strengthens the case for investment in Bitcoin treasury companies. They can buy during the lower prices, and then a wider range of investors can benefit from the equity upside.
Yes, I mean, just to add quickly, I mean, what I already said, it's really about putting these Bitcoin to work. I think that's probably what's next, I guess, because for me, it's really this third phase in all of this. You know, first you were selling equity, then now you're trying to do it with convertibles or preferreds, and then at some point, maybe you also want to generate yield on your Bitcoin, and I think that's definitely going to be the next step. And if you do this cautiously, I think it can also be quite positively done, and so I'm excited to see this happening as well.
To echo Michael's comments, I absolutely agree. I think M&A will be huge. I think consolidation in the U.S. market is absolutely coming. There are just too many Bitcoin treasury companies right now, for the market. There's just not enough demand to support all of them. I think one thing that's interesting that I was hearing a lot about this week, sort of for the first time, is will companies, either because they have too much leverage or because they're trading at a discount to their NAV, will those companies liquidate Bitcoin to either pay the debt that they can't otherwise service, that makes them a huge M&A target, or will they actually liquidate a piece of their Bitcoin reserve and take that cash and go and buy stock back because the stock is trading at a discount to the NAV? So you would be buying, better than 1-to-1 on your stock, and therefore your Bitcoin per share would actually go up. You didn't hear that in the market earlier this year because there was this cultural phenomenon of I'll never sell a Bitcoin. It'll be interesting to see if that changes, and I think if it does, there's some really interesting opportunities there.
That's wonderful. And the one thing I'll leave everybody with, I think, is we got very mechanical in terms of Bitcoin treasury companies, but if we look out into the future, at the growth rate of artificial intelligence that's occurring today, and with the virtual agents and the virtual labor that's occurring in the market that will grow by tens of billions to even trillions in the future, what if one of the opportunities for Bitcoin treasury companies is to serve the ever-growing market? Because a virtual agent performing tasks for us in the virtual world can't set up a bank account, but they can exchange in an asset like Bitcoin. So what if one of the goals of Bitcoin treasury companies long-term is to enable these virtual agents to have traditional financial services like we experience in the physical world in the virtual world as they grow over time, with a mixture between what they do and with decentralized finance as well. So I think the opportunity is huge as these continue to grow over time. I do believe we're building the future of Bitcoin-denominated financial institutions, and to live in a Bitcoin-denominated world in the future, we need to have the same kind of financial services that we have in the world today in both the physical and the virtual world. So thank you very much to all of our panelists. I appreciate you joining me today. Let's give everyone a round of applause.
Something bold is coming. Introducing the Bitcoin Whiskey Collection, made in collaboration with Bitcoin Magazine. A collection of 2 premium whiskeys made for those who never sell short. The luxurious Bitcoin Reserve with a custom minted Bitcoin coin. And the ultra-rare Satoshi Reserve, with only 999 ever being produced. Get yours before they're gone. Now accepting Bitcoin payments at goldbarwhiskey.com.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, powered by Treasury. To my left, we have Maurizio Grazioli. How you doing, everybody? Host of the Mr. M podcast. To his left, Bram Kanstein, host of the Bitcoin for Millennials podcast. And to Bram's left, we have Christine Lee, crypto journalist extraordinaire, and I'm Frank Corva, Bitcoin journalist. Gentlemen, I know that we're maybe about an hour away from the two of you sitting down to speak with the Winklevoss. I think you'll be helping him out for his podcast, the Bitcoin Millennial podcast.
Co-founders of the Gemini Exchange.
Co-founders
You see them right as you get off the airplane here in Amsterdam.
That's right.
Yeah, they're everywhere.
The Gemini Exchange, also the Winklevoss of the social network, Facebook fame, right? But they're Bitcoin OGs. Maybe some people don't know that. Been in Bitcoin since the early days and buying a lot of it back on those early days. But anyway, what are we thinking about talking with the Winklevoss about? And also, the Winklevoss will be speaking here on the main stage too. Mm-hmm. What do you think we're going to hear from the Winklevoss today?
Well, what I really like is that, they, like you said, they had the Facebook settlement. I think that was like $70-80 million or something. And around that time, a bit later, in like 2013, they bought 11 million in Bitcoin. I don't know exactly what the price was, but I think it was like $120-ish. And at one point, they actually owned 1% of the supply. And what I really like about that boldness is basically they were so like in the news. There was like this whole thing, and then that kind of like died down, and then they went all in on Bitcoin when everyone basically was laughing and was thinking like, hey, what is this thing, right? What a stupid thing to blow your money on. Yep. And so I want to ask them about them, like where did that conviction came from? Because I've been in Bitcoin since 2013. I bought at 300. I sold everything at 4,000 because I didn't get it. But they actually held true, right? And I think, it would be interesting to kind of like talk about what was their big picture then and where are we at now.
I got interested in Bitcoin because at the time I was working for a traditional news organization, and they were the ones who were really pushing for a Bitcoin ETF all the way back in 2013.
Right. Yeah, that's right.
And so when they started doing it, it kind of gave me a little legitimization because I thought, they really want to institutionalize Bitcoin, bring it to banks, brokers, etc. Yep. And so that's what got me diving into the rabbit's hole, so to speak. But they never got their own ETF off the ground, but they are in the behind the scenes. But what are they doing in Europe? I don't know. Is there a sense of what's happening in their expansion plans here?
Yeah, also I wanted to say about the ETF because it must be interesting from their perspective to see what they think about it, because they have tried indeed years ago and they've got declined. So it'll be interesting to see on that angle as well. From my side, I would say it's going to be super interesting to be on the other side of the camera for once and just relax and enjoying the interview, because usually I'm the one interviewing.
Doing the interviewing, yeah. Some thoughts on that, actually. You've done many episodes of the Mr. M podcast right now. We were talking about this a little bit before. We all have these sort of amazing jobs of interviewing interesting people all the time, doing really cool research. Some big takeaways from maybe your top interviews of this year.
Well, definitely one with you.
Uh-oh.
Guys, you go
look
and
at
watch
this guy.
it.
What's this guy doing? What are you doing over here?
I got some.
But anyway, some other guests that you've had on, some big messages.
We actually had one not long ago, meet Bram and Robin, so 3 podcasters together, because we never had that kind of moment where we can tell about our lives and our stories, because we are always interviewing other people. It was actually interesting to speak to Bram and Robin and see their perspective, because I follow them aggressively, but I only see what they ask to other guests. So having them on the show and discussing how they feel about the market, what they've learned, experiences, it's actually really interesting. So I would say that.
On that note, we are heading back over to the Treasury stage where we are going to hear more about how Bitcoin is hope for Africa. And we'll be right back here at the live desk after this.
Good morning. Guess what? Africa is finally at a Bitcoin event, a Bitcoin global event. So, hello world. This is the first time an African Bitcoin treasury company has hit the stage. So we're very happy to be here. And I was listening to all the presentations before. I was involved in some of the things yesterday. And what I'm going to present to you today is how we see Bitcoin. And what are the things that we say about Bitcoin is Bitcoin was made for us. You guys talk about it from a speculative perspective. You talk about it going coin go up, coin go down. For us, Bitcoin is hope. Bitcoin means life or death. Where we come from, when things don't work, people die. When payments don't work, people die. So Bitcoin for us is something that's come along that's finally solved the age-old problem that we've had in Africa. Colonialism. Things have extracted things out of our continent consistently, and finally we have something that is not extractive. Finally, we have something that we are in control of. Finally, we have something that can make us sovereign. And that's very, very exciting. So let's climb into this. I love this because this is a depiction of what is happening with Bitcoin in Africa. All of you, I keep hearing, when are we going to see Bitcoin as a medium of payment? When are we going to see Bitcoin is a unit of account. Let me tell you something. Come to South Africa, come to Africa, and you'll notice that people are utilizing Bitcoin today to pay for things. Young people are talking in Satoshis. They don't talk in Bitcoin. We keep saying Bitcoin, Bitcoin, Bitcoin. When you come to Africa, people speak in Satoshis. People accept Satoshis for payments. We are in the world, until Jack Dorsey just did what he did a couple of days ago, South Africa has more merchants that accept Bitcoin than anywhere else in the entire world. We have more people utilizing Bitcoin as a medium of exchange on the African continent versus anywhere else in the entire world. Why is this? When you guys talk about debasement, you talk about debasement in like, it debases 3% every year, etc., etc. We talk about it debasing 3% every day. That's the world that we live in, right? So if you were living in a world like that, and a thing like Bitcoin comes along, it's a lifesaver, it's a life raft. You grab onto it. And you don't care whether it's going down 20, 30%, 10%. Those fluctuations are incomparable to the world from which we come from. Okay, so we love Bitcoin. Bitcoin is made for us. So let's climb into it. So a lot of you have been lied to. So the map that you look at in the world, Africa is depicted correctly, but every other continent is not. Okay, so if you take a look at the map, that's what I set up there, Mercator's maps. That's a lie. Okay, you could take the United States, you can take India, you can take China, you can take Europe, you can take Greece, you can take Eastern Europe, and you can still have space if you shove them all into Africa. That's how big Africa is, right? We've got 1.5 billion people. We're the fastest growing human population on planet Earth, on aggregate. More than 60% of our population is under the age of 20. We're the youngest in the entire world. Why do you think people adopt Bitcoin so rapidly? Here's the stats. We cover more than 20% of the Earth's surface, right? 54 countries. I put there at the bottom, we won the Sevens rugby, and we've won more rugby World Cups than any other country in the entire world. Okay, just as an FYI. And I just said, I'm sorry, France, for what happened the other day. Again, we hold, key thing, David Sachs, Elon Musk. They're from South Africa. So sorry, not sorry. Yeah. So Africa is underestimated. And I think what's very exciting for us, Africa Bitcoin Corporation is not a South African play, it's Africa. So it's a Pan-African play. We're listing on the Johannesburg Stock Exchange, and we're addressing the Bitcoin opportunity Pan-African. Okay, we do listing in every other African country when we're creating rails and railway stations to have all that fixed income across all those 54 countries exposed to Bitcoin, which is very, very exciting for us. Because in Africa, a person that walks around in a township has the same issue as a small and medium enterprise as a fixed income market capital allocator in Africa. So we're very excited about the opportunity. We think this opportunity is greater than anywhere else on the planet today. And I'll explain a little bit more about that in a second. Here you see the adoption. The adoption rates are extraordinary. Money Badger announced the other day 650,000 merchants lit up to accept Bitcoin. You can buy Bitcoin, you can buy fuel, you can buy soda pop, you can buy chappies, which is bubble gum, you can buy floss, you can buy shampoo in a deep township with Bitcoin across Africa. It's quite extraordinary. I love those kids up there, by the way. They're being taught Bitcoin, and on the coloring books, one says we are all Satoshi except for Craig Wright. I love that top left one. Right, we're seeing that. So you see emancipation. You see young people, right? In Kenya, the uprising in Kenya, and Tunisia, and Tanzania the other day. You're seeing kids rising up, and you can see their ages are early 20s, and they're Bitcoiners. And they're overthrowing governments. M-Pesa, right? Bitcoin, M-Pesa, that interlock has happened now in East Africa. Machankura, I don't know how many of you have seen this, but Machankura is an application that allows you to buy and send across SMS or MMS. So we don't need the internet. So when people say the governments will take over the internet, it's okay, we'll do Bitcoin via SMS. Smartphones, little feature phones, not expensive phones. It's quite extraordinary when you go to Africa and you find an old lady and she's selling nails and corrugated iron and shampoo and soap, and the only thing that she'll accept is sats. She doesn't want your US dollars. She doesn't want your euros. She wants sats. Why? Because it's money that's hard. And when you give people hard money, then people become resilient. then people build confidence, then people have hope. The reason we are immigrating from Africa, going across the Mediterranean to get to your European countries is not because we don't have talent, it's because we don't have hope, because the money is broken. That's what's happening. But thank God for Bitcoin, right? Let's keep going. This is a European tourist that went to one of the Kenyan villages, an English guy. He landed there and he wanted to pay in pounds, he wanted to pay in dollars, and they said, no, we don't accept that money here, we only accept Satoshis. He didn't know what Bitcoin was. He got orange-pilled, and at the end, when they got done with him, he was dancing with everyone and he was given a Bitcoin book. I think it was the Bitcoin Standard. So a guy from London goes to Kenya's rural villages and leaves with the Bitcoin Standard as a book. That's what's happening. Our people have woken up, and that's an extraordinary thing. And what we're seeing is a couple of things. So forgetfulness to culture. We're seeing from surviving to doing what we love, from immigrating to staying local. So ignore the text on the screen. One of the things I did was I spoke to some of the circular economy people that we have in South Africa. I spoke to some of them and said, what does Bitcoin mean for you? And you know what's quite extraordinary? Is we will see for the first time a black individual competing on the global surfing stage because of Bitcoin. The kid was paid in sats, he gets paid in sats, and he can finally compete with the Australian kid that has Aussie dollars, or the USA kid that has United States dollars. He could never compete having South African rand. And for the last 4 or 5 years, he's been stacking sats, and there's 3 of them, and they're coming along. And I think in the next 12 to 14 to 16 months, you will see the first black professional surfer. And when you look at his surfboard, you'll see a big B on there. And when you speak to him, he'll tell you it's the reason he could become a professional surfer is because of Bitcoin. Bitcoin and the growth of Bitcoin allows him to pay for his tickets at all the events globally when he competes. He could never have done that with any other fiat currency. He can finally do it with Bitcoin. We have circular economies in South Africa where people only accept Bitcoin, 400,000 people. And you know what the net effect of that is? You know what happens when people only accept Bitcoin? The first thing we notice, the amount of trash that emerges out of that township drops dramatically. The amount of dirt that comes out of the township drops dramatically. And the reason for it, no waste. You know why? People don't use their money to buy Temu and Shein shit, or crap. What they buy is they buy things of quality because their money is hard. When you have hard money, you only depart with hard money for qualitative services. So what happens is we see the merchants, the service providers in those townships, the quality of the service that they have to provide has to dramatically increase in quality. Because the people that have to depart with sats are only going to do that when that thing is of a certain quality. What we also see happening, gangsterism and crime collapses in those communities. And the big thing is, those communities have hope. It's quite extraordinary to see some of those people being put on Bitcoin stages, on the smaller Bitcoin events in South Africa, and they get up on stage, they've never gone to school, and they're willing to do a keynote. Because they've got confidence. They've got hope, because they've got hard money. And that's what's happening in Africa today. We're seeing the emergence of circular economies. You know what's extraordinary? Those black communities adopting Bitcoin are infiltrating the so-called upper class Caucasian communities. And so in the garden route in South Africa between Cape Town and kind of Mossel Bay, what you see happening is this emergence of Bitcoin communities that are not just townships, it's formal economies that are switching over to Bitcoin, markets that only accept Bitcoin. And it's being infiltrated because people are starting to understand. So it's kind of a bottoms-up thing for us. It's not a tops-down thing that's happening in Africa, which is quite extraordinary. And the big thing that we're noticing, people don't leave their communities. Young people don't leave their communities when they're on the Bitcoin standard. Why? Because they got hard money. And you know what they tend to focus on? The founder of Machankura, the SMS Bitcoin guy, number one observation from him, his app's being used by over 80,000 people in Africa to send and pay with Bitcoin over SMS. Number one observation from him, the young people don't leave their townships. They don't leave their communities. They start focusing on culture. They start focusing on history because they've got time. They're not panicking anymore. They're pausing and thinking about their context, thinking about who they are, what their identities are. These are the attributes of hard money. And it's playing out in Africa today, which is quite profound. So, 3 things are happening in Africa. Perfect money. Another extraordinary thing is artificial cognitions, AI. The talent in Africa is extraordinary. The amount of small and medium enterprises in Africa doing extraordinary things is quite profound. The problem with us is we've never measured it. We call it the informal economy. The informal economy in Africa, in South Africa alone, the informal economy, let me give you some perspective, is 30 to 40 times the size of the formal economy. Let me say that again. Our informal economy is 30 to 40 times the size of our formal economy. And it's pure cash. And it's sophisticated. We have human ATMs. We have people that, when I grew up as a young kid in El Dorado Park, which is a black township, I used to go at 11 o'clock on a Sunday night or Saturday night. I'd knock on a lady called Madums. She'd open up a window and she'd give me 100 Rand because my dad needed 100 Rand. And she'd say, remember, your dad has to come back on Wednesday to give me my 110 Rand. When I looked over her shoulder, on a kitchen table were mounds of cash piles. Right? That still happens today. We have people that have businesses that have so much cash, they build houses to put their cash into. They put their cash into houses. They don't put it into banks. It's too inconvenient. They don't want to pay the fees. So they actually build physical houses, double-story houses, beautiful houses, and inside there is just money. That's how broken things are. Now, when you go into that informal economy, you know how easy it is to tell them about Bitcoin? They get Bitcoin in 3 to 5 minutes. When you go to someone in Europe and someone in the United States that has a bank card, they've got PayPal, they've got all these things, you sit down, you have to tell them about Bitcoin for weeks, and it takes them 2 years to get it. You walk around in South Africa, you tell someone about Bitcoin, they get it in 3 to 5 minutes. They understand debasement, they understand the convenience of hard money, because they're living with all of these burdens today associated with fiat currency. But there's an emancipation, and that emancipation is digital capital, digital intelligence, and what we're seeing in Africa is quite extraordinary is private credit. Private credit is one of the fastest growing instrumentation of financial services. We see it in the world, but in Africa it's really accelerating, i.e. providing funding to small and medium enterprises in Africa. That's accelerating very, very quickly. So we built a business around that. I'm looking at the clock and I'm like running out of time. So we built a business around that. So our Bitcoin Treasury company, let me get to it. It's listed on the Johannesburg Stock Exchange. We do listing across multiple exchanges across Africa, Acuus, OTCQB in the United States. It's live, it's real. It's BAC back on the JSE. You can trade it today. But the difference between us is we are a Bitcoin Treasury company with a private credit engine. Let me show you what it looks like. Let me get there quickly. I'm going to stick on this slide. I'm going to end with this slide. We have an iceberg of opportunity in Africa. On the top is the African Bitcoin Corporation with a traditional Bitcoin Treasury company on the surface. That's what we're showing you. When you go to africabitcoincorporation.com, that's the first thing you see, the analytics, the MNAV, the yield, the BTC yield. You know what's different with us? We have what I hope all the Bitcoin Treasury companies will have. We have a metric called human yield. And that's what we need in Bitcoin. I'm here to remind you all that this is not just about coin go up or down. This is about the impact that this can have on humanity. That's the objective. That's the conviction. So if you take a look at the bottom of the iceberg, we're going to build Bitcoin up. It's going to give us muscle so we can fly to Switzerland, do a loan at 4 to 5%, take that fiat back to Africa, deploy it in our private capital business at 18 to 24%, and with that ARB, we're going to shove it back up into our Bitcoin. And we're just going to keep building our Bitcoin, keep building our Bitcoin. So we're going to create this circular mechanism underneath our Bitcoin treasury that eventually does impact people employment, hope, right? If you take a look at our metric, 1 Bitcoin equals 5 jobs. So we have on our Bitcoin analytics page, 1 Bitcoin equals 5 jobs. That's our human yield. And as we grow our Bitcoin, that's what we're going to measure, is the impact that we can have on humanity, not the impact that we're having just on treasury and shareholders. Those things are good. Those things are important. And the problem that I have with everyone that gets up on these stages is that we only talk about what are these guys going to do with all this Bitcoin that they have. Like, what businesses are they actually going to do, right? Are they going to liquidate their Bitcoin? Are they going to do something? Hopefully, we are a representation of how you can approach this in a humanistic way. And I think we need to wake up again. We need to take a look at why we are here, why Bitcoin was made. Bitcoin wasn't just made for coin go up. Bitcoin was made for human freedom. Bitcoin was made for emancipation. It's happening. It's happening in Africa. And the Africa Bitcoin Corporation is taking our private credit business, which essentially is a human yield business, and we're taking a thermonuclear weapon called Bitcoin, and we're shoving it into that, and we're creating an impact on lives on a scale we hope none of you have ever seen before. And that's why we're here, and hopefully that's why all of you are here. And I want to remind you of that. This is not a monetary story. Bitcoin is a human story. For us, it's salvation. For us, it's a life raft. For us, it's hope. And hopefully you embrace our story. And thanks so much for your time today.
Welcome back to Bitcoin Amsterdam 2025, presented by Treasury. That was a riveting conversation about Bitcoin in Africa. Now, we're going to switch gears and we're going to talk with our latest guest. We've got Frank Corva, our Bitcoin journalist resident, as well as Pascal Hughley. He's a crypto investment manager from Archip by Marquis Baumann, which is a prominent crypto a bank in Switzerland, with a crypto arm that you're heading. Okay, so we just heard a bit about Africa. Let's turn to Switzerland right now. I'm really fascinated by how are crypto companies navigating the landscape in a very traditional banking system like Switzerland, and what kind of crypto companies you're looking at, or Bitcoin companies, and what's the risk tolerance there?
Yes, thanks for having me. Well, I mean, Switzerland has always been probably from the ethos quite open to Bitcoin, because politically we are sort of decentralized, we're well known all across the earth for being small, but then small is beautiful in that sense. And that's why I think it always resonated with us people. And so early on, a lot of crypto startups and Bitcoin people have come to Switzerland, which opened up these opportunities. And now we have official crypto banks, or like us, we are a traditional bank that sort of went the other way and are now increasingly in Bitcoin. And that's a revenue driver. And we, for example, one stat which is interesting, we were able to lower our average age of our clients by 12 years, and for us as a private bank, this is quite significant. And so I guess we have a lot of people from the Bitcoin space itself, but then also the traditional people are opening up. We call it pitching to the boomers, and they're seeing this ever since 2024. I guess they're more open because of the ETF, because of the institutionalization, and so we see a lot is happening, and that's why we're so excited.
Is your side more of wealth asset management?
Yes, exactly. It's an asset management bank in the end. It's a classical private bank where you have your own client advisor. You can talk to him, and then you can ask questions about Bitcoin. Usually it's more people. So it's very traditional still, but at the same time we try to incorporate all these new services that are coming along with Bitcoin, borrowing against Bitcoin, or just potentially exploring ways in creating yield on Bitcoin, because that's what people increasingly demand. And so we just try to merge these two worlds.
A quick follow-up, if you don't mind. So people sometimes refer to Bitcoin as sort of like a Swiss bank in your head, right? If you know these 12 words, like a Swiss bank in cyberspace. Swiss banks kind of have a monopoly on Swiss banks. So do Swiss banks want this bit? Do they sort of see that narrative? Is that attractive? Does it in a way feel like they might be replaced as a result of something like Bitcoin? Are they worried about that?
Well, I guess some of them maybe are. If you look to the biggest bank, this UBS, which is also well known across the world, they are still very hesitant, and they sometimes even say, well, client advisors are not allowed to talk about it. Then you have the more nimble ones, like we are, and the smaller ones, and then maybe also bigger private banks, we are family owned. That's why we're also driven by an ethos and a strategy which comes from the family, which might have understood what's happening here, and so that's why we can really push forward. And I guess in the end, we're seeing this across the entire financial system, and then particularly in Switzerland, it's always been a center of finance, but traditional fiat like margins and everything is collapsing, and so here comes this new world, a new wave, and I guess that's why we're seeing opportunity here. So it's probably both sides.
Are your clients mainly based in Switzerland or all over the world? And we've got about 30 seconds left.
Yeah, no, they're not all over the world, but mostly out of Switzerland and then Germany, other places in Europe. I mean, pretty open to all different types of clients.
All right, we're going to wrap it there. Our next talk will be on the state of corporate adoption. On the stage, let's have a listen.
Hey, how's everyone doing? It's great to be back in Amsterdam. My name is George McHale. I'm the managing director of Bitcoin for Corporations, where our mission is to accelerate corporate Bitcoin adoption. This is actually my 4th time here in Amsterdam. And I got to tell you, every time I come, you guys just love to remind me of the storied history of corporate finance here in the Netherlands, which I don't blame you. It's a great history. Actually, getting ready for this talk, I finally had the chance to read up on the Dutch East India Company, and wow, there's a lot going on there. I mean, you guys probably, if you're from here, learned about it in school growing up. It's a checkered legacy, to say the least. But just to catch you up, we're talking about way back in the 1600s, right? The VOC, as it was known, was the world's first publicly traded company right here in Amsterdam. It was known as a joint stock company, which is basically today's equivalent of a corporation. And the innovation of the structure that they created allowed for capital to flow into a single enterprise from many different owners, right? This was a brand new idea at the time. It was a publicly traded equity, first of its kind, that allowed people to spread risk and introduce the concept of a board of directors, so you can thank the VOC for that. And it also allowed them to finance their expeditions, their voyages all around the world as the Dutch dominated the spice trade. You know the history. Again, we won't get into all of the details, but what we're talking about is actually the structure and the concept itself. It was groundbreaking at the time. The fixed share structure made it so that the VOC was tradable equity, right, all around the world, on the world-renowned Amsterdam Stock Exchange, not that far from where I'm standing. And the point is that it's represented a brand new type of technology, right? First of its kind back in this day, 400 years ago, that we still benefit from to today. And as we talk about the state of corporate Bitcoin adoption, and I want to dig into why we've seen a wave of companies adding Bitcoin to their balance sheet, including a few of my personal favorites, just to point them out, the beautiful 40 or so that are part of the Bitcoin for Corporations network. Before we get into that, it's first important to understand how we got here, right? How fiat currency has tainted the purpose behind the actual corporate structure, and how Bitcoin treasury companies are different. So again, going back 400 years, the investment vehicle that the VOC introduced was revolutionary. But why? Like, why do all this? What's the underlying point of setting all this up and pooling capital and having a board and all that kind of stuff? I was curious, so I asked Google. I just posed the question very simply, like I do. Google, why do people even buy stocks? What are we talking about here, Google? Tell me, help me out. And here's what the bots had to say. People buy stocks. Yes, I'm reading to you from just the AI definition. Primarily, this is why people do this, primarily to build wealth over the long term. Everybody say long term. Join me. Come on, we're going to, that was lame. We're going to do that again. Everybody say long term. That's what we are talking about today. Here's the thing. We don't think about the long term anymore. I don't know if you noticed this. When I was little, we always talked about like saving and putting money in a savings account. We don't do that anymore. We don't do that anymore because our money is broken, obviously, which we're going to get into. But build wealth over the long term through capital appreciation and dividends, also outpacing inflation. I have a feeling that's a new part of the definition. Diversifying income and ownership influence in companies. Thank you, Google, make sure you're polite to your bots so that they remember you when they come into power. Okay, it's safe to say that enabling investors to build wealth over time was a key consideration of the joint stock company. In fact, the VOC returned dividends back to their shareholders in the spices that they procured their voyages, which I think is crazy. We don't do that anymore, right? Like, that would be weird if a box of cinnamon or whatever showed up every quarter. We return currency that instead is eroding. So the thing that's important to keep in mind is back when the VOC was around 400 years ago, there was this understanding that the money was going to hold its value over time, right? 1 florin equals 1 florin. No one doubted that. No one was like, oh man, this is going to lose value. People were just like, cool, that's my money. That's going to remain my money, and it's going to retain its purchasing power. But then we all know how the story goes, right? Even through Bretton Woods, 1944, gold standard was made official. And then what's the year that everything fell apart? Anybody? 71, there it is. We know there's Bitcoiners in the crowd. 1971, the social contract of hard money was broken, right? Nixon suspended the dollar convertibility into gold, and the link that held finance together for 400 years was over. It began to unwind, and the world stepped into a floating, policy-defined monetary regime. From then on, the value of money became fully untethered to anything that was predictable, like gold, and this shift would forever alter incentives for savers, investors, and for corporations. And that is where we find ourselves today. That concludes my history lesson. We are in the present moment where our money is melting. One of the most depressing charts that you've seen. We've gone from spices being sent back to us for our investments to literally monopoly money that's consistently eroding value. And I don't know about you, but I'm personally a little bit tired of just accepting this as a fact of life. I've been tired of this. It's the reason I got into Bitcoin. And I'm motivated to do something about it. Because I don't think that it has to be this way, right? Consider the impact on any market participant when cash is steadily losing its value, right? Nixon essentially created a hamster wheel effect, causing everyday people to constantly be chasing their purchasing power rather than build wealth with their earnings like we did 400 years ago. For corporations, that meant returning nominal cash to investors was no longer guaranteed the preservation of their value, which, if you go back to the definition of why people even buy stocks to begin with, made investing unattractive. So what is a corporate board to do, right, as the money is being debased? Well, I'll tell you 3 things that we've seen happen. The first, stock buybacks, right? We all know about this. It was normalized by the SEC in 1982. Corporations began to just buy back their stocks because why not? I mean, look at year over year, just the stock buyback continued to increase. They were chasing their purchasing power just like everyday savers. This hit its peak at 943 billion in stock buybacks in 2024, right? Just shy of $1 trillion in stock buybacks, and nobody receiving spices in exchange. The second thing that happened was the M&A explosion, right? Mergers and acquisitions absolutely blew up. Again, how else are you going to return a value to your investors? Why not increase your earnings per share by just acquiring another company that's doing well? And then the third thing was short-termism. So corporations began to think quarter over quarter instead of thinking over the long term, which was a huge shift in corporate behavior, right? When they were thinking about years-long voyages back 400 years ago. And so, again, I don't have to tell you this. You're all Bitcoiners. I feel silly even having to say it. Fiat encourages high time preference behavior, right? We know this. Fiat encourages high time. No matter how many times you've heard it, though, it doesn't change the fact that it's still true. And again, the water that we swim in doesn't change the fact that we're still swimming in this water that is like gross and needs to be changed. So what a time for Bitcoin treasury companies to enter the picture, right? Half a century into this experiment, and it's not going great, the experiment, by the way. The market is craving real solutions, not just temporary Band-Aids like M&As and stock buybacks. Corporate Bitcoin adoption is actually restoring the economic vision that existed up until 1971 by reintroducing a sound money standard. So this is the part of the talk where we shift into the positive, right? Bitcoin is the new hard money. Like the music starts picking up and it's like, tired of losing your hard-earned money? Like, Bitcoin is the solution. So not just digital gold, but Bitcoin is digital gold on steroids. And so far, institutions have managed to lock up 5% of the total supply, right? Which is substantial in the context of Bitcoin's 21 million supply, but in the context of the broader pool of assets that all around the world, it's actually not that big, right? 2 trillion is tiny compared to 1,000 trillion, which is, I think that's a quadrillion, which is a number that you don't hear a lot. But one quadrillion. So I mentioned earlier that our mission at Bitcoin for Corporations is to accelerate corporate Bitcoin adoption. And we're doing that in a number of ways, through education, through advocacy, through storytelling. But I want to be clear that the opportunity here isn't just corporate adoption for the sake of corporate adoption, right? We actually want to accelerate hyper-Bitcoinization as well. And I've recognized that the institutional demand ultimately leads to hyper-Bitcoinization. That's what I get excited about. That's why I'm here. That's honestly why I became a suit coiner, put on a suit. And, you know, I love being a suit coiner. It feels great. It feels good to be back on offense. That's what I like about it, right? I want to play a role in advancing this narrative. I want to play a role in us moving back to hard money in a way that feels active, not just passive. Actually, one of the things that I hate about sort of the mentality in the Bitcoin space sometimes is that we feel like Bitcoin is inevitable and we can just kind of sit back and let Bitcoin do its thing. I disagree. I think we need to actually stay on offense. And so we've grown this, the BFC network pretty rapidly. We're now approaching over 50 members spanning 15 different countries from around the world. And it's been a blast to have front row seats here to the recent wave of adoption. But again, I got to say, I'm not quite satisfied with the pace and the urgency and how fast things are moving. I'm not convinced that our efforts are actually keeping up with the rate of inflation. So I want us to dream bigger. I want us to envision a world where that little orange dot becomes much bigger. I took the liberty of editing this chart with my apologies to Jesse Myers, who made the original one. But I don't know about you, but I want to see Bitcoin explode in my lifetime. I want to see hyper-Bitcoinization actually start transforming lives. And so I think that it's our responsibility to find ways to move the needle and get back on offense. So some more propaganda from the Bitcoin for Corporations teams. We've had an incredible first year. And when I talk about going on offense, it means you can expect us to double down on our efforts as we continue to move along here. So we plan to bring things like the Bitcoin for Corporations Symposium to different parts of the world. We actually had it last night. I'm not sure how many of you were there, but we had a great time. And so next year you can expect to see us in DC, where we are having U.S. midterm elections. So one of the ways we plan on being on offense is to continue to advocate from a policy standpoint and influence the decisions in DC that impact our community. Another way, just really practical, as I begin to wrap up here, I want to share 2 tools that you can use today that the BFC team has been cooking up. The first is the Bitcoin Treasury Simulator. This is really cool. You can enter any ticker symbol. If you go to bitcoinforcorporations.com, you can choose an allocation and a time period, and then it'll spit out how much money any individual company has left on the table by sleeping on Bitcoin. And then it'll generate a nice little graphic that you can share on social media. So this is a small little thing that you can do to get back on offense and show that this is actually a real thing. Corporations can't ignore us anymore. That's the thing. We have strength in numbers. We have the narrative behind us. We have companies that are obviously executing in a way that is harder and harder to ignore. We have the facts on our side, and I think it's time for us to make this a matter of fiduciary obligation for these boards, for these CFOs that are sitting on their hands while the greatest asset in their lifetime is absolutely exploding. So we have the facts on our side. Don't forget that. Stay on offense. And if you want to go even harder, we have another tool for you, the Bitcoin Treasury Shareholder Activism Kit. It's now live, right? Now, this one is designed for current shareholders of public equities. And right now, it's focused on the specific SEC filings that allow us to actually take action and get a proposal on the company's next board meeting for an actual vote. Now, if you go back to the AI definition of why people buy stocks, one thing that we didn't really touch on was this last piece. It says having a degree of ownership and influence in companies. And this is what this next tool actually lets you do, right? So by having influence in a company, by being an actual shareholder, you have to meet certain threshold requirements. But assuming that you do, this will actually spit out an entire activism kit that you can copy and paste, that you can send in to the SEC, and you're leveraging SEC Rule 14A8. All right, so if you really want to nerd out, this is for you. But imagine what happens if every Bitcoiner who was a shareholder in Apple did this and sent a letter in and got a proposal, and we started just moving the needle. And look, Michael Saylor did a presentation recently to the board of Microsoft, and I think it was like 0.2 or 1% maybe of the shareholders were like, yeah, that's a good idea. So we got a lot of work to do. If Michael Saylor is pitching Microsoft and it's not doing anything, but we got to do something. We can't just kind of sit on our hands and expect this thing to happen without our participation. Again, if we want to see hyper-Bitcoinization move faster, we got to play a role. I want to close with one final stat and come full circle to the title of my talk, which is the state of corporate Bitcoin adoption. I realize that there's been a lot going on in this space, and you're probably not happy with some of the Treasury stock performance prices. I get all that. But this is the one stat I want you to remember to kind of just let you know where things are at. I think this is the only stat that matters, and it's that institutions continue to buy way more Bitcoin than is being mined quarter after quarter. Right? At a higher rate in Q3 than in Q2. And if you look back to Q3, it wasn't the most impressive quarter for the performance of Bitcoin treasuries. But meanwhile, institutions are stacking more Bitcoin than is being mined. Everything is being repriced in Bitcoin. Sentiment and price are, it's not sustainable with the current demand. And we are watching the active return of hard money unfold in real time. So thank you all for being here again. Taking the time to listen. Myself, the entire Bitcoin for Corporations team are here. We will be at the BTC Inc. booth. We'd love to meet you. We'd love to say hi, talk about how we can get you involved. I hope you enjoy Amsterdam, and I hope to see you at some of the after parties later tonight. Have a good one.
The euro is being debased. The ECB has expanded its balance sheet from $1 trillion in 2007 to over $8 trillion at its peak. Cash reserves are evaporating in real time. While US companies led Bitcoin treasury adoption, Europe is being left behind, unsure how to leverage or evaluate Bitcoin treasury strategies. We've built a tool to help you navigate the chaos. 21 days, 21 modules, from Bitcoin custody and compliance to the principles of Bitcoin and its use cases. Your complete guide to corporate Bitcoin education in Europe is coming soon. Sign up today and we will send you the guide the day it releases.
Welcome back to the Bitcoin Magazine News Desk here in Amsterdam 2025, presented by Treasury. On the desk, we've got Pascal Hughley of Merky Baumann. We've got Christina, she's the head of PR at BTC Inc. And of course, Frank Corva, the Italian stallion. Otherwise, a Bitcoin journalist known to those plebs. All right, so since, Christina, you are aware of what's going on the ground, you have some recent news that was announced on the conference floor. Tell us all about it.
Let's go.
Yeah, well, I thank you very much for having me here. And I had an opportunity to introduce the first master in Bitcoin for global audience with Hesperides University. So we are starting in spring 2026, and it's going to be a first serious, independent, and global degree fully dedicated to Bitcoin. So we're happy to be here, and we encourage everyone to go explore the website and engage.
Could I ask a quick question? So when you say master's, you're talking about an internationally recognized graduate degree in Bitcoin?
Exactly.
Okay, so this is something that you could say, I have a master. Technically, I have a master's in Bitcoin. You put this on your resume, and
yes,
that's what it is. Okay.
Yes,
very
and it's not just about resume and building your academic, but it's also opening the space for academic discussion, for serious academic discussion, and also creating a community of people and the future thinkers and builders in Bitcoin.
Love that.
We've been talking about how important education is, that people understand the technology of Bitcoin, decentralization, its benefits. And you say that there are already some students signing up.
Yes, there are first students signing up since today, and I'm really happy to see it. I also hope we are going to introduce this idea to many great educators and professionals in the space, and that will help us to build this vibrant educational experience.
Can I ask a follow-up? I actually want to pose this question over here. So if you saw someone saying I have a master's in Bitcoin. Is this something that would be attractive to you as somebody who's running a division of a bank where you're obviously doing Bitcoin investments? Is this something you would potentially look for in someone you'd want to employ?
Yes, I would assume so, yeah, because like I lecture myself as well on the side, but it's a small business school, and there exactly I have the problem that sometimes if you want to peer review studies and then where it's coming from people who are sort of self-educated themselves, it's just not as reliable, and especially to people like institutions like banks and others. I mean, also when you probably hire somebody, it's interesting to actually show, okay, this guy has done a master's, has done his work. Yeah. So, yeah.
Amazing. All right, folks, you heard it first here. You got to get a Bitcoin degree. All right. So next up on the stages, we got Treasury companies as the banks of the future. Khing Oei of Treasury is on stage now. Let's have a listen.
Khing Oei. Good afternoon, Bitcoin Amsterdam. Just amazing to stand here. My name is Khing Oei. I am founder and CEO of Treasury, and I grew up not too far from here in Amsterdam. And when we started putting together the whole idea for Treasury and everything, it was absolutely natural for me to also roll in the conference. Why? Because in Amsterdam, we have an amazing community with lots of passion, developers, activity for the Bitcoin ecosystem. So bringing it all together and seeing it together here is amazing. I hope you're all having a great day. Lots of interesting speakers. Later on today, I'll be interviewing Cameron and Tyler Winklevoss. Make sure not to miss that. And we'll have a fantastic session. I do want to tell you more about Treasury. And before saying that, I got to say also, we're all here for Bitcoin. Bitcoin first. And this location, this old sugar factory, built in 1863, to me, represents a lot of the original values and the spirit of Bitcoin. It's resilient, authentic, and it's there for development and innovation. So, Bitcoin, where it all starts. Coincidentally, Bitcoin was developed right around the banking crisis of 2008. $60 trillion of value was lost, and many people lost their livelihoods, jobs got lost, everything else. Why did that happen? It was a fragile banking system. The banking system was fragile, and how is it being fixed after that? Governments end up printing money. And I think that's kind of the issue we're seeing. We're in an environment right now where we're 17 years later, governments continue to print money, we're seeing massive inflation, and the banking system itself is not stronger. Arguably, it's even more fragile than before. So we went from banking system to governments printing money, inflating fiat currencies away, to a banking system which is still very fragile. Now, what happens when a financial ecosystem is built on sand? It looks quite firm from the outside, but the moment there's loss in trust or a shock, that's when it collapses. And that's again where Bitcoin comes in. Bitcoin and its core attributes are exactly the opposite. It's trustless, it's peer-to-peer, it's limited supply. We'll know there'll only ever be 21 million. And ultimately, it gets stronger and stronger. It gets anti-fragile as it grows and as the community grows, which is why we're here today. Now, we are here in Amsterdam. And there is a lot of symbolic value to that as well. In 1602, it was in Amsterdam that the first financial exchange was launched. It really changed the financial infrastructure of the world. Corporate finance, financing, public investment, everything changed. And it instituted a golden age, frankly, a golden age that happened in that period. And that's why Amsterdam itself is and should be at the forefront of the next digital golden age. The one that's driven by Bitcoin adoption, Bitcoin going mainstream, and capital markets innovation. We have everything here. We got fantastic infrastructure, market players, stakeholders, and hopefully businesses like Treasury and others that are building on top of this infrastructure. And that's why we're here in Amsterdam to not only symbolically, but also as a center to go into Europe. Because ultimately, we're seeing a massive positive development in the US, but in Europe, we are somewhat behind the adoption curve. We need to increase, and that's what we're here for. If you think about adoption, as we always say in Europe, in Bitcoin, we're still very early. So, to give you an example, some of you may have seen these stats, but they're truly impressive. We're talking about major technologies here that none of us here can imagine living without right now. The internet in 1990, 3% adoption. Online banking in 96, 3% adoption. Social media in 2005, 3% adoption. Where are we Bitcoin right now? 3% adoption. So to state the obvious, all of these technologies have gone to 100% adoption. And that's absolutely where we're going to go with Bitcoin. And all of us in this room here are part of this. We're early, we're still very early, but there's a lot more to go, 97%. Now, how do we get that mainstream adoption? How do we get that next 97%? What's the path that brings us there, right? We've gone on a super accelerated curve, but still, we're still very early. Well, that's where really Bitcoin treasury companies have the potential to help with that. Globally, but also in Europe. And I think that's very important to, that is really necessary to unlock the true utility and the true adoption of Bitcoin. Bitcoin being the protocol, and treasury companies being the platform to do that. It's really about bridging everything together, bridging Bitcoin with traditional finance, but also other ways. So, for a Bitcoin treasury company, which we are obviously, there's really two sides. On the one side, we raise financing. Who do we raise financing from? Very often from institutions, from individuals who don't usually invest in Bitcoin. Think about individuals. Many of you here will have wallets or other means of buying Bitcoin, but if you are very early, you don't want to make it too complicated, you want to buy some Bitcoin in your trading app, actually quite difficult to do. A Bitcoin treasury company allows it very easy access. If you're an institution, you're a portfolio manager, you want to have exposure, very difficult to do. And a Bitcoin treasury company is a very easy way to do that. So with this, as a Bitcoin treasury company, we're unlocking new forms of capital to bring in capital into Bitcoin. There's also existing Bitcoin holders that may want to invest in Bitcoin treasury companies because it allows them to actually amplify their Bitcoin holdings. So this is very important. There's a whole range of new instruments, a lot of financial innovation going on that actually are used to raise this capital. We're talking about equity raises through so-called at-the-market issuances. We're talking about digital credit, a very large market. And we're talking about Bitcoin-funded backed instruments themselves. One thing that's also interesting is there may be many people who may never want to invest in Bitcoin. But as these Bitcoin treasury companies grow, they get into different indices. And guess where pension funds invest their capital? In indices. So ultimately, everybody in our society will have exposure to Bitcoin through these Bitcoin treasury companies, where they want it or not. And the people who do want it, they can amplify it, they can lever up their exposure. So what do we do with those Bitcoin? Well, the most important thing that a Bitcoin treasury company does with Bitcoin is don't lose it. Keep it extremely safe with many, many security protocols and keep it there forever. The second thing is always hold it, never sell it, just like a true Bitcoin Ether goes with. And the third thing is something that's very much in development. There's different ways to apply your Bitcoin and generate some sort of income on it. I mentioned lending here. Obviously, the whole banking system in the world is a lending ecosystem. And there's ways being developed right now where, in a very safe and secure way, a Bitcoin treasury company can apply its Bitcoin to generate income and yield. So this elevates Bitcoin from a passive store of value, which is great, it's digital gold, but it's passive, to something that actually sort of passes into the economy and helps the economic ecosystem, which I think, unfortunately, we can all use right now. We need an active engine of innovation and economic participation for Bitcoin. So what we're really doing is building the financial markets for the future based on Bitcoin. And the way we think about it is in layers. At the core layer, layer one, is Bitcoin as digital gold. It's the Bitcoin treasury holdings, it's permanent, it's HODL, we will not sell it, but it's an extremely solid base. If you think about it, compare it to a bank for a moment, As you all know, banks have 20 times leverage. They got sort of a very thin equity ratio. And guess what equity ratio is? It's fiat currencies. Fiat currencies are devalued every day through the inflation we're seeing around us. Bitcoin will have digital gold. We believe it's going to go up. You don't have to believe that. It has gone up historically, as we all know, immensely. But there's enormous potential for the digital gold to be productive for the economy, and that's part. So that's layer one. That's the core. Layer two is the capital markets instruments that are now being traded. I just mentioned a few. Pref securities, digital credit, options. This whole layer. And this is how the financial ecosystem has been built up. There's always trading. There's always a buyer and there's always a seller. And Bitcoin treasury companies facilitate this active trading of instruments based on the Bitcoin layer. And the third layer is really a whole market infrastructure. Again, there's trillions and trillions being traded right now in fixed income, in currencies, in commodities, and all of these derivatives trade back and forth. Bitcoin is going to be the basis, will be the basis for a similar kind of trading with many instruments. If you think about it now, there's a yield curve on pref securities. You can trade that. You can trade cross currency, but we're still very, very early. So we'll have billions and billions to being traded. And again, they're based on Bitcoin as a basis. The securities that are being created and derivatives based on top of that. So this is a real bridge from Bitcoin to the financial markets, and therefore a benefit for all of us in this room. So where are we with Treasury? With Treasury, we are incredibly excited and incredibly honored to have had some great support from great investors. This was a founder-led round, which means that we didn't use any investment bank, but it's pretty much the network that we had. And there's a couple of benefits. One is that for Bitcoin, it's very important that you have the same mindset. You think about things long-term, and the investors we have are all long-term investors in the space. Winklevoss, I mentioned, they backed around. David Bay and Nakamoto, obviously a real OG in the space that actually created the whole conference ecosystem. They are core investors of ours, and we have over 50 investors globally that invest in our rounds. We did acquire Bitcoin immediately, so we have 1,111 Bitcoin, which puts us in the top 50 globally of Bitcoin treasury companies. This is clearly only the beginning, but we are active, we are live, we're kicking off, and we obviously have the ambition to become the largest Bitcoin treasury company in Europe. With our planned listing in Europe on Euronext Amsterdam, that gives us the toolbox that we can use that I mentioned, all the different securities, options, everything, because Euronext has a fantastic infrastructure to do that. And then finally, what is super important, we keep mentioning community. Community is the core of Bitcoin. Bitcoin is, as some would say, in itself, the strongest social network there is. That's why I acquired the Bitcoin Amsterdam conference. To have all of you here, come from all over the world, the best speakers to come, people to learn from each other, people to network, get to know new people, and also expand the ecosystem. Get new people in, get new people to learn from this, get the media in. We have tons of media here. Make sure we all carry out the same message. So with all of that, we're here to bridge ourselves into the next part of the digital golden age. And the fact that you're all here is a testimony to that. We're super proud of it. We hope you have a great next couple of days. And if you got any questions, come up to me, network with each other, go meet the speakers, and I hope you have a great time. Thank you.
We are back live at the Bitcoin Magazine news desk here in Amsterdam 2025. And on the desk we have Brady Swenson. He's the co-founder of Swan. We've got Christina, head of PR, BTC Inc., and of course the handsome, dashing Frank Corava, the Italian stallion, Bitcoin journalist. All right, so Brady, you have a talk coming up with us here on the main stage tomorrow. Give us a little bit of a preview of what we expect.
Yeah, it's titled TikTok Next Block, The Cadence of Civilization. The meme TikTok Next Block actually came from a tweet that I made in 2019 about the 600,000th block for Bitcoin. So I dropped it at the end of a tweet to kind of sign it off, and it's become adopted as a meme in the Bitcoin community. since then. So I thought maybe I'd dive deeper into the meme, go below the surface. And I've got some new material, guys, to drop on Bitcoin. So this is some good stuff. I'm really excited about it. It is about Bitcoin in time. It is about the history of timekeeping in human civilization and its impact on how we live our lives, basically, and this new clock that we have now called the Bitcoin time chain.
Okay. I was thinking of Kesha. TikTok on the block. Okay. The party don't stop.
It definitely works.
All right.
Definitely works.
But and you're also co-founder with Corey Clipson, who we all know and love. Or depending on
no beef here at the news desk. We keep the beef to a minimum.
Yes. you guys actually met each other at a Bitcoin conference.
We did Bitcoin 2019 in San Francisco. I also met Jan Pritzker there, who's the third co-founder of Swan. And we were working on a company called Give Bitcoin, or they were actually at the time. This idea was simple: give Bitcoin to friends or family. We hold it for a year while we deliver some education so that they know what they're holding and hopefully make them more likely to hold Bitcoin instead of panic sell, right? And that evolved into Swan, which was really simple product at first. It was just Bitcoin-only DCA, daily, weekly, or monthly. Bitcoiners were using Give Bitcoin's recurring gift feature to buy Bitcoin for themselves. So they really wanted a Bitcoin-only DCA. And so River and Swan gave that to the community in early 2020, and that's how Swan got started.
And where do you see it evolving from here on out?
Swan has become a full-service Bitcoin financial services company. We help people build generational wealth with Bitcoin, so we form long-term relationships with our clients. And we have IRA, we have Vault, which is our multi-signature self-custody solution. It's a 2 of 3 vaults. We have several more products in the works. One which is in preview with our Swan private clients right now, and I'm really excited to get it out more broadly in the next few months.
Can I ask a follow-up? I want to ask a question to Chris over here. When you hear something like this, all the talking about these different dimensions of a Bitcoin company like this, do you imagine a class for this master's program that you're going to be working on, a class where you'd learn about how to set up a Bitcoin company, where you'd learn about the sort of products that you'd offer, maybe how those products differ from a bank, what custody for those products looks like, et cetera? Is that something that goes through your mind when you hear that?
Yeah, actually, I get a lot of questions about is this degree for advanced students or total beginners, and I think it's for everybody. And exactly why is that? Because we're planning to have more like a philosophical parts and the topics, and then some that might be more kind of hands-on, practical solutions and self-custody, mining, self-mining, running a node is part of that. Okay. So definitely.
Hands-on plus philosophical. Very cool. Yeah.
Okay, fantastic. All right, so we're looking forward to your talk tomorrow, Brady.
I'm excited to give it.
Folks, be sure to hang on and make sure you listen to that.
Could we remind the audience, because it'll be streamed live. What time is your talk?
It's
one more time?
10:45 a.m. Amsterdam time.
So if you're in New York or something, that's 4:45
It'll be like middle of the night, so you'll have to catch the recording.
All right, fair enough.
And along those lines, our next talk on the main stage is on Bitcoin as a generational wealth building strategy. So a lot of what the folks at Swan are dealing with.
Right up our alley.
So let's have a listen.
Amsterdam, so many people, that's brilliant. Well, my name is Stefania Barbaglio. I host a podcast called The Financial Fox. You should all subscribe and watch my video. And then I've been in the Bitcoin space for over 10 years and in capital markets for over 15 years. So obviously I've been dealing with many investors, and Bitcoin has become the apex assets for corporation, for investors, and that's what we are going to be discussing today. How do you build wealth strategy using Bitcoin, really? So maybe we can start with like a quick introduction about, all my amazing panelists. And when did you get in Bitcoin, and why Bitcoin as an asset to build your career with, to develop, what you're doing, your business?
Well, thank you. It's great to be here. My name is Hunter Albright. I'm the Chief Revenue Officer for Salt Lending. I got into Bitcoin in 2017 after having spent several decades in traditional finance and excited by the opportunities that Bitcoin really gives all of us. I look at Bitcoin as an asset class that is really helping democratize wealth building, and excited to be on the panel today.
Yeah, I'm Chris. I'm from Germany. I run Cedar, where we do self-custody, SatsKeeper, where we do Bitcoin inheritance, and with Bitsurance, we founded the very first insurance for Bitcoin and self-custody.
My name is Jim Kreider. I'm from the U.S. I own a financial planning company helping people with wealth management, all things money, from managing investments, Bitcoin, custody, tax planning, estate planning, essentially help people articulate what's important in life and then align their assets with what they say is valuable to them.
Great. I'm going to go back to my question because you really didn't answer. So why Bitcoin? What is the main risk to financial freedom? And what Bitcoin represents as a solution?
Yeah, from my perspective, I think it comes down to three things. First is really sort of monetary protection in terms of the scarcity aspect and the utility that it is to protect against debasement and inflation and all of those sort of monetary aspects that are attracted to. Second is the utility. It's an asset class that has utility beyond just ownership. And then the third one for me is really sort of the sovereignty around it, that it's portable, it's censorship resistant, and the divisibility, especially from a generational wealth perspective, I think is a really attractive asset for a longer time horizon.
Yeah, I mean, how do you build wealth without Bitcoin is the question for me. Bitcoin, as opposed to like gold, is scarce, but it's difficult to self-verify, difficult to portable. Fiat it's portable, but like all the other properties are not that great to store wealth, and you will constantly be debased. And Bitcoin, as you said, gives you sovereignty. It is self-verifiable. That is the new thing. You can check that is real Bitcoin at any point. If you run your own node, you can audit all of the Bitcoin. You know exactly the amount. And that is a very asymmetric bet.
I first come to understand what Bitcoin is and why it's important in March of 2020. When the government announced that they would begin printing money to give out in the U.S. For COVID relief. And at that moment, I realized that the government should not be able to arbitrarily create money, and therefore there should be a better form of money. And I came to the conclusion that Bitcoin's best form of money that's ever been discovered or created, and that we needed to separate money from the state in order to retain a sound monetary platform and break away from the further monetization of all types of assets we're seeing right now.
Right, so we kind of established that Bitcoin is a great asset to build wealth. Now, I want to go back to one point about Bitcoin that is important to highlight, which is volatility. Volatility is vitality, but at the same time is challenging if you are an investor, because you need to have a structure in place, a portfolio in place that doesn't force you to sell your Bitcoin. So can you walk me through the way that you think about building a psychological and also financial resilience system for investor, or if you are building portfolio for certain type of investor, or even as an individual investor as well?
Yeah, I think it's a great topic, and one that is probably one of the biggest barriers to getting more people to think about Bitcoin as a wealth building asset. And I think it comes down to a couple of key points. One is mental or sort of psychological resilience. So really believing in the asset class and learning more about the fundamentals and the foundation of Bitcoin and why so many people are excited about it. Second one is a financial resiliency. And I think for me, that's like, how do you think about it, Bitcoin within your portfolio? And the one thing I know that 0 is the wrong number in terms of how much you should have, but there should be a balance that aligns to your risk profile and your risk preferences. And the third one is sort of structural resiliency. And this gets into what some of these guys are talking about today is, one, what are you thinking about how you pass it on in terms of should it be wrapped in a trust? Should it, what is the custody management, and what might be insurance protection that wraps around it? And I think the resiliency is, for me, is a combination of learning about all those three different elements and how you as an individual or family office or even a corporation want to think about it over the long term.
Yes, you said volatility is vitality, to quote Michael Saylor. Something that's dead does not have volatility. Volatility is the market discovering truth in real time, and it's going down further. And you see Bitcoin as an asset develops. So yeah, psychologically, if you understand that, there's no problem. From a structural perspective, have self-custody systems that also account for your own mortality. I always say there's two things in life that are true. There's never going to be more than 21 million Bitcoin, and your last shirt will not have a wallet, so have a plan, talk to your family, figure out a way to have the inheritance solved of Bitcoin. And I think these are the next steps. Bitcoin is currently adopted by mostly younger people, but eventually we all will have to give the Bitcoin to the next of kin, and those are conversations to be had.
Volatility is only an issue in two domains. One, if you don't have a depth of understanding of the asset that you own, therefore you're shaken out of your conviction during a time of high volatility. Two, if you have not addressed your risk capacity. I think too many people lean into risk tolerance, which is your ability to stomach volatility in your portfolio. That's not that important. That's based on emotions, and it's goofy to allow your emotions to dictate your portfolio. So rather than leaning on risk tolerance, you lean into risk capacity. How much volatility can your life, your portfolio sustain? And that's why I've taken a lot of flack of this over the years to make sure that you do retain some sort of liquid cash portfolio. And I'll say that because I'm not a Bitcoin maxi. I say that because I want to make sure that you are protecting your Bitcoin during drawdowns. So you want to make sure that you have insurance. Bitcoin is insurance against fiat, but then fiat can be insurance against temporary drawdowns of Bitcoin's price. So making sure you understand each role that each asset should play in your total financial life.
How do you think about leveraging your Bitcoin portfolio to create cash and revenue or liquidity that you can use, for example, to pay something? Everybody needs at some point, to buy a house or have some big expenses, and then what do? If you don't have enough cash, enough stable coin, then you might, you maybe have thought about leveraging your Bitcoin and then having something that comes in that you could perhaps use for those kind of expenses.
Yeah, I think the point Jim was bringing up earlier about understanding how much short-term cash you have or you need, allow you to time horizon to have a balanced perspective around the volatility of Bitcoin is important. At Salt Lending, we help people with liquidity, right? When you think about liquidity around Bitcoin, you've got two options. You can sell it, which none of us really want to be doing, and you don't want to
sell your Bitcoin,
and you don't want to be forced into it. And then the other option is to borrow against it. And what we see is how people are using Bitcoin and using leverage against it. One is for tactical liquidity, like what short-term needs. I might have an expense, might want to take a dream vacation. We've had a customer adopt a child using the liquidity that they were able to get about their Bitcoin. The second type is really around structural liquidity. Think about this around income replacement. You might be having income supplement so you don't have to work full-time, or it might be full-on retirement, and thinking about how you do that. And then the last one is strategic liquidity, where you're going to reinvest. And that's important because I think there's a big shift now of people trying to go from what I view as labor-based income to asset-based income. And to really create generational wealth, you've got to create asset-based income, both for you and future generations to live off of. And leverage is a part of that, and encourage people to start small, understand what margin calls are, understand the protections that providers help you with in terms of protecting the downside, but become more comfortable with it before you have higher loan-to-value ratios or leverage more of your portfolio for liquidity purposes.
It's such a great point about the asset, having us thinking about strategy where you actually have got assets for a long-term wealth creation.
Yeah, I agree. A little controversial statement. I always say the last resort is collateralization of your Bitcoin if it's for a consumption purpose. Like, I would use it sparingly. I would use like a lending platform if I have like a productive use, if I think my company can outperform Bitcoin. I would not like go on a lavish vacation and take a loan out for Bitcoin on that.
I think it's an important point to do your diligence on who you're borrowing from and why. Salt lending's been around since 2016. I think we've learned a lot of hard knocks in terms of the ups and downs. And fundamentally, we've worked on doing a couple things. One, first of all, we don't rehypothecate. Your collateral goes against your loan, full stop. Secondly, we do everything we can to make sure your Bitcoin stays your Bitcoin. Salt learned, through the volatility of the early cycles, and introduced a product that we refer to as stabilization, and that allows people to convert your Bitcoin into stable coin at 90.91% LTV to provide you some downside protection. And then even earlier on this year, we've introduced a product called Salt Shield, where you enroll into a fee-based program and liquidations and margin calls are eliminated altogether. And so trying to innovate, in addition with thinking about insurance and other things we want to make available to customers, about how can you look at Bitcoin as a generational asset and not have to worry about the downside and find that added protection. And everybody we have our different preferences on custody and our different preferences on sort of downside protection, all of which are extremely important when you think about a long-term strategy for your assets.
Since this panel is about generational wealth, I want to make sure that each person is taking a step back, considering ultimately what is important to you and what you are trying to build, not just for today, for short-term spending, not just for yourself in 10 years, but zooming out, think about your kids, your grandkids. And I would assume if you're here, having Bitcoin play a role in building that life, that family, that state is going to be important to you. So considering how do I make sure that I retain this asset for myself and into perpetuity for my family, be it through taking loans against your Bitcoin. If it is selling it, make sure you're doing it in a way that makes sense from a tax standpoint, making sure it's guarded correctly within estate planning. And again, zooming out, what is this, who and what is this for? And making sure you're taking a long-term stance on that. So again, when you're looking at lending products, all right, I'm going to use this Bitcoin for this. Maybe it's to go on a vacation with your family. I would hate for anyone here to store Bitcoin and never go on a trip with your family. That'd be a terrible idea. I think if you're on your deathbed, you're not going to say, wow, I have so much Bitcoin for my grandkids that I never got to spend time with. That'd be really foolish. Please take a step back and say, what's important to me? I want to make sure I'm making memories of my family and building a family unit that we're investing in each other. And Bitcoin is a tool to help you be able to invest in your family. So make sure, again, that you articulate not just the tool that you're using, but ultimately what you're building towards, and how can we use this tool in the most efficient and effective way for that thing that you say you value.
What are the pushback that you get from investors? What are, like the key problem they raise, and how do you address them?
So I think for us, a lot of the conversations we end up having with investors, one is just helping them understand the advantages that they can use to take advantage of in terms of their wealth planning. I mean, it's for a lot of people, borrowing against assets, thinking about that as liquidity, as a way of being very tax efficient, is a new concept, and how do they build it into their financial strategy. The second one is really around custody. How are we protecting their asset? It's not our asset. We do take custody of it to be able to lend against it, but custody and downside protection are two key points that we repeatedly talk to people about and get people comfortable with the different options that are available so that you feel secure in trusting your assets. And I think to the point that was made earlier, encourage anyone to do your own due diligence on any third-party sort of custodian partner that you're working with to ensure that their policies are up to your standards of how you want them to manage your collateral.
Yeah, going back to the point, like what is the opposition that you faced? Like we're fighting against a system that has like centuries of inertia. When I launched like Bitsurance, finding a first insurer to take on the risk to underwriting Bitcoin, I talked to virtually every single insurance company in Europe, and most of them laughed in my face and closed doors. And some kept re-inviting me, and I soon learned, hey, you just want free education for your staff, but you're not really interested in insuring Bitcoin. Nowadays, like thankfully, due to the financialization of Bitcoin, those voices have been much quieter now. Bitcoin is here to stay. People understand it more. Now we have, as first insurer, Liberty Mutual, like one of the largest insurers in the world. The opposition, they are running out of arguments against Bitcoin, is my opinion.
The primary objection I think I get is, isn't Bitcoin too volatile? Maybe it's too new of an asset, or in summary, it's too risky. But we have to allow people to zoom out and understand that there's risk in anything you do. And most people have not stopped to understand that there's risk in owning, in my case, the US dollar. And that risk is opportunity cost, it's a debasement over time, and helping them understand that. And then taking it further than that is, okay, you think that the US dollar is money and Bitcoin is this nascent technology, but we have to define what is money itself. And once we walk them through defining what money is and the characteristics that makes good money, they come to the conclusion on their own that Bitcoin is a superior form of money. And then it's no longer, should I own this thing? It seems too risky, but rather, how much do I own? How do I buy it? And how do I store it properly?
Yeah, and I think the fact that Bitcoin gives us optionality, that's really one of the beauty of the assets. Now, obviously, investor can get exposure to Bitcoin in different way or forms. So we talk about buying Bitcoin as raw assets. You can buy ETFs. You could buy a Bitcoin treasury company. How do you think about these options, and especially when it comes down to building a portfolio? Tell me how you consider them and how different are they?
Well, first of all, I think for all of us that are interested in Bitcoin as a sort of ecosystem, the greater optionality about how to get exposure is great. But it's important that everybody learn the differences. Owning your own Bitcoin, having sort of that self-sovereignty, and having raw Bitcoin in your portfolio gives you a lot of control in terms of what you do with it. I think ETFs are great to draw people in, but be aware of, you don't own it, you own exposure, and there's increasing fees over time as that goes up. And so that's just something to be aware of. And it's also, it often will lack, you get tied into a market with ETFs. So it has some portability implications and flexibility. And from a Bitcoin treasury company, the key point I would make is I do think there's a difference between investing in treasury companies that are owning Bitcoin as their primary strategy. Be leery of potential dilution and other things when they raise funds to buy more Bitcoin. But also look at companies that are acquiring Bitcoin by being a profitable operating company, and that they're buying Bitcoin with their profits and with their revenue, and that would give you a different exposure to Bitcoin in all three different categories.
100%. That's all about sustainability. I think one of the topics of this conference is really how do you build a sustainable Bitcoin treasury strategy. Another topic, but definitely very important. Thank you for bringing it up. Chris?
I agree with all points. Like, you need to have exposure. Like, any portfolio that ignores Bitcoin is like not competing. An ETF gives you exposure. Bitcoin in self-custody gives you the sovereignty, and as you said, like the treasury companies, they can give you leverage, but they introduce so much fragility. You have to really be smart about it, and like there will be like some liquidation or like something will happen. And in the end, as this is a panel on generational wealth, I think, as you said, raw Bitcoin and self-custody, auditability will win out over time and all these things. So like, have a little bit of both maybe, but I would always prefer self-custody Bitcoin over the rest.
Yeah, if the foundational value of Bitcoin or any derivative of Bitcoin, be it a proxy company or anything like that, is the Bitcoin itself, I think it'd be strange to not actually just go to the base asset itself and have that be the foundation of your financial portfolio. Of course, there can be places to bring in these proxies in some capacity, but again, you want to build on the foundation of Bitcoin itself. Understanding that, I love, Chris, your verbiage there, that the ETFs can bring exposure, but Bitcoin brings sovereignty is what you said. So allowing that to be the foundation of the portfolio, and then if you decide, okay, I want some derivative exposure for XYZ reason, again, understanding why you believe that will outperform Bitcoin and the benefits that it might have. It used to be, oh, well, I can take margin against Bitcoin. Now we have products and services that allow you to take loans against it. At least in the States, there are preferential tax treatments for owning Bitcoin versus ETFs. There's not a wash sale rule that applies against stocks or ETFs. So understanding the trade-offs of each of these. With that said, if your parents or your grandma wanted to get exposure to Bitcoin, but she said, there's no way I'm going to go and buy Bitcoin on exchange and put it in a cold storage wallet. I'd rather your grandma go and buy an ETF and have some exposure than say, well, grandma, you're not a purist, therefore you shouldn't own this thing at all. That would be silly. So understanding, meeting people where they're at and allowing them to get comfortable over time with adopting this asset.
Yeah, 100%. So last question. If we think Bitcoin we used to say we should get 1 or 2% allocation in your portfolio, then it went up to 5%. And now, if we think about the different assets to build generational wealth, then you have got real estate, you have got gold, you have got stocks, you have got Bitcoin. In your views, how much Bitcoin you should have in your wealth generational strategy?
0 is the wrong number. I'll start with that. The key point, one thing for everybody to think about is when you think about building assets, which I think is the real key sort of focal point in terms of building generational wealth, right? Real estate ties you to a country, stocks tie you to a market, Bitcoin doesn't tie you to anything. So there is a lot of hedging that you can do in terms of how you think about the allocation across the different assets that you have in your portfolio and how to manage your wealth towards your goals. I mean, and again, there's short-term and long-term aspects. We have customers that do borrow heavily against their Bitcoin to buy more Bitcoin, but it's only on a small percentage of their total holdings and even a smaller percentage of their total sort of wealth portfolio. And so encourage you to talk to a financial advisor, professional, to think about what your strategy could be, because really, we all now have access to the strategies and tactics that the ultra-wealthy have been using for centuries. And that is a game changer. Being able to have the utility and the tools to do what we're talking about has never existed before Bitcoin at the scale globally and the ease of entry that it does now. And so just thinking about those options are really important.
Yeah, the 0 is the wrong answer. Somewhere between 1 and 100%, there is the answer. Today we have these great assets. Like as opposed to gold, you can buy Bitcoin at a spot price for €5 or $5. You get the spot price. With gold, you would have to buy like a couple grams to even reach like that trade. You can Euro cost average for your kids. You can see, okay, currently the block reward is 3.125 Bitcoin, and the entire world is competing like billions of machines and exahash like is competing for one block reward. Maybe in 20, 30 years when I want to go to retire and the block reward is like 0.01 Bitcoin, but I can buy for €1,000 now or €10,000 now, that might be enough to retire. Like I think Bitcoin will be around in that future, and that is maybe, like a ballpark where you can achieve. But your own stacking goals, they might be different, and Bitcoin is here to improve your life, not you to like raise a number, an imaginary number. Like, think of that first.
We're running short on time, so I'll say this in 2 parts. One, I've never had someone not say to me, I wish I would have bought more Bitcoin. Everyone always says that. I wish I would have bought more. So, maybe anchor into that. And then 2, again, going back to what I said initially, make sure you have Bitcoin in context of your total portfolio where you're not risking it by being maybe over-levered. That's coming from someone who has all of my liquid net worth in Bitcoin. I own my company in Bitcoin. So take that with a grain of salt. But again, make sure you're protecting, again, yourself, your family, and your generational wealth with how you store your financial picture.
Thank you. Thank you, everyone.
Thank you.
Welcome back to the Bitcoin Magazine News Desk in Amsterdam 2025. On the desk we have Brady, and we have Joel Lenz from Relay. Brady is from Swan. All right, gentlemen, thank you for joining us again, Joel. I know that you've been wandering on the conference floor, you've been listening to some talks. Tell us about some highlights you've been seeing on the ground.
A lot of building stuff happening. So a lot of people who are in it to work, find problems to solve, figure out how we can use Bitcoin in a business with an open source model. And generally speaking, a lot of interest, I would say, in business as well. And the talks have been mainly covering what is happening in Europe with Bitcoin. So it's been quite fascinating, a lot of stuff happening.
Well, I find it interesting, Brady was mentioning that he found his business partner, Corey Clipston, and in building Swan right here at a Bitcoin conference. And so one of the great things about coming to these conferences is that you can meet your next business partner, you can find your next business plan, and get a lot of inspiration. And so just on that note, Brady, what have you been seeing on the conference floor? What's the vibe that you've been getting? What are the highlights?
It's very cool. This is my first Bitcoin conference in Europe, and it's pretty cool to be in Amsterdam, where I would say modern finance was really started. The first stock market was started here, and it seems like an appropriate place to be here. There's lots of discussion about Bitcoin Treasury companies, which I found interesting. There is, as Joel said, lots of stuff about building. Node Runner's booth is right there. There's an open source hub, and I've had a couple conversations with those guys. Always find that interesting. I love to get my hands dirty. I run a node, and just get in there. Watching the blockchain sync is sort of a religious experience or something like that. It's pretty cool. The first time I saw the text come with all the blocks starting to sync from all the way back in 2009, I was like, wow, this is pretty cool. This is pretty cool.
We did hear a talk earlier about the tensions between Bitcoin and institutions coming online and integrating Bitcoin as well. Where do you see that headed, that integration and those tensions with legacy institutions, Joel?
I think you have to differentiate a bit. Is it getting them on through the ETFs and stuff, which is more an environment where they see like, okay, that's right up our alley, and then gradually moving over to them understanding what the key differences are, what are the differences between the custodial setup and things.
I'll keep it broad-based because just to give you an opportunity. But earlier we also spoke to Susie, who was talking about how Visa was wanting digital ID, and so there was a sense of decentralization being lost in the mix. But I don't know if you've experienced or seen similar tensions in that vein between institutions and, I guess, the desire for decentralization, the desire to use Bitcoin as cash payments.
Me personally, I haven't seen it yet, but I could see a future where that would happen. And probably if they would sacrifice one thing, it would be decentralization. If projects like Visa and the whole EID thing or whatever Susie was talking, probably also the CBDCs I'm imagining, will survive or not, we'll see. I'm knowing that Bitcoin will, so that's my only hope, where I go like, okay, I'm betting on the right horse.
Brady, you want to jump in with your thoughts on that?
Yeah, I mean, I've seen, there was a talk earlier today about KYC, which is kind of right along that lines. When Bitcoin, which has this open source ethos of decentralization, of circumventing state money, is now meeting a time where we have, Bitcoin treasury companies, we have regulation like MiCA in Europe, we have regulation in the United States that's really setting the foundation for this, modern finance, or you could say traditional finance, to come in and sort of meld with Bitcoin in different ways. Right. KYC is one of those ways, and it's an interesting time for Bitcoin.
Brady, hold that thought. We're going to segue into the institutions that are here, Bitcoin's evolving market structure. So let's go back onto the stages and segue back into the conference.
Said, are some of the best minds in the space. So first and foremost, we have a professional dubious speculator and someone who's been increasing their dominance within the world of Bitcoin data, Benjamin Cowan of Into the Cryptoverse. We then have some true Dutch royalty and my favorite source of vitamin B, T and C, the The Rational Root of Bitcoin Strategy Platform. And last but very much not least, the man to my right here is Andre Dragos, a man who's a little bit wiser than most institutional investors from Bitwise.
Thank you.
So we'll get straight into it. I think everyone's well aware that we've seen a growing institutional influence on the Bitcoin price action. And as we can see from this chart, there's been over 2.29 million BTC accumulated and now held within the ETFs and corporate treasuries, which equates to about 11.5% of the entire circulating supply of Bitcoin. And this has obviously had a pretty dramatic effect on the underlying market structure. We can see here Bitcoin's volatility has been diminishing, and as we're all probably very much aware, the price action has been very sideways, choppy, let's be honest, quite boring this entire cycle. And we're now at a pretty pivotal point, I feel, because we can see that volatility is as cyclical as price action, and we're currently at some of the lowest levels of recorded volatility we've ever seen. So what we can do is take it over to Andre, who can tell us how we're seeing a growing demand and how institutions now actually outweighing the new BTC supply.
Yes, thank you so much. So, I think the big story this year, and especially last year as well, is institutional demand. And it's not only a buzzword, right? Many people think about institutional adoption as some kind of buzzword narrative, but you can really see it in the data. And one of the reasons why we at Bitwise think like the 4-year cycle is somewhat dead is this chart. So what we've seen since essentially 2024 is that the supply deficit induced by the halving has become smaller and smaller over time, while institutional demand by Bitcoin treasury companies and ETFs has essentially increased by a multiple of that, right? We're close to 1 million Bitcoins purchased by institutional investors this year, including ETFs and including Bitcoin treasury companies. And it's a 7x the size of the supply deficit induced by the halving. So that's why we think that institutional demand, so demand rather than supply, will drive the market going forward. And what is driving institutional demand itself is the macro cycle. And so we don't think the macro cycle will end where we will peak in 2025. To the contrary, like liquidity growth actually points to an extension of the macro cycle and thus like the institutional demand cycle well into 2026.
I think you bring up a good point there, and it's the potential of a lengthening cycle. Now, everyone's used to Bitcoin's traditional 4-year cycle, and this one has been a little bit different. Now we're in a lengthening cycle, and I think Root has some great insights on this, being a cycle analyst expert, if I do say so myself.
Yeah, so Bitcoin came forth out of the 2008 financial crisis, and since then we have been moving in this 4-year cycle, which is kind of illustrated by this chart. But indeed, if we look at the broader business cycle, before 2008, we actually had an 8-year business cycle. And since then, we've moved in 4-year business cycles. So Bitcoin is not only tied to the halvings, but also to the broader business cycle. Now, the early halvings probably had like a bigger effect on blow-off tops. But the past halving is only probably like a marginal effect on Bitcoin. But to give an example there, like if we would not have had the last halving, we would actually reach the 21 million coins in circulation in the next 2.5 years. And because of the halving effect, that gets extended 100 years. So that would mean we're currently at almost 20 million Bitcoin in circulation. That would mean an additional million Bitcoin still to be sold likely, because the miners usually sell over the next 2.5 years. So there's still an impact there, but it's only marginal if you compare it to the current institutional flows and the ETF flows.
And again, I think you bring up a good point there of Bitcoin kind of growing, especially with this institutional interest. It's more of just a macroeconomic asset. And as we can see from this chart from Ben here, I think we can see some signs of those tides maybe shifting a little bit as well.
Yeah, I think you could argue that Bitcoin is very much tied to monetary policy. This entire cycle has been more so plagued with high interest rates and quantitative tightening for much longer than in prior cycles. And so because of that, it's actually led Bitcoin to really outperform most everything else in the crypto space. Just because in times of uncertainty, you buy what you're most familiar with, what you're most confident in long term. And in crypto, that's clearly by far going to be Bitcoin. So Bitcoin has done very well over the last few years under high rates and quantitative tightening. And Jerome Powell, the chair of the Federal Reserve, has recently announced that they will be ending quantitative tightening in December. So we will probably transition into sort of the next phase of the cycle for Bitcoin. And the general idea with monetary policy in general is they're never going to stop printing money. So fiat currencies are going asymptotically to zero. Therefore, Bitcoin offers a way out of that.
100%. And I think we can also see this, as you mentioned, on liquidity there, by looking at the liquidity versus Bitcoin chart, specifically the global M2 chart. So, Andre, I know this is a little bit of a controversial chart, but can you please share some insights on this?
I'm happy that you bring this up because it's probably the most hated chart right now. So people have been following this chart very closely. It shows a global money supply lagged by 3 months in Bitcoin. And people have criticized this chart because Bitcoin has not been following global money supply on a tick-by-tick basis, right? And I agree. There's more like a long-term relationship between Bitcoin and global money supply, what statisticians call co-integration. And in my view, this long-term relationship still holds. And we did statistical analysis on this. And in fact, these relationships, they tend to mean revert, meaning the farther Bitcoin diverges from the trajectory of global money supply, the higher the probability that it's going to mean revert, that it will reverse back to this trajectory at some point. But yeah, it's not, you can't use it on a tick-by-tick basis. And what many people also say or criticize about global money supply is it's actually a derivative of the dollar, because all these like foreign money supplies, like the Chinese money supply or European money supplies, you have to convert them via the exchange rate. So it's somewhat of a derivative of the dollar. But like dollar depreciation or currency depreciation is almost synonymous with global money supply or money supply growth based on what is called the purchasing power parity theorem. So I don't buy this argument that it's essentially just the dollar and that you should disregard this. It's the same. It's a different side of the same coin, essentially.
Yeah, and
no pun intended.
I think leading on from that, another reason that I feel like a lot of investors are maybe a little bit uninterested at the minute. We can see retail sentiment is very low. And that might be due to the fact that we've seen obviously a very high correlation between Bitcoin and other assets, specifically US equity indexes, as we can see here. And recently, as we've said, we've been underperforming. But Root, do you think that this underperformance is going to continue? And do you think that there's any benefits that Bitcoin has acted as such a almost high beta play of US tech stocks?
Yeah, Bitcoin is really seen as a risk asset, which I think is just the phase that we're in. The ETF approval in 2024 was a bit of the beginning of that. The maturity of Bitcoin as an institutional grade asset. We have now BlackRock behind Bitcoin. There's strategic Bitcoin reserves. And so we're really entered like a new era for Bitcoin, where I think if you look at the previous cycles, it was more retail. Now we got to a market cap now that the impact of retail capital isn't as influential. Most don't have like an extra 100K on their bank account to acquire Bitcoin, and so that is a contribution to this diminishing returns as well. And the last year we've really seen that we've traded very similar to the gains that we see in tech stocks like in the Nasdaq or the S&P 500. And I think that's actually the maturity of Bitcoin. There isn't as much retail hype at the moment, and so it's with this kind of passive flows from institutions that come into play. Bitcoin is trading as an institutional grade asset, which I only think demonstrates its success. Now we all would have wanted like a parabolic move this cycle. And that hasn't happened. As I said, like retail capital doesn't have as much impact, and institutions are only getting into the market in a more gradual manner. And so I think it's very likely that Bitcoin will continue lengthening this cycle as it is tied to the business cycle. And to get back to the liquidity chart that Andre from Bitwise just in the previous slide, there is now this divergence with liquidity and Bitcoin. I also think that you have to take into account like the Treasury General account and so the Federal Reserve balance sheet, and actually all balance sheet from the central banks, because those also lock up capital temporarily, and so you get these kind of divergences in those charts.
I guess one of the other benefits that maybe doesn't feel like a benefit right now in the fact that we're having muted upside moves is it's also limiting the drawdown percentages that we're seeing. So there is some benefits to seeing this institutional passive flow into the market, as we said before, moving from speculation to stability. But a lot of market participants, especially within the cryptocurrency space, are maybe feeling a little worse off than usual due to the fact that Bitcoin has really taken the main spotlight. We're not seeing as much interest in alternative crypto assets. And I think, Ben, do you have any kind of insights on whether you think institutions are going to be more interested in these, or do you think that Bitcoin's going to reign supreme for even longer than it already has?
Yeah, I mean, I think Bitcoin will continue to reign supreme over the macro scale. Bitcoin dominance has been in a macro uptrend for years. What's really telling about the Bitcoin dominance chart is that the low, sort of the macro low, is actually set in late 2017, early 2018. And you could argue that despite all the money printing we had in 2020 and 2021, despite interest rates effectively at zero, and also despite the fact that the stablecoin market cap took up a much larger market cap in 2023, 2024 than it ever did back then, it's telling that Bitcoin dominance actually put in a higher low in 2022, despite all those theoretical headwinds to it. So to me, I think Bitcoin dominance has already gone from 38% to 66% this cycle. And my guess is the tailwinds will remain there. You have institutions more interested. I think monetary policy continues to favor Bitcoin as well. And I also think that this chart really goes to show that Bitcoin is more so a longer-term investment, whereas other things in the space are more speculative, more short-term type moves. So I do think Bitcoin will continue to reclaim more and more dominance as the years go on.
And to add to that, as well as the fact that we're seeing obviously a huge institutional influence on Bitcoin, and this market structure is obviously evolving because of that, we're also at an interesting point where the behavior of existing participants, is starting to evolve alongside that. So, Root, can you talk us through how the supply and demand economics of Bitcoin is changing, not just from the new institutional participants, but those long-term holders that were already within Bitcoin?
Yeah, so we have actually a bit of like compounding sell-pressure from all previous cycles. So it's not only, like if you think of Bitcoin moving in this diminishing returns, currently actually the like 1.8x upside to Bitcoin is actually reasonable if you look at that diminishing returns. Now diminishing returns happens obviously due to an increase in market cap, so retail capital, as I said before, doesn't have as much impact at these prices than it did in previous cycles, but also you get compounded sell pressure from all those hodlers that are sitting on enormous gains. So we this cycle again, we don't have only long-term holders selling from the previous cycle, but also from the cycle before that and the cycle before that, and so that is and those gains are usually like an order of magnitude higher, and so we have people sitting on 1000x gains from for example the 2013 cycle, and for them the 100k price level is like a very reasonable price to change their lifestyle a bit, and so I think we entered a new era for Bitcoin, and so I really like the analogy that recently was a bit popular on Twitter, the IPO moment for Bitcoin. I think that's a very good analogy for what's happening. Bitcoin is very successful because it reached that 100k, because everyone believes that it also will reach 1 million and 10 million, and there's no reason it wouldn't. And so I think that 100k level we have kind of been waiting for 2 cycles, and so especially for people sitting, the hodlers sitting on those enormous gains like 1000x and 100x are scaling out a bit at these price levels. And so what is interesting is that 100k price level has been a very psychological level for all the holders, and they're not selling because they lost conviction. It's just because their bet was right. Bitcoin is winning because we actually have measurable institutional adoption. I pulled out actually the 13F filing data from this morning, which the deadline is in 2 days, so I don't have a full chart on that, but you could actually see that for Q3, again, we see an increase in institutional adoption. For example, JP Morgan now entered the top 20 of institutional ETF holdings, and so those are all signs that Bitcoin is winning, and so to me it's actually a successful Bitcoin success that now allows some of those hodlers to sell some of their Bitcoin to scale a bit out and to enter this new era.
And I think it's also a big part of the fact that there's now the sufficient liquidity to actually have these OGs start offloading their Bitcoin, whereas traditionally we required this big retail inflow, this big retail FOMO, and new wave of capital that this cycle we haven't actually seen. If we look at the social interest within Bitcoin, it's lower than ever, essentially. We're at bear market lows. It just seems like the market is comparatively dead to where we should be, considering we're above 100,000. The fundamentals look strong. Institutionals are buying like crazy. Yet retail still doesn't seem to be too interested. So Ben, do you have any insights on this?
Yeah, I mean, it really has been a different cycle than what we've seen in the past. If you look at, what happened in the end of 2017 and the end of 2021, there was a ton of social interest in crypto. And then it also actually corresponded to major drops in Bitcoin dominance back then. But the reason, this cycle, we haven't really seen that. And I think it could be an artifact of institutions, honestly. I mean, that's a big part of it. But you also have, again, monetary policy that more so supports the blue chips of each industry. And in this case, it's Bitcoin. And I continue to sort of see the current cycle as a 2019 version, just more of a longer version of what we saw in 2019, where it was mostly a Bitcoin-only bull market, where Bitcoin would go up and it would sort of lift the rest of the market with it, but everything else would just kind of lag behind. And that's what we saw for basically all of 2019. And during that time, Bitcoin also would pull liquidity from the rest of the market, and that's why we talk a lot about sort of valuing everything in terms of Satoshis, because then you kind of start to see how the overall market behaves. And we've just continued to see liquidity go from altcoins, head on over to Bitcoin. And so retail hasn't really shown back up, right? There's a lot of people that keep on saying like retail is going to arrive, but that has not happened this cycle. And that's just something to sort of keep in mind and say, is this like 2017? Is it like 2021? In terms of social interest and in terms of monetary policy, it's so much closer to what we saw in 2019.
Yeah, and then, so in this chart also it illustrates very well how we haven't had that parabolic move. So the retail hasn't been here, and I think so if we have not had a parabolic move up, there's also no real basis to have an 80% bear market drop from here. So that's another reason to assume that the cycle will just continue to lengthen.
100%, and there's also the argument to be made if Bitcoin even needs retail capital flowing into the market. What we can see by looking at institutionally driven assets like gold over the past few years have gone absolutely exponential with very little retail involvement. And what we can see is Bitcoin, even though we are seeing more and more institutional interest, really we're still quite a baby in the comparative markets compared to traditional assets like gold. So Andre, could you give some insights on if we are to see a bit just more of an institutional rotation rather than new retail influx and FOMO, would that be sufficient to drive Bitcoin to new highs?
Yeah, absolutely. I think you hit the nail on the head. I mean, obviously, this bar chart is just a hypothetical example. It just goes to show that you only need a tiny amount of capital rotating from gold to Bitcoin. And the reason is that gold is so much bigger, right? We're talking about an asset that is probably 10, 15 times bigger than Bitcoin, right? Gold's probably between 25 and 30 trillion US dollars, while Bitcoin's around 2 trillion. And it just goes to show that Bitcoin's adoption in terms of like the amount of global wealth, which is above, I think, 1,000 trillion, right? I've just reposted that chart by grain of salt. Bitcoin's market cap relative to like global wealth is just 0.2%. It's a drop in the ocean. So from an institutional adoption point of view, I think we're still early. And I mean, over the long term, it's quite likely that money will flow to Bitcoin from especially gold and other stores of value, because Bitcoin is a technologically superior store of value. It has better transferability, better divisibility, and so on, right? It's definitely technologically superior. It has better, like, it's absolutely limited, and so on. But I think that's over the long term. But in the short term, I think you could already see a significant rotation if we saw a risk on rally again, right? A renewed return and risk appetite because of global growth, because of monetary policy easing. And the way I think about Bitcoin versus gold, about that relative performance, is essentially risk on or risk off, right? So usually in a kind of global growth environment where global growth is accelerating, you tend to see an outperformance of Bitcoin versus gold. In an environment where global growth is slowing, you tend to see the opposite. And I do think we'll see that renewed acceleration again. We're already seeing it at some leading indicators.
Yeah, and one thing I would like to add is, in spite of all of these changes, the evolving market conditions and structure that we're seeing, is Bitcoin already in this cycle has had 5 separate instances where we've had close to a parabolic piece of price action where we've moved over 65% in under 100 days. So even though things are changing, Bitcoin still has the ability to do the extraordinary and is still such a small asset. We can have these parabolic moves, these exponential periods of price action, and we could see, just looking at the comparative size of the market, realistically the capital rotation required to do that is much lower than what many people may be anticipating. So just to close out, I'm going to ask you what you guys think this cycle is going to look like going forward. Do you think we've already topped? Do you think we're going to have a big blow-off parabolic move to end the year, or are lengthening cycles the new base case? So, Andre?
So, based on this institutional adoption story and the macro cycle, monetary policy easing, I think the cycle will extend well into 2026. I don't think we've seen the cycle top yet. We haven't seen the blow-off top, right? Most valuation indicators actually imply that Bitcoin's below fair value, so it's even undervalued. So I think we'll definitely see a cycle that extends well into 2026. And in terms of price targets, I think the fair value for Bitcoin right now, based on several valuation indicators, probably right now as we speak, around 150 to 200K already.
Amazing. And Root, what are your thoughts?
Yeah, so everything is about probabilities, of course, but I do think that there's the indicators favor a lengthening cycle, and so I think we will probably not have like a huge influx of retail. I think we're past kind of that phase. I think we'll just continue to have gradual institutional adoption, and there will probably be some sell pressure from that hodler cohort. So I think we'll move up in a more gradual manner, consolidate as we have been doing. I think there's a big likelihood that we're close to a bottom of this consolidation, and we're getting ready to move up for the next leg. Now, I don't expect that to be very high because as I said, like there's the hodler cohort is willing to change some of their lifestyle, and so I think we'll have some sell pressure from that cohort in particular during an up move. So I don't expect like really high price targets, but I think we can continue for a lot longer, especially when the macro or the business cycle is in favor for Bitcoin as well.
Great. And Ben, final thoughts?
I guess I'll take the other side. I'm more of like a if it's not broke, don't fix it type of person. And, you know, I've been in crypto a long time, and I still do believe in the 4-year cycle. So my guess is that the cycle top for this cycle is probably before the end of the year. But as the rational Root said earlier, when you don't have euphoria, when you don't have euphoric parabolic rallies, if you don't have a crazy end to the year, and it's more so just lackluster, it also means you have diminishing losses as well. So I sort of see some macro headwinds for the first half of 2026, maybe a lack of desire to cut interest rates too much more. But by the end of 2026, I think we'll start picking back up again, and we'll just keep going on, and it'll set us up for the next bull market.
Amazing. Well, I'll side with you just so we have 2 votes on either side, but I think that's pretty much everything. I hope you all enjoyed this discussion. I'd like to say on Zetten bedankt. I've been your host, Matt Crosby, and thank you guys for doing this. I'm hopeful we can do it again next year.
Thank you.
Hello, hello. Welcome back to the Bitcoin Magazine News Desk. Desk in Amsterdam 2025, presented by Treasury. And I'm joined by Brady Swenson, the co-founder of Swan, as well as Henry Elder. He is the CEO of Satsuma, which is a Bitcoin Treasury company on the London Stock Exchange. Welcome, gentlemen. All right, we heard a conversation about institutions, and going over onto the Bitcoin Treasury company, what we had a chance to discuss, and you're from LA, and you opened your business in the UK because you saw some opportunity there. I'm interested in that. What made you find Europe, particularly the United Kingdom, as a place of business that you want to do a Bitcoin Treasury company?
Yeah, so thanks for having me on, first of all. It's great to meet you guys. Great to be here.
Great to have you.
So I was previously at UTXO, where we kind of incubated a lot of this whole craze internationally. We had a ton of Bitcoin Treasury investments that we made globally, right? And so we became very, very familiar with the capital dynamics in a particular market that were, best for the incubation of a Bitcoin Treasury business. And as this evolved, we sort of saw, our rubric evolved alongside it. And so I was taking a very deep look at the London markets, and we saw that there was incredible potential for a Bitcoin Treasury company on the London Stock Exchange, right? Which at that time currently didn't have any Bitcoin Treasury companies really on it. And London has a number of really unique strengths in terms of the concentration of capital, the availability of the different capital types that you need to drive a Bitcoin Treasury company through the different stages of its life cycle, right? Getting it off the ground from $0 to $1 billion of market cap takes a different kind of, usually very retail-focused capital from, what you need to scale from $1 billion to $10 billion, which is going to be more institutional, to, hitting that golden goose, getting beyond and breaking out into like a MicroStrategy size. That's really going to be driven by corporate fixed income markets. And London has a unique combination of all three of those, a very, very aggressive retail demographic that loves these kinds of investments, a ton of institutional equity capital, and the third largest corporate fixed income markets in the world. And so, as that kind of grew, and I was actually looking for a CEO to run this business, I talked to a lot of really impressive people, but it's hard to find a CEO that has that combination of a very fundamental understanding of crypto, right, and an understanding of Bitcoin treasuries and Bitcoin businesses, who also has a very strong public markets background. And so at some point in time, we were raising all this money, and some of the investors on the board came to me and they said, well, why don't you just take the role, right? You have the experience, the pedigree on the Bitcoin side, and then you just build a team around you that has the public markets side. And so I took the role in July, which is incredibly exciting. And then we've built an incredible team around me. I have a CFO who was 6 years as the CFO of a FTSE 250 company, $4 billion market cap. General counsel who has FTSE 100 experience. We have incredible advisors in Latham & Watkins, Canaccord, BDO as our auditors. So it's been a real journey.
Well, congratulations on the new role.
Thank you.
We're going to take a look at one of our stages right now. We're going to take a look at Bitcoin is the rising tide that lifts all boats and gets us new positions in awesome companies in London. All right, let's have a listen.
Gentlemen, this will be exciting. Thank you all for being here. So just start with some quick introductions. I'm Wyatt O'Rourke. I'm the founder of Basilic Financial. We're a Bitcoin-focused wealth management firm, author of the Bitcoinization of Finance, to do some work in digital credit.
Matthew Mazinskis,
one-based money. You can find me on any platform. Publish the monetary base every quarter, tracking the central bank money supply comparable to Bitcoin, and also been following Bitcoin as a power curve almost as long as Giovanni, but not quite.
I'm Paul Buitink. I've been a Bitcoiner since late 2012, and I'm also co-owner and managing director of Holland Gold, which is the biggest precious metals company in the Benelux. We sell like $500 million this year of precious metals, and we're enjoying the bull run.
Yes, hello everybody. Willem Middelkoop, author of The Big Reset, The War on Gold and the Financial Endgame. I wrote The Big Reset in 2013 and coined Bitcoin virtual gold. Quite proud of that. But I was stupid enough not to buy any Bitcoin in 2013. But I corrected that mistake in 2018. So I'm a Bitcoiner now as well. And a gold bug.
You know, from the United States, really been enjoying my time here in the Netherlands and in Amsterdam. We came in a little early doing all the tourist stuff, and you know, all these Dutch folks are, you know, keep talking about the golden era of the Netherlands, and you know, very very industrious history. And as I'm learning these things, you know, the East Indian Trading Company, and then you know, they're bringing in all these, you know, raw materials and they're processing in the sands, and then you know, they're getting shipped to warehouses in Amsterdam. Then you know, these finished products are going to market to the rest of Europe. And I kind of have you know, this working, you know, theory that a society is most prosperous when the money is most sound. And Paul, you're a proud Dutchman. You have a lot of experience in sound money, you know, specifically precious metals and Bitcoin. How do we get back to the golden era of the Netherlands?
Yeah, so in the 17th century, we had the Amsterdamse Wisselbank, the Amsterdam Exchange Bank. And it was a full reserve bank where merchants and people would store their gold, and that would function as the main currency in Europe, at least the sound money. And that was very instrumental to the success of the Netherlands. And at some point, they started loaning out the money, and then the VOC, the trade company, they basically forced the city of Amsterdam to provide them more loans, and they stopped using the full reserve model and became a fractional reserve bank. And then events in the 18th century, they basically went broke. So I would love to go back to that time, and I'm very much in favor of sound money. And I think in order to get there, you would need to have a free market of money first. And that's the main problem currently, is that we are forced to use the euro, and I would like to see, well, first of all, I think the Netherlands should leave the euro. I'm quite outspoken about that. But I would like to see a new system here where people can have more choice, and then we'll see Bitcoin, gold, other alternatives. They could then compete, and the best, the ones will thrive and be used by the public.
Yeah, that makes a ton of sense to me. Not surprised, fractional reserve banking is at the bottom of this. Wilhelm, you're similar, your position. What do you think?
Yeah, well, I'm an old boomer. I'm 63 now. I've been studying the history and the monetary cycle since the late 90s. I became convinced in the late 90s that this is a house of cards, of fiat money, and dedicated most of my professional life since then to precious metals. Bitcoin wasn't around at that time. For the last 25 years, people in our industry, the gold bugs, have been warning about the financial endgame, warning about a coming crisis, which actually arrived in 2007, 2008. And now Bitcoin has taken over this story in the last 15 years, and Bitcoin has shown that Bitcoin might be the best form of, well, stable money, might be the best money ever invented. But what's happening now in 25, and I think this is very important to understand, we see a huge shift in the core of the financial system, let's say on Wall Street. One example, Morgan Stanley is advising their clients now to quit the normal 60-40 portfolio, which means 60% in equity, 40% in bonds. And they officially advise people now to go to 60-20-20, the last 20 years physical gold. They haven't added Bitcoin yet, but you can expect the US government, the Trump administration, to introduce Bitcoin to the, US official financial reserves maybe. So this year is a watershed moment. 25 is a watershed moment. We are experiencing the end game of the financial system centered around the dollar, as has been built since Bretton Woods. And this is, I know the Bitcoiners aren't that happy because this year Bitcoin isn't the fastest horse in the race. But I wouldn't be surprised when Bitcoin will start a new rally quite soon, because we have this flow out of paper assets to hard assets, alternative assets. Sorry for the long answer.
No, it's great background and insight, Matthew. I know you do a lot of macroeconomic work, studying the inflows of different asset classes. What are you seeing right now with gold inflows compared to Bitcoin inflows, and their relative size?
Yeah, I mean, just bringing it to the present, I'm curious what you guys think as well, because 5 years ago, my old co-host and I, Fernando from Brazil, we interviewed Mark Faber, famous gold bug, Western bear, Asian bull. He was just so angry that gold was not going. He's like, all these flows are going into crypto. He's using the word crypto, of course, and everybody's just so angry in the gold market just 5 years ago. Now it's funny, a little bit see that now with the Bitcoiners, wondering gold's just, gold and AI over the last 2 years, if you track like the top US tech companies, are growing at 41% per year over the last 2 years on a trend. And that's exactly what Bitcoin does on a power curve. But Bitcoin slows down a little bit. So I'm curious, what you guys think if that's going to balance back out. Just funny numbers, I think. A lot of people have probably heard about the power curve. It's about 125K is what the curve will be by year end. Bitcoin follows this very, very closely. But Bitcoin also follows a power curve in gold terms. And so in gold terms, it would be 65 ounces of gold would be the trend, 97% R squared of Bitcoin. And the actual price today is 24 ounces of gold. And that's about the 20th percentile. If it gets down to like the 20 ounce range, that is super cheap statistically compared to the life that we've had with Bitcoin and gold. And then you tack onto that the fact that even when we had this big puke in 2022, SBF, everybody goes bankrupt, realize nobody has any money, they're over-levered in the crypto industry. Gold, at that time, was 9 ounces of gold per Bitcoin, Bitcoin priced in gold. So Bitcoin actually is growing, even in terms of gold, but right now gold is really, I think, stealing the show, and I'm curious, what you guys think about that.
Well, to avoid being angry and sad, you just own both, right? Last year I was on stage, I said they're friends and not foes. And I've never been a maxi. I went from gold to Bitcoin and back to gold, but I also always own both because I like them both. I think they're complementary. Bitcoin, like Willem said, may be the more perfect form of money, even though perfection doesn't exist. But gold has the reputation and history. If you look at central bankers, in 2024, 15% said they would possibly buy Bitcoin over the next 5 to 10 years. That percentage went down to 2% in the same survey last year. If you survey them and ask about gold, they basically all say we're going to increase our reserves. So knowing what central banks are doing, and especially BRICS nations, you know that for the next few years, gold will probably be amazing. So why not own it? If you know, or if you can basically calculate that it's going to have a good ride, just don't. You're basically you're shooting yourself in the foot by not owning it. So just own both. You'll sleep better at night, and you won't be as grumpy as some of these maxis.
And if I can add something to Paul's comments, the reason central bankers aren't adding Bitcoin to central bank reserves is the fact that they can never control Bitcoin. They can control gold because central bankers have always had gold in their reserves. So central bankers, if they join forces worldwide, can always decide what will happen to the price of gold. They can sell it, they can buy it, they can revalue it. They can't do this with Bitcoin because they don't own it. So because they can't control Bitcoin, they will never use Bitcoin voluntarily.
Yeah, I mean, who cares about the central bankers? They're going to do their own thing. We're Bitcoiners. We're in full control of our wealth for a reason. When I kind of zoom out, though, Wilhelm, and I'm looking at the macroeconomic landscape, I am really kind of seeing this return to real hard assets. I think the cat's out of the bag. Paul, you're saying it's like these central banks, they want to own hard assets, specifically being gold. We're seeing the U.S. like a big repatriation of gold. So when you're helping your clients form a portfolio, how are gold and Bitcoin kind of working in tandem to kind of guard against like this fiat money threat?
Well, I started the Commodity Discovery Fund in 2008. We invest in listed companies who are active in the world of commodities. I had years of discussions with our own board and investors to be able to add Bitcoin to our portfolio. We have around 5% of Bitcoin positions in our portfolio now, because I do regard it as digital gold. It should be in a broader portfolio, because Bitcoin and gold have different cycles. So when you put Bitcoin and gold in a portfolio, it stabilizes the portfolio because the cycles are different. And this year is a great example. For me, I think for us as, let's say, the smart money, you see more and more of the smart money incorporated Bitcoin in their strategies. But as said, central banks and governments do still have a major issue with Bitcoin because they can't control it. But I'm very curious what the Trump administration will do in the next few months on Bitcoin and crypto.
And in general, I would like to add that the older you get, the more conservative you want to run your portfolio. And so for me, it makes sense, the older I get, that I reduce my crypto holdings and mostly my Bitcoins holding a little bit, and build up real estate, gold, to have a more conservative portfolio. But when you're young, just invest as much as you can in your own company, in your own skills, health, and you can be also more adventurous when it comes to crypto or Bitcoin. So my advice is, the older you get, be more careful. But in my view, they both deserve a place in anyone's portfolio. And I would just get rid of all the bonds and treasuries, as little as possible in your bank account, and put them in hard assets as much as you can.
Yeah, I can just add a little bit as well. If you think about, a lot of people want to talk about, are we early, are we late, or, obviously we're not super early anymore, but it really depends on your perspective, because if you look at this from a production, like a mining production value, gold is definitely having its day in the sun. It's about 100 million ounces of gold that's mined a year, and that's getting close right now at $4,000 an ounce over trailing 12 months, getting close to $400 billion industry. And so there's going to be a lot of people catching up to this. There's going to be a lot of good projects, maybe projects that weren't profitable before. Now they are profitable. Maybe some jokers are coming in. But regardless, there's a huge interest in the gold industry right now. And if you think about that compared to Bitcoin, if you take the mining industry and fees in Bitcoin and you sold it, miners don't do this, but if you sold it every day at the price it was over trailing 12 months, the Bitcoin industry at the moment is less than 20 billion. It's about 17 billion, which is actually the high from 2022. So it's super low relative to gold. In the oil markets, just for an example, that's a $2 trillion market is the oil industry. So I try to put that in perspective as well. I think I totally agree. I mean, if you're younger, you certainly want to go all in. I mean, not all in, but never financial advice, but you want to expose yourself more to Bitcoin. But it's still a very, compared to all the other industries, to me, it still seems like a very good opportunity.
Yeah, it's certainly not financial advice, educational purposes only for any NARC regulators in the room. That's something we're really focused on with our clients too, Paul. It's like we want to focus our portfolio on real-world hard assets. And one of my favorite sayings in finance is concentration is how you get wealthy, diversification is how you maintain your wealth. But you guys have talked about some of the geopolitical tailwinds. Gold is kind of commonly referred to as like a political metal. So if it's historically has taken the reign as like the sovereign neutral store of value. You were talking about the Trump administration obviously being a little bit more crypto friendly and kind of leading I would say the world in that front. If Bitcoin kind of takes that place, how do we think the geopolitics affect Bitcoin and its ultimate value as that sovereign store of value?
Well, when I talk to my Chinese contacts, I more and more get the picture that we're looking at some sort of a bifurcation of the system where the West is using stablecoins, crypto, Bitcoin as a sort of a conduit to soak up treasuries and dollars and liquidity, and in the East, BRICS. I mean, if you look at what the Russians say about stablecoins, for example, or if you look at what the Chinese are doing, they're making Bitcoin illegal and motivating their citizens to buy gold. So maybe at some point you're looking at a sort of a split between a Western crypto space versus a Eastern commodity-based system. I mean, I'm fine with both, of course, from a business point of view, but I think it's interesting to see how the world is going to develop and if we are going to see this sort of deglobalization where two different systems are going to coexist, one based on crypto, the other with precious metals as collateral. For example, in India, people can now use silver as collateral at their bank in order to stimulate lending. And in China, insurance companies are now allowed or actually motivated and incentivized to own gold. And in Europe, that's a no-go. So let's see how things go. But I would definitely keep an eye on what's going on in China, India, Russia, because we sometimes focus too much on what's happening in the US and Europe when it comes to crypto. But that would be my advice. Also look at the other side and what they're doing and how they perceive crypto and precious metals.
I agree with Paul's stance because the US has been weaponizing the dollar over the last few decades, especially in the last few years, especially since the start of the Ukraine war. But in reaction, countries like Russia and China are now starting to weaponize gold and silver, using it as a financial weapon of almost mass destruction, because they do understand that gold and silver are the Achilles heel of this dollar-centered system. The US dollar was backed by gold till 71, and after gold was, dollar broke away from the gold standard, gold became the enemy number one for the US financial system. So central bankers have been working very hard to manage and suppress the price of gold. And that's why the subtitle of the Big Reset was the war on gold and the financial endgame. And China and Russia understand this very well, are fighting the US now with gold and silver. And Bitcoin isn't part of that geopolitical fight yet.
What do you think, Matthew?
About well, I mean, I think that Bitcoin, the supreme collateral that Bitcoin is still a little bit ahead of gold. I mean, I have no problem with gold, but obviously it's a Bitcoin conference, and we all are pretty, fond of Bitcoin for obvious reasons. So yeah, I'm curious what you guys think, because I think that we saw what happened in Europe. The biggest thing that made the U.S. The center of the gold standard was Hitler and Stalin. I mean, by the first year of World War II, 80% of all the central bank gold was in North America. So it seems like from the side of a central bank position, like also this, like I said, 42% a year growth for gold last 2 years. Central bank buying is the same, like 1.5% per year. It hasn't I don't necessarily see where that I understand some of the reasons, but central banks don't seem to be driving that price. So I don't know. Yeah, I'm curious if you guys think that could really anchor them more, or will they have to embrace Bitcoin?
What I like about Bitcoin is the decentralized nature of things. So Bitcoin as collateral is amazing, because if we would set up a transaction like that, we can do it without anyone else trying to intervene. And with gold, of course, you're still depending on someone else's vault. Like India, for example, is getting most of their gold back on their own soil. And I get it, because then they can protect the gold. But if you then want to use it as collateral, it becomes more difficult. So, for example, China is using the Shanghai Gold Exchange as a new backbone for a gold-backed financial system. But then you have to rely on China. For example, Cambodia is now storing gold also using the Shanghai Gold Exchange. But then Cambodia is depending on China. And like Venezuela, for example, they tried to retrieve their gold from London, and then London said no. So that's definitely a disadvantage of gold that Bitcoin solves. So I agree with you that from a theoretical point of view, Bitcoin is maybe a better type of collateral. But at the same time, we have to deal with realities. And in reality, I see gold being used as a backbone for bricks and silver as well. But I'm a big fan of Bitcoin, so I'd love to see the other scenario play out as well. I mean, in that sense, I'm agnostic. And so again, I have to repeat myself, just bet on several horses and you won't be grumpy. And I can do this conference again and again and again. So let's just see what's going to happen. But I think you're right that Bitcoin has this advantage of being decentralized and therefore less prone to confiscation, intervention, whatever.
But, we have this huge fight between China, Russia, and the West now. But we shouldn't forget that it doesn't matter if you are in the White House in Washington or you're Putin and living in Russia, or Xi trying to manage China. They all have in common that they want to stay in control. And the guys who have the power want to stay in control. They make the laws, and they can decide whether you are allowed to invest in Bitcoin or in gold. And they all have this common theme that they want to stay in control. And what scares them most is that they lose control and people start to riot in the street and will start a revolution, because look what happened in 1917 in Russia. So governments worldwide will do everything to keep the system stable. And I'm always a bit worried what the Bitcoiners are wishing for. Sometimes I get the feeling that some of the Bitcoiners want it all to collapse and then Bitcoin can take over. But be careful what you wish for. And the guys with the power, the guys who own the guns, won't let you succeed.
Yeah, I'm of the belief that Bitcoin super feature is allowing its users to natively take custody of a digital bearer asset, and that's very important for not only, I think, the future of humanity, but the future of Bitcoin and Bitcoin adoption, because it really does give, I think, power to the users, and we're seeing that decision-making kind of restored to the base level and the individual holders, as opposed to these centralized power structures. I do think, to all you guys' points, that these central authorities are threatened by sound money. So in our final minutes here, how do we feel that sound money can raise all boats? Is that tide that lifts all boats? And we'll end on a high note here.
Well, I think in the end, in order to have sound money, you really have to first convince everyone that it's in their best interest to adopt a hard standard. And unfortunately, with politicians, of course, being the worst offenders, people still think that that money should be used in order to stimulate wealth and as long as, so it starts with education, and of course an event like this helps, but I would love to see in schools across the world that there would be more focus on Austrian school economics and the benefits of sound money, because if we don't teach people the benefits of it, I think we will be stuck with elastic money, fiat money for many decades to come.
Yeah, no, I agree. I mean, not to get too political, I live in Latvia. I have my European hat on now at the European Bitcoin conference. And, we are very close to Russia. They have this war. And I think Russia is still suffering from 100 years of communism, which they started. They still haven't got over that. China is definitely a great country to trade with, but the U.S. is approaching them now with much more caution. So I think that if you look at gold versus Bitcoin. Obviously, it's a great, safe answer to say, like, go for both. I think that we should absolutely do that. There's a lot of funds now where they're 100% gold, 100% Bitcoin. But I do think that at the end of the day, if there's a way where you can protect your money on a multi-jurisdictional level, you can do multi-sig across state borders. I talk about that even, I'm not even that much of a public figure, but multi-sig is like one of the best Bitcoin inventions. There's so many things down the rabbit hole with Bitcoin that you can do that I think at an individual level, it really empowers all of us. And plus, it's a really great return at the moment. So, without being too verbose, I guess that's enough.
Well, for private investors, it's quite clear that adding Bitcoin is very beneficial. But for me, the main theme and the main question is what governments will start to do now. Because if the Trump administration is serious on its Genius Act and is serious about introducing and backing all these stable coins, and look how they treat Tether now, and then you could have a huge shift from a sovereign like the US starting to roll out its crypto strategy, adding Bitcoin to their financial reserves. And once the US will start doing that, other countries will follow. And then the fiat system can become quite unstable, because then the flight from paper assets to hard assets has been upgraded to the sovereign level, and that's actually very scary. So I think the next 12 to 24 months will be the most exciting, but also the most dangerous one since 2008, since the Lehman crisis, because we're on the verge of a new financial crisis around sovereign bonds, around treasuries, because Japan has a huge problem on the fiscal side. UK has a huge problem. The EU has a huge problem, and US as well. And this will be the fight of our lives. What will happen in the next few years? Educate yourself, because there are lots of moving parts, and it can become very serious very, very soon.
Thank you, gentlemen.
Welcome back to Bitcoin Magazine's news desk here at Amsterdam 2025. I'm here with Jeff Walton. He's the Chief Risk Officer at Strive. George McHale, Managing Director of Bitcoin for Corporations at BTC Inc. And Henry Elder, he's the CEO of Satsuma on the London Stock Exchange, a Bitcoin Treasury company. So we're full of Bitcoin Treasury company fandom here. So let's start with Jeff, newly on the desk. So tell me a bit about Strive, because you're a Bitcoin Treasury company in the United States, and it is a market dominated by strategy. So how do you hope to differentiate yourself? Do you even need to? And how do you see the competition?
Yeah, absolutely. Yeah, we're relatively new. We got to market via a reverse merger. We did a PIPE transaction, raised $750 million of equity capital, and brought it into the market via reverse merger, now under ticker ASST.
And I'll note that Vivek Ramaswamy, a prolific investor,
yes,
is a co-founder of Strive.
Co-founder of Strive, our largest shareholder, founded in 2022. We are an asset management firm, now adopting a Bitcoin Treasury strategy. And we see a lot of opportunity in this space to issue digital credit. And that's what strategy has really pioneered here, is taking a big pile of Bitcoin and offering fixed income instruments backed and collateralized by a huge stack of Bitcoin. And really, we don't necessarily see ourselves as competitors to strategy. We see ourselves as complementary, more of like, strategy's Batman and we're Robin. You know, if you need people to go have conversations with regulators and rating agencies, it's much more helpful having multiple companies pushing the same agenda, pushing digital credit. And ultimately, our products that we offer the market have significantly different risk-return metrics. Our equity is amplified Bitcoin, and our digital credit is, digital Bitcoin-backed credit. So that's how we seek to differentiate, is that our products are just fundamentally different.
Henry, it's interesting to hear that, because earlier you were saying it's hard to be a pure play Bitcoin play in a world where strategy is the name that everyone knows. So tell me a bit about your thoughts on that front.
So, I mean, we had a great discussion about this earlier, right? I mean, it's like, if you want to be just a straight pure play, it's very difficult to do that outside of being strategy size, right? And we've seen the capital markets be closed to a lot of Bitcoin treasury companies. And what's funny is when I'm thinking of the companies that are really innovating and growing into, like, you know, following that very innovative path towards the size where they can sustainably do this, Strive is number one. Number one. I actually reached out to Matt a few months ago, right, when you guys had just taken on Semler, and the market didn't really understand what you guys did there. Mm-hmm. And, you know, you could see it in the stock price, and I was like, you know, dude, they don't get it, right? They don't get it yet. Yeah. But I think Strive is one of the models for our generation of Bitcoin companies that, you know, many of us are trying to follow internationally in how we grow into that more sustainable size.
And George, tell me a bit about how BTC Inc., which is a parent company of Bitcoin Magazine, how does it have the network and how does it facilitate these companies in their Bitcoin treasury ventures?
Yeah, so we launched Bitcoin for Corporations a little over a year ago in partnership with Strategy. And the idea, kind of similar to what Jeff is saying, is that, you know, they want to see more companies follow in their footsteps, more companies adopt the playbook that they've kind of been championing. And so the way that the Bitcoin for Corporations works is that we are on a mission to accelerate corporate Bitcoin adoption by highlighting the companies that are doing this great work, resourcing them, creating environments where they can meet each other, meet the different vendors in the space. We put on a symposium last night of all of our members and others in the space. And so yeah, I mean, the goal really is to just continue to platform these companies and make them known, equip them, resource them, and connect them to each other.
Do you see a world in the future where just every company is going to be some sort of Bitcoin treasury company?
I mean, absolutely. I think that we are definitely on our way. I think it's going to look a little bit different. You know, not every company is going to be a pure play Bitcoin treasury company, but every company eventually will hold Bitcoin on its balance sheet in some way, shape, or form.
On that note, coming up later today, we've got Khing Oei along with Tyler and Cameron Winklevoss on the main stage. You don't want to miss out on that. Followed by a fireside chat with Gilles Roth, the Luxembourg Minister of Finance. Meanwhile, we're going to take a look at the main stage right now happening, the future of financing in a Bitcoin-dominated world. Let's have a listen.
Right. Good afternoon, everyone. We are going to talk about Bitcoin financing, quite the hot topic these days, especially as we've seen the growth in the mining industry and in hash price, and also especially with Bitcoin treasury companies. So we've got a great panel here. I want to start really with mining. We've got some mining experts up here today. How has the capital markets for miners evolved over the last 12 months, especially as we've seen some consolidation and also pivots to AI within the industry?
We've seen quite a bit of evolution in miner financing, I would say, over the last 12 to 18 months. I work for Luxor Technology, and we provide miner financing through hash rate. But to answer your question, I think there's just a lot more options for miners. I mean, even going back like 2 years ago, after the last bear market, it was really hard for miners to get access to financing to fund the growth. Right now, you know, in terms of funding growth in either mining or HPC, there's a lot more access to capital. So for us, like, what we've seen is just a massive explosion of options for miners to get that access and the growth that comes with it.
How about from the Ant Alpha side?
Thank you. I work for Ant Alpha. It's one of the largest financing firms for Bitcoin mining facilities globally and also in Bitcoin. The market structure changed tremendously in the last 12 months. On the middle and small size sector of miners, a lot of them were able to basically pay their loans and switch more to Bitcoin loans than to mining loans, just because they want to pay the debt and move on and scale their facilities. So a lot of them did that. On the energy loans, we offer also electricity energy loans, basically. Those are very sticky because energy prices also going up and a lot of miners continue to pile up on that product. For the larger miners, as Matt mentioned, they have more options, also more capital market options. Some of them are public, some of them are to be public. They have more access to capital. So it really depends on the tier and the location. But we see a lot of them focus basically on paying their loans and scaling, basically getting loans for new facilities and better hardware and such.
I would add that the cost of capital has come down quite a bit. Especially over the last 12 months. Again, going back to like 2 years ago, miners were seeing, high teens cost of capital, and now that's compressed quite a bit. And I think it's natural once you get a lot more options for financing, the cost of capital comes in quite a bit. But, we've seen sub 10%, depending on the type of loan they're getting. The Bitcoin denominated loans we're seeing, all the way down to 6-7%.
Is there a meaningful difference in that cost of capital for the publicly listed miners versus smaller private entities?
Meaning, is there a difference between the two?
In terms of the cost of capital?
Yeah, definitely. The cost of capital actually comes down quite a bit depending on a number of factors. One, the creditworthiness of the counterparty is super important. So even amongst the publicly traded mining companies, there's a pretty big divergence in creditworthiness. And then the collateral, obviously. So whatever the LTV of the loan is, obviously will drive down the cost of capital.
And what financing structures in terms of, you've got straight bonds, you've got convertibles, you've got Bitcoin-backed loans, you've got equipment loans, you've got electricity loans. What structures are you guys seeing done in the market right now, and what's really the most competitive option for a miner?
So this is a very good question. Again, miners have the full menu to access those products. But what we have seen recently that more and more miners are investing to get loans to build the new mining facilities in new jurisdictions that have cheaper access to energy. It's really nailing down to more energy costs and scalability and navigating the regulatory environment for new, basically, jurisdictions. And this is what we are seeing. A lot of miners already are in Texas, already are in Middle East already, but they are exploring Africa, they are exploring South America. And being able to underwrite risk and scale there, this is a competitive edge for companies like us or for the miners to be able to compete in the industry. But to answer your question very directly, like Ant Alpha, we offer very standard products. We don't do leverage. We do everything like oversecured and such. So our rates are more sensitive to the SOFR and the Fed fund rate, less sensitive to the credit of the client, just because we have very standard set of products and structures. But the energy loans and the scaling mining facility loans continue to be our big products. And a lot of the older miners, Bitcoin loans are also big product because they already accumulated Bitcoin for a long time, and now they want to have access to it to do maybe other things or buy real estate in Miami or something else. But this is what we are seeing.
Yeah, I would add one thing to that. What you mentioned, you're seeing a lot of is the over collateralization. There's a lot of Bitcoin-backed loans out there. But what's really interesting to me is, the collateral terms for these loans are pretty crazy, if you ask me. Like, people are asking for 120, 150% over collateralization, which a lot of the miners are willing to do because they're just sitting on the Bitcoin anyway. So they have a hodl strategy many times that Bitcoin's idle, so they don't mind over collateralizing. So I think, to answer your question, I think you're seeing a lot of the, Bitcoin-backed loans being put to use.
And one more area to add, miners now are more strategic and they are looking more for longer-term loans that are aligned with their structures. And not just Bitcoin miners, also Bitcoin treasury companies and such. They are looking for structures where it's usually beyond 1 year, has competitive rate, and structured in a way that is aligned with their business. And this is a signal of matureness in the space, less of miners just trying to live day by day like 5 years ago and just trying to break even. So we like that. We like the new structures, and we see more public companies and others looking for doing convertible note structures and treasury products with crypto-native companies because they can be more aligned and more positioned to offer better financing terms.
In terms of those longer-term products you just mentioned, how mature has that industry gotten? Like, what types of term loans are you seeing in the market?
From like sizable numbers, we see one like up to 3 years is very liquid, and actually we offer this kind of range, but we are exploring up to 5 years as well.
We're seeing on the shorter side. I think the markets that we operate are more in the 1 to 12 month or even 18 month. And the reason the markets that we operate are basically miners can sell their hash rate forward and get the Bitcoin up front. And so naturally for those types of products, they're taking the assets that they already have, paying it back through our mining pool, but those need to be shorter durations just due to the risk involved with it. But I would agree. We are seeing, on the other, more traditional type loans that are going out, 3 years. We're seeing a lot of that. I think a lot of times miners are trying to line up the duration of the term with the machines that they're purchasing, the life cycle of the machines, and that could be 3 to 4 years. So, usually that's the term that they're looking for.
Yeah, actually, you're right. I mean, for us, we do 2 year standard for new mining machines because this is the average expected span of having productive hardware, basically, chips. So we do standard 2 years for mining facilities.
Great. Well, I want to zoom out a little bit from mining and kind of just talk about the broader Bitcoin market. We've seen these Bitcoin credit expansionary cycles being one of the things that really drives the feeding frenzy and risk-taking in bull markets, but also something that causes a lot of pain on the way down as that credit cycle contracts again. Where do you guys think we are in the landscape of that expansionary credit cycle in the Bitcoin landscape today?
Well, so first off, I don't know anything about mining, so I really couldn't comment on the former topic. And second off, Tyler is our quant, so for all the hard questions, I really just defer to Tyler to answer it for us. In terms of where we are in the credit expansion for the Bitcoin ecosystem, and it's going to be interesting to actually see, like, as the Bitcoin markets and the TradFi markets merge together, maybe the credit dynamic that exists in the TradFi market bleeds into the Bitcoin market, and they become more interconnected. Bitcoin doesn't have its own credit expansion process per se, but right now they're pretty segmented, and I'd say we're very early. I mean, from the digital credit perspective, you can look at how levered up Saylor is, and I think Saylor's like the most levered in terms of issuing all the preferreds and securities that he has, and relative to how levered he could get. I think we're in the first 10% of the credit expansion phase. I think he's talked about a 30% number. Right now, I think he's closer to 10%. He's under 10%.
12%, yeah, 15%.
So, and I think as that number expands, not only does the dollar sum get very big, but also the price of Bitcoin will be going up over that period too. So I think we're in the very opening stages, and I think for most of the Bitcoin treasury companies, they're trying to figure out what debt instruments they want themselves, and they're at the very beginning stages of that.
I would totally agree with that. I would think of it not in terms like a cycle, but more where we are in the maturity path. And I would definitely agree with you. I think we're pretty early in the maturity path, and I think that there's quite a few ways to go here. But I like what you said. I think there is a blending of traditional markets and Bitcoin markets that is happening right now, but as more people come into the space from traditional markets, it's natural that it's going to happen, but I would totally agree with you.
It's also been interesting to watch the competition, and Durar, you mentioned this, and right now we're actually exploring a deal with Ant Alpha, so I like this. This is a good topic, but how many people in this room have ever taken a loan against their Bitcoin? I'm curious, actually. Raise your hand if you've taken a loan against your Bitcoin. Okay, look around, people. We're early. All right. When the majority of this room raises their hand, you need to be closing out your credit. But what's been interesting to me is now from Bitcoin market participants from an Ant Alpha, I could borrow $500 million from Ant Alpha. I mean, that's insane. I mean,
you already did 200 million.
I've already borrowed 200 million from them. So, like that's typically money that you would get from a Wall Street firm or from a major financial institution. And now Bitcoin firms are really able to compete head to head in terms of size and capital that you really could only get from very few sources earlier. And I think that creates a very competitive landscape. And it's kind of awesome. It really is kind of shaking up, I think, the balance of the lending markets. And I think it's really just beginning as these balance sheets keep growing. The size of these loans are just going to get bigger.
Yeah, I just want to add two key elements to the credit market. Since the last crisis, I believe there is a lot less leverage in the ecosystem. All companies, small or big, they think about risk differently, especially credit risk. But I think on the broader market in general, I think having the ETF market and now allowing in-kind contribution to the ETF market will allow people to be able finally to have a prime broker model where people can have exposure to their portfolio much easier. They can do in-kind contribution to ETF, then they can borrow margin against that, then they can buy other things or borrow against it. So I think the credit market is going to explode in the coming few years. Now we are on the early path. And there are more and more instruments, standard instruments that fit within the capital markets regime now that people will be able to, that fits their risk parameters. Think about pension funds, think about public companies and such, and they will be able to take a credit from traditional banks and beyond in an easier fashion and more standard way.
You mentioned the health and kind of the risk management across the industry. What are some of the factors that you guys look at, particularly as lenders, to kind of assess that overall health and when firms are starting to get over levered, or gauge your temperature on where you think that risk is at?
For us, it's going to our two answers are probably going to be very different. For us, we need to assess the health of the miners. So we have a pretty robust credit profiling process. So we'll look at the miner. If they're a publicly traded company, it's much easier. If not, we have to ask for lots of financials, balance statements. But we want to know what their break-even, what we call it hash cost, like what it costs for them to mine. We need to know what their break-even is when determining how much money we can lend to these miners. So we'll look at what their energy costs are, what their operating costs are. Do they have redundancy, like meaning do they mine in different locations across the world? Like those are all very important things to us. And then we look at the performance metrics too. So these miners will be on our mining pool, and we can look and see what their uptime is, how much hash rate they have, does that fluctuate, is it growing? So for us, it's really just assessing the health of the miner, and we don't like to say no to anyone, but depending on the answer, it's a function of what the interest rate's going to be and how much we can lend them.
I think there's also this isn't really answering your question about the credit health of these companies, but I also think there's a lot of complexity that can get layered into these credit products that kind of like keep taking us to a new frontier of them. Tyler, maybe explain the product you were just pitching upstairs. Like, you can do some pretty interesting stuff here when you add leverage on top of credit. And, the pitch you gave was like, okay, take your Bitcoin, use that, borrow against the Bitcoin, take the cash, buy STRC or buy the European equivalent STRE, borrow that money against your Bitcoin at 7% or borrow against the shares themselves, STRC, at 4.5%, and you're getting a dividend of 10.5%. And so you lever that baby up, and then all of a sudden now you're yielding 20% plus. Like, okay, like there's a lot of interesting stuff here that you can cook with, where if I was able to hold my Bitcoin and get a 20% dividend on my Bitcoin off of a Sailor's Preferred, that's interesting to me, especially when we're at the beginning of the credit expansion phase and not at the end of the credit expansion phase.
That idea sounds super scary to me. All you kept saying was, it's all leverage, man. Nothing could go wrong.
Yeah, for us about risk management, I like to call us more like Bitcoin financing firm, less of a lender, just because we really partner with the client. We call them partners. The reason is, we underwrite the whole cycle. We underwrite the new side, the electricity source, the land, the regulation, the machines, the hash power. We underwrite the whole facility. And then we offer the loan on that facility based on those parameters for 2 years, which is the lifespan, expected lifespan of the facility. So we pretty much don't take any risk on that front, just because we see the whole life cycle of it. And then on the Bitcoin loans, we do very standard, like a 60% LTV, all of that. So some people that doesn't fit them, it's okay. We don't do those loans anyway. So there are other people who like to take more risk, more leverage. It's fine. But we cover that market sector who are truly Bitcoin people who want to be in the market medium to long term, not people who are trying to enter and exit certain cycles. And this is the kind of partners we work with. And aside from that, we are comfortable with the swings of Bitcoin. And because we are long Bitcoin, long hash rate, even we never liquidated a client actually. Sometimes clients say, I cannot afford it. We might buy the facility back from them, add it to our portfolio. And this is the differentiator of someone like Wall Street lender who just wants to get their money right now, liquidate right now. That might not suit an industry like miners who go through different cycles and support them. So anyway, we take risk management very seriously, but we also act on it. So and very similar, like you have to be very technical in this field. You cannot just look at balance sheets, and that's not sufficient.
It's probably easier to go through credit profiling if they're over collateralizing, right? It becomes less of a concern to you. For us, I mean, it's super important because the collateral that we're taking is hash rate. You know, it's not Bitcoin sitting in a tri-party. I mean, sometimes it is, but if we're extending credit to a miner and they're just, collateralizing in a hash rate, like creditworthiness is super important to us. But I think on these loans that you were seeing, from that you guys operate or Coinbase or some of the other ones where they're taking, 150% collateral, you're not as worried about it.
Right.
Now, for the Bitcoin Treasury company space specifically, like what you mentioned, Saylor targeting kind of 30% leverage on his Bitcoin equity. What are the most, elegant and the most popular ways for a treasury company to achieve that leverage today?
There's a variety of different tools, and I think the market right now is also quickly learning about what's available to them. I'm used to the world of Bitcoin-backed loans where you're an individual user and you don't really have much negotiation power, and it's a very different world than when you're an issuer and you're dealing in large sums of money. I think what's been a popular structure, one that we've done, is a convert. I think that one of the challenges with the convert is that typically when you're doing converts, there's someone who's arbing the convert on the other side, and so you can have a really low cost of capital, but you can pay for it in other ways, like you can pay for it with your stock getting shorted, for example. And so not all of these are exact apple-to-apple comparisons. I think the Bitcoin-backed loans are popular, converts are popular, but I think the market's also really assessing these preferreds. And what's nice about the preferreds is that at the end of the day, you have a lot of flexibility as an issuer. The challenge is that yes, you have a lot of flexibility, but if you actually use that flexibility in like the time that you might want to use it most, it's very damaging to do so. If Saylor can suspend the dividend if he wants on these preferreds at any time, but if he did, it's going to be really bad. It's going to be a long time before he's going to be able to issue any new securities. So, there's some trade-offs of, he's paying a higher cost of capital, he's getting more optionality. Whether that trade-off is worth it, we'll kind of find out.
I'm kind of the opinion that I agree with everything you said, but I'm kind of the opinion rather than focusing on levering up, I think they should be focusing on how to deploy the capital that they have. I think what's interesting to me is, follow the treasury space pretty closely, is you're not hearing much about how they plan to deploy or what their business model is. I think there's a lot of treasury companies that are just treasury companies for treasury company's sake, which I think is wild, and again, what could go wrong? But I would like to see more of unique structures of deploying that capital and growing that Bitcoin, Bitcoin yield strategies. There's a lot of different ways you could do it, but you're just not hearing much about it. And I think, going back to where we are in the maturity path, we're at 0 right now in terms of treasury companies. I think there's just a lot of room to grow, and I'd really like to see in the space, what they plan to do.
Yeah, I mean, I look at Bitcoin treasury companies as like the Bitcoin version of a bank. And banks are kind of like the fiat treasury companies of the TradFi world. And you're in the business as a bank of monetizing your balance sheet. And if all you're doing is levering up the balance sheet, but you're not monetizing it in any way, you're kind of missing the picture of what you're supposed to be doing as a bank.
I mean, it seems like there'd be an opportunity for treasury companies to be lenders themselves.
Agreed.
Well, our panel here is called The Future of Financing. So I wanted to look ahead a little bit. What structures do you guys think are new, innovative in the market? What do you think will dominate the next 5 years of Bitcoin credit? Whether it's Bitcoin-denominated convertibles, whether it's hash price future forward contracts, whether it's Bitcoin-denominated prefs. What does the future look like?
The future's here, man. All those things you listed, we're doing already. So the company I work for, Luxor, we have hash rate markets. There's hash price forwards already that exist. We have a structure that I mentioned before where, you can sell your hash rate in the future and get your Bitcoin now. I think all those things, they exist already and those markets are fairly robust. But I think to your question, like where does it go from here? I think it just gets bigger and more sophisticated. So when we first launched our product, we were only doing like a couple, like tens of millions in notional a year. Now, we were talking about this earlier. We're close to, we're going to be hit close to $1 billion in notional this year. So it's like
off your hash rate contracts?
Yeah, we've already like 20x last year.
Wow! Congratulations.
Thank you. Yeah, it's been wild. And the reason is, I think to answer your question, is you're getting more and more institutional players that are coming in. So, our customers on the lending side are banks, are spot exchanges, are treasury companies, hedge funds, family offices. So I think the future really is just, you'll get more sophisticated instruments that exist that are borrowed from traditional finance, but it's just you're going to see more and more players in the space that had traditionally shied away from it, which will drive down cost of capital too.
Yeah, I think more digital credit products in more currencies from more issuers. I think cost of capital is going to keep coming down. I'm surprised to your point of how much it's come down, and it seems like it's even coming down more. I'm guessing that's just from capital flowing in from the TradFi world that has access to the Fed.
It's wild. Like our first deal we did was I think it was 16% was the cost of capital, and now we're in the low single digits. So it's crazy.
Yeah, and I think one of the areas that I think is an interesting place for some greenfield for expansion is on really identifying some of the credit risks that can be uniquely mitigated through Bitcoin. And so we've looked at products before like Bitcoin denominated convertible notes, which is an interesting product. One of the challenges with a Bitcoin denominated convert is that, if I choose not to convert, I'm dependent upon the person that I lent to return the Bitcoin to me. And what if they decide they don't want to return the Bitcoin to me? So what if instead I could leverage the actual technology of Bitcoin, and I could do a Bitcoin denominated convert, and I could do it in a multi-sig wallet where, if I haven't converted within some time period, I'm able to actually pull the money back myself. And so, that would be a substantially lower risk convert for us to do. And if it's lower risk, then in theory, we should be willing to accept a lower interest rate. So I think there are some superpowers Bitcoin has, and as those get brought to bear, it'll be interesting to see how they impact the credit products.
I think the products we have already, we are the future, is going to continue to exist. Just thinking about the geopolitical risk and inflation globally, we are going to see more and more Bitcoin gold secured products. You are going to see more and more people looking at maybe Bitcoin is not the best for people in India, Middle East. We at Alpha, we are really investing a lot in gold and Bitcoin, but also most importantly, I think we are going to see more and more energy products. People might say, if I invest in energy, it's going to be cheaper correlation to Bitcoin. So we see that's why investing in energy infrastructure is going to be very important product to correlate exposure to Bitcoin and beyond.
And if I could just piggyback, one more thing I think we're going to see. We're going to see the Ant Alphas of the world and the Coinbases of the world and the Zappos of the world. Their lending activity is going to ramp up, and we're going to start seeing billion-dollar loans. And I think we're going to see Bitcoin and crypto firms arrive in the global financial system as actual financial institutions. And I think that's going to be pretty exciting to see.
And Nakamoto will be the future Federal Reserve.
That's right.
All right. Thank you, everyone.
Thank you very much.
Thank you. Thank you. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. I'm Frank Corva, Bitcoin journalist, joined to my left by Jeff Walton, Chief Risk Officer at Strive, George McHale, President of Bitcoin for Corporations, and to his left we have Henry Elder, CEO of Satsuma. Gentlemen, we were just speaking off camera, and we're also watching on the main stage. Lots of talk about Bitcoin Treasury companies. Everybody here involved with Bitcoin Treasury companies. Two things that I think a lot of people ask is, how important is the jurisdictional play? So we saw what Metaplanet did in Japan, and obviously that paid dividends, especially early on. And then also sort of different strategies that companies are employing. So maybe I'll start over here with you, Jeff. What is Strive's strategy? How does that differentiate from some of the other treasury companies out there?
Yeah, our strategy is to accumulate Bitcoin exposure per share, right? Just like all of these other companies, but we are doing it through the form of digital credit and issuing a perpetual preferred equity. Our perpetual preferred equity just started trading this Monday, SATA, S-A-T-A. Let's go. And let's go. And we also have announced a definitive agreement to acquire Semler Scientific. So, the first Bitcoin Treasury acquisition, and we want to have a very clean story. We want to offer amplified Bitcoin via our equity and offer digital credit via our balance sheet.
Okay, understood. George, you're obviously, part of what you're doing at Bitcoin for Corporations, like a trade group. You're sharing ideas, best practices. What are some things that maybe you've learned over the course of this year of doing this, and speaking with obviously many of these brilliant minds who are running these companies?
Yeah, I think it's like you said at the beginning. The jurisdictional factor is very important, right? So our network is now over 40 companies across 15 different countries. And, I think that's a really important part of what's happening, is that there is definitely a first mover advantage if you're the first in your region to do this and do it well, and understand kind of what the local distinctions in terms of what the regulators want to see and make them comfortable, making the investors comfortable, then you're going to be the winner. And so that's definitely a big part of what we're seeing. The other piece that, as you talked about, is I think we've kind of seen the first wave of the hype cycle be these pure play Bitcoin Treasury companies. And I think this next wave is going to be more about what is your underlying business, what's your operating business, how are you generating revenue, how are you creating value, and how are you using that excess cash to acquire more Bitcoin.
Okay, very cool. Over to you, Henry. Satsuma, you're based in London, you're in the UK.
Yep.
Satsuma, how is it unique to that jurisdiction? What is it offering investors?
Yeah, look, at the risk of sounding like an echo, jurisdiction's kind of everything right now. What particularly attracted me to London was, it's actually very relevant to Strive, right? You guys are the first ones to really follow on the MicroStrategy playbook, issuing SATA, as a stretch derivative. So if you want to grow to become a world-class Bitcoin Treasury company, you need to have the availability of corporate fixed income in a significant size in your home market. And number one is the United States, right? Number two is China, which has been a tough nut to crack. Number three is London.
We haven't seen it. There's no treasury companies in China, I'm assuming.
There's a couple.
There's a couple starting to come up.
Is that right?
They're small, though. Yeah,
they're
they're
really
small.
small.
Yeah.
Okay.
But number three is London. London's got over $1 trillion of corporate fixed income in that market. So if you are looking to grow something that's sustainable and world-class, great place to be.
Okay.
I think this really comes down to Bitcoin being underwritable.
Yep.
And just like we were talking previously, all these other altcoins, they're very difficult to underwrite.
Yep.
Bitcoin being an asset without an issuer.
Let's talk. I was going to say, so let's talk about that. So altcoins, we talk about broader crypto space. Some people talk about it being decentralized, but as you just said, we sort of know the teams behind these other things, right? Bitcoin doesn't have that. Is that really something that traditional financial institutions are thinking about when they're underwriting this?
Absolutely, because with a pure play Bitcoin...
I apologize.
Yep,
I actually got word that we have to head back over to the main stage. We have Khing Oei of Treasury joining the Winklevoss twins over at the Treasury stage. So ladies and gentlemen, we're heading over to there for our main talk of the day, and we'll be right back here at the live desk after that.
My advisory board. Guys, give a huge round of applause to Cameron Tyler Winklevoss. Thanks, man. So, guys, amazing to have you here. Thank you again. And first time in Amsterdam, really, and it's almost symbolic to have you here. I think some people would like to know, Winklevoss, actually Winkel means shop in Dutch. What do you know about your heritage from here?
So we've traced it back to Germany, but I think a lot of people think we're actually Dutch. So we get confused as Dutch a lot. So it's cool to be here and visit the country.
The Germans say we're Dutch. The Dutch say we're German. Nobody wants us. But America took us. The Bitcoiners do, though. Bitcoiners do, yes.
Bitcoin. There we go. Bitcoin first.
But yeah, I think it translates to a lot of these names are very literal. So Winkel is corner store, and I think Voss is fox or businessman. So it's sort of shopkeepers on a corner back in the day.
There we go. And now to be of Gemini. So you've had an amazing week. Gemini had its first results. You made a big announcement yesterday of another treasury company. You were in the Cantor Conference in Miami. You're here now. Who knows what next? Maybe good to give the audience a bit of an idea how this year has come together. You've been in the space for such a long time, real Bitcoin OGs. Take us where we end up here today.
Yeah, so we found Bitcoin in the summer of 2012. We weren't looking for the next investment, but we were on vacation in Ibiza in an island, and some guy said, hey, have you guys thought about Bitcoin? And we're like, no, and we started to learn more about it and got super excited and started buying. And when we first bought our first Bitcoin, it was under $10 a coin. So fast forward to today, we've added a few more zeros onto the price of Bitcoin, but we still think it's very early. And the reason being is that we think Bitcoin is digital gold. So if you take a gold framework for Bitcoin, you take the market cap of gold, divide it by 21 million coins, and you get to about $1 million a coin conservatively. So we think we're 1/10 of the way there. So we're going to put on a few more zeros between now and then. So the thesis is still playing out, and we're only 1/10 of the way there. And we started Gemini in 2014 to basically help people buy and store Bitcoin in a really easy manner and to onboard people into the space. And we launched in 2015, and we've been building since then. We're now live in the Netherlands. So if you sign up with the code AMS15 and trade 100 euros, you'll get 15 euros for free if you want to use Gemini.
Amazing.
So this year in particular, it's been quite a whirlwind in a good way. So before the election, the previous administration attacked our industry in America for 4 years at least. So it was a crypto winter, but there was also a war on crypto. So everything changed when President Donald Trump was elected in November, just over a year ago. And we had the first ever crypto summit at the the White House. And we all remarked, we said a year ago, we were more likely to end up in the jailhouse than the White House. And so it was quite surreal to be in the White House engaging with this administration on crypto, but everything changed. So the war on crypto ended. We were able to take Gemini public in September. That never would have been possible with Gary Gensler and the previous SEC regime. And so it's been an amazing year. The crypto winter, you're not sleeping because you're trying to survive. And then the crypto summer, you're not sleeping because you're thriving. And, you know, you live on a plane and Zoom, and, you know, we were in Miami for a conference, at the Cantor conference, now we're here. So you don't sleep for different reasons, but it's all good reasons.
Absolutely. And obviously the US, there was a massive tailwind and that massive change, which has really been great for the industry. What are your observations? You know, you're building a business in Europe with Gemini. What are your observations on Europe, on political landscape, regulation? What can we learn? Anything that could sort of help us get there as well in a way, right? It's all about adoption, increasing adoption, and we can certainly use some tailwinds here too.
Right.
You want to kick off?
So Europe got some things right with MiCA in a big way, and so it's like a federal framework for crypto, spot crypto in all of Europe. We got our MiCA license this summer and also got a MiFID license, so we have perpetuals and spot trading in all of Europe. So they beat the US to the regulatory federal path. But I think that generally speaking, like, you always need more access to Bitcoin. And that's the whole thesis behind Treasury and what we're excited about, trying to build the largest Treasury company in Europe so people can access this incredible asset. Bitcoin was the best performing asset the last decade and will be, we believe, for the next decade to come, but it's still hard to access even though we've been at it for many years. And while some people can come to Gemini, others have brokerage accounts, but they can't buy ETFs. And so they need some sort of vehicle or ability to gain investment access. And that's really, you know, that's been the mission of Gemini, is giving people access to Bitcoin. And that's also the mission of Treasury. And there's more work to be done.
But yeah, we want to bring Bitcoin, which is the greatest financial innovation of the last century, back to the home of modern finance. Amsterdam, the Netherlands, is the home of the stock company, the stock market, so the golden age. And so we want to bring back the digital golden age and bring Bitcoin home to Europe.
Right.
Woo.
Yeah.
Fantastic.
I mean, if you think about it, U.S. capital markets all basically draws back to the financial innovation that happened in this country many hundreds of years ago. It's pretty remarkable. So we really want to make Bitcoin great here.
Fantastic. Yeah. No, it's great. Absolutely great. We're all very grateful for that because it's absolutely true, right? Bitcoin, we see Bitcoin as the first layer of where we're going from here on, right? Yeah. And there's obviously the whole ecosystem that can be built on top of that, right?
Right. Yeah, and I think it's really helpful to step back and look at the history of money or the history of finance, and you realize that a lot of these things that you took for granted didn't always exist. Money wasn't always green pieces of paper. It was precious metals. Before that, it was shells and whatnot. And stock companies didn't exist. That was an innovation. And then people wanted to trade their stocks, so they invented this marketplace to do that. That was an innovation. And so you look at money as this technology that's always being innovated on and improved over its, let's say, 10,000-year history, then cryptocurrency or Bitcoin was that latest breakthrough. You had paper, you had precious metals, then paper backed by precious metals, then just floating paper, and all of a sudden enter Satoshi Nakamoto with the Bitcoin white paper. So when you look at that timeline or the history of it, you understand that helps me feel that why Bitcoin is very inevitable in a way. It was always a when, not an if. And so that's how I like to view cryptocurrency. And then you just see these other iterations happen as well. People start innovating with Bitcoin was proof of work, Ethereum programmability, Zcash, privacy. So it's this constant iteration. It's happening.
Yeah.
Absolutely.
But if you think about it, these types of innovations in finance, they don't happen that often. I mean, this might be, this is very much probably a once-in-a-lifetime sort of Cambrian explosion of new development. You have Bitcoin that basically proved out proof of work and created digital scarcity out of ones and zeros. That happened only, a little over a decade ago. And then that could be, the substrate for the next 500 years. Similar to how like joint stock companies are still very relevant and important and will be probably for many hundreds of years, if not thousands to come. So this is a very special moment in the history of finance if you sort of zoom out and look at the timeline.
Kind of interesting because I've heard you say in the past that money is sort of the true social network, which you know all about, and
it's the greatest social network
of
all.
And it's kind of ironic because in a way, Bitcoin is trustless, right? And how do you think about it as you've seen sort of the community grow? You were an OG in early days, and it's sort of all little pockets and sort of rebels, and we've gone through these kind of big conferences. How do you see that space developing and going from here?
So when we gave the keynote at the Bitcoin 2013 conference, there was probably 100 people in total. And today, I mean, I don't know how many thousands of people are here. And I think the Bitcoin Vegas conference had 250,000 people come through the weekend last spring. So it's grown remarkably. But a lot of the OGs that were there earlier are still there today. You take someone like Zuko, who's a founder of Zcash, but he's been in the space, he's been a cypherpunk since the 90s. Balaji, he's been there, he's one of the first people we met in the Bitcoiners in the space. So in some ways, a lot of things have changed, but also a lot of things haven't changed. And the thesis hasn't changed around Bitcoin. Gold 2.0, that will be the thesis from here on out.
Gotcha.
Right. And so Gold 2.0, people love, or what's price predictions. Our framework is the Gold 2.0 framework, that if Bitcoin is Gold 2.0, then it has to disrupt gold. It has to disrupt the market cap of gold. And when you do that quick math, that indicates a price per Bitcoin of $1 million per Bitcoin in the future at a minimum. And so we think Bitcoin is going to become the global reserve currency for the world eventually, and we think it's just started. If it's going to be over $1 million a coin and it's about 100,000 today, well, that's a 10x from here. So we're maybe in the bottom, to use an American sports analogy, maybe the bottom of the first inning of American baseball game.
Yeah, that's a question. You often meet Bitcoiners and they're like, oh, I got in 13 or 14 and it rallied 10 times and I sold. Many people had a Bitcoin at some point but then sold again. You've always had this massive conviction from the beginning, right? Is it still the same? Is it still when you grow? Because you're still saying, it can go 10 from here, and it's still going to be, we're still early. How has that changed over time, or has it been the same from the moment it hit you?
I mean, so the gold framework has always been the same. I think you could pull up clips of us on CNBC in maybe 2015 or 2014 or 13 saying the exact same thing. So until it disrupts gold, you have to be a hodler, and then when it does, you'll still be a hodler. But we're patient. We have our conviction, we have our idea, and so we hodl on. And I think it's important to almost be simple about it, right? And keep it simple. A lot of people try and trade around it, and they miss out on these huge gains. Unless you are a professional market maker or trader, or risk neutral kind of trader, and that's what you do, you're better off just buying and watching it grow over time. Yeah, and I think that, I don't know, maybe it comes a little bit from our time as rowers. We often say some of the best lessons in life we learned at the boathouse, and they had little to do with rowing. And sort of goal setting, working day in, day out. I mean, rowing's a game of millimeters, inches, and you're just trying to go a little bit faster with every stroke, and you're doing a very repetitive motion. We rowed for 15 years, and you just get a little bit better every day, and you compound, and before you know it, you might be on the Olympic starting line. But it takes 15 years to sort of get there or at that world-class level. So when we build a thesis around Bitcoin, and it hasn't really played out yet, we're 1/10 of the way there. Well, we've got to keep rowing in the right direction and keep working towards that goal. To sort of step away, you'd miss out on a very magical and exciting journey. And so I think Bitcoin's sort of a vehicle for curiosity and where can this go. Yeah. And we're used to just, I guess, putting our heads down for many years at a time and being misunderstood, and people say, oh, you're crazy. What are you doing? You're pulling a piece of wood going backwards. Yeah. What good is that, right? And yet it's a very exciting, fulfilling sport, and we loved it. And I think the same with Bitcoin. It's like, it's just early.
Fantastic, yeah. And maybe while we're on that, Terry, maybe can you talk a little bit about what you think about the market right now, right? The markets, we've had, in essence, Bitcoin is flat this year almost, right? We're still having a lot of positive developments in the space. Bitcoin treasury companies, there's more strategic Bitcoin reserves. We'll hear about that later, actually. So what is your view on sort of maybe the last couple of months of the year, but also then into next year?
Yeah, it's a good question. Yeah, Bitcoin has definitely been a little bit boring lately. It almost feels like it's resting up and getting ready for some big surge. It's always hard to predict those moments, but they're going to happen. And so just be patient. But I'm not sure exactly what the catalyst will be if the Fed starts dropping rates more aggressively, if there's some other geopolitical situation. But I have faith that it's always going to go up, and it's going to go up 10x from here at a minimum. And it's the same feeling, that question's been asked for the first 10 years, when the price was $100, $1,000. During COVID, so it's very cyclical, as everyone knows. It hit a 20K ceiling, maybe it went higher, and then during COVID, it crashed down to $3,800 a Bitcoin, and then it totally ripped towards the latter half of COVID. So it's hard to predict these things, but when you zoom out, it's always going up. And so you got to be patient. And I think patience is super important here. We haven't been doing this for that long. It's been like just over a decade. It's just not that much time. And if you think back, it's important to appreciate what we've accomplished. We've got governments really upset at us. They tried to attack us. We helped vote in a new president because 50 million crypto hodlers in the US were attacked. And so we're a big coalition, and we're powerful, and we've achieved a lot. We have companies that are now public. We've taken Gemini public. We started building that since 2014 in response to Mt. Gox. I don't know if anyone has experiences trading Bitcoin on Mt. Gox, but it was very sketchy, let's say. You would get order acts, you'd place an order, and maybe a minute or two later, you would know if it went through. The site would brown out for 12 hours at a time. So it was a very different experience than trading Bitcoin or buying Bitcoin on Gemini. So we've covered tremendous ground in a decade, and we feel like we're just getting started. Bitcoin's just getting started. Treasury's just getting started. Gemini's just getting started. And we're going to be doing this for decades to come, God willing. And so we often say that in crypto, or Bitcoin and crypto, time, it's like dog years, a day is a week is a month is like a year in non-Bitcoin crypto world. And certainly that is the case, but it's easy to lose perspective on how far we've come, but also at the same time, it's really early.
Yeah, I mean, to think that we've created trillions of dollars of value voluntarily. Yeah. People just voluntarily say, hey, I believe in this, I'm going to buy it. They're not being forced or coerced into doing that. That's a pretty incredible thing.
Yeah, right. 100%. This is all peaceful. There's no gun to someone's head that says you must buy Bitcoin, right? People have to own dollars in the US because they have to pay their taxes in dollars. If you're a merchant, you have to accept dollars. That is not the case. There's no US Army and Navy forcing Bitcoin. This is a peaceful revolution. This is emergent money. This is sound money. It's the product of a free market, which is always the best money, and free markets are always the best markets. So it's quite amazing. And it all started with a white paper and some mailing lists and people just being excited about this idea of decentralized money and this movement of the separation of money and state. And that, we go back to the separation of church and state, or the printing press, the internet. That's how momentous that white paper was. It showed we can decentralize money, we can take it out of the purview or jurisdiction of the state, and make it in the free market for all of us to create money and decide what we think money is. And that's a huge paradigm shift in the world, just like the printing press was a huge shift, just like the internet was as well. And with the white paper gives us the blueprint to decentralize anything, not just gold, not just money, but finance into DeFi and much more. So it's pretty exciting, and I think it's just starting.
100%. And maybe go to parallel development. As mentioned, treasuries are a big theme, and you guys have been very active in it. Big announcement yesterday from a new treasury on NASDAQ in the US called Cypherpunks. Would love to hear more, Cameron, about that, and I'm also glad to be involved with that one. But great to hear your view and your vision behind what's happening there.
Great. So Cypherpunks is starting out as a DAT for Zcash. And again, buying Zcash is not easy. You can buy it on Gemini, but there's just not a lot of places to buy it outside of Gemini. So we're trying to give people access through an equity wrapper. And then over time, investing in privacy technologies and technologies that promote self-sovereignty. That's the mission, really based on the Cypherpunk manifesto that was written in 1993 by Eric Hughes. And I highly recommend everybody read it, because when you read it, you're like, whoa, this feels so relevant today. And yet it was written about 30 years ago. And we feel important that mission and building that and fostering it.
And maybe step back for people who don't know Zcash. Maybe just the 10 seconds on what, yeah.
So Zcash is a fork of Bitcoin. So it has the same tokenomics. There will only be 21 million Zcash, just like there will only be 21 million Bitcoin. It's totally fixed, but it's privacy through zero-knowledge proofs cryptography. So it's basically encrypted Bitcoin. And when we think about Bitcoin storing your value there, it's very transparent, the Bitcoin blockchain. So fine to store your value there, but maybe if you want to transact or spend your value, you may want to do that in Zcash, shielded with privacy. So we think the two coins go hand in hand. They're very similar. Obviously, like I said before, Zcash is a fork of Bitcoin, and we're big believers in both. And Cypherpunk is a DAT we launched dedicated to privacy and self-sovereignty, starting with private money and acquiring Zcash. And it trades, the ticker is CYPH, Saif. And we went live for trading yesterday, and we're up quite a bit. I'm not sure what percentage it was.
But
it was
a good launch.
Yeah, a couple 100% up. Yeah. I think it was the highest appreciating stock yesterday and the most traded stock yesterday on NASDAQ. So good opening day debut.
Fantastic. And if you look on X, there's quite a bit of debate between Bitcoin, called Bitcoin OGs or Maxis, and Zcash. Maybe it'd be great for you guys to shine a bit of light on that, right? Because there's, as we know, Bitcoiners love sort of fighting on different things, something very specific. Can get a bit emotional sometimes. And this is one debate that's kind of raging a little bit right now. You guys obviously have great relationships with Balaji and Naval and Zuko and some of those guys. And it'd be good to sort of get some sort of adult supervision in a debate.
Yeah, I mean, all the people that love Zcash also love Bitcoin, and they're OGs in Bitcoin.
And there were some of the first people we met in Bitcoin in 2012. I mean, the Bitcoin community in 2012 was 10 people, like a few people here and there. Like in Silicon Valley, it was, you could fill a room of maybe 20 people who believed in it and understood it. That was it. And those same people were excited about Bitcoin, saying the same things we're saying today back then, are also the same people excited about Zcash today. Right. And so the financial crisis of 2008, 2009 catalyzed Bitcoin. It was in the Genesis block, Chancellor on the brink of second bailout. And we think very much AI is going to catalyze Zcash and privacy and the need for privacy and people's awareness that they actually don't have much of it and they need to get it back.
But we think they go hand in hand. So Bitcoin you can use to store your value, and Zcash to move and transact your value. Think of Zcash as encrypted Bitcoin, or digital cash. And you really want to have both, and we like both. It's not one or the other, in our opinion.
Yeah,
Right.
obviously Bitcoin's got a huge first mover advantage, and I don't think they're competing, right? They're very complementary, but it's got a 10-year track record, and it's a huge market cap. Zcash is obviously very nascent, but it's tackling a really important problem of privacy, especially in the age of AI.
Yeah, which is actually another good segue into another probably interesting theme, right? We've heard a lot about AI is clearly the sort of biggest thing that happened to our society in the last couple of years, and in terms of investment and developments there. In the meantime, crypto's been going for longer, Bitcoin's been going for longer and steadily growing. And sort of a question I get a lot at least is where do you see the two intersect, where do you see the two compete, where do you see the two synergize? They're inevitably the biggest trends of this sort of digital century and going forward.
Mm-hmm. Yeah, so if Bitcoin created digital scarcity with ones and zeros, AI creates digital abundance. And so in some ways, you need crypto just to authenticate going forward. But also the Bitcoin blockchain is quite open. And with AI, it sort of supercharges your ability to just see the flow of funds and transactions. So I think it's very important to have shielded money if you want to transact, and financial privacy.
Right.
I mean, one way I think about it is AI puts intelligence in your pocket. Bitcoin puts digital gold or a bank in your pocket. X made everyone a publisher, so media in your pocket. And so I mean, crypto, we think of it as, you and I buying Bitcoin or crypto, but it's really not money for humans, it's money for AI. You know, AI is not going to show up to JP Morgan and open a bank account or use a credit card or ACH or wire. It's going to plug into a protocol. And so I like to think of like when Elon Musk gets us to Mars, like what's the money going to be? It's obviously going to be crypto. And so these two technologies are they're made for each other. They haven't quite converged, and maybe that will be the next catalyst. But agents will trade value, and we think one day we'll have more agentic customers than human customers at Gemini.
And we used to say that we thought we'd have more machine customers than people, even when we were starting 10 years ago. And then you see obviously the robots and humanoids being built by Tesla, and you're like, oh, okay, yeah, now I get it.
Right.
It's really money for robots.
Right. And so when a Tesla self-driving car wants to pass another car that's in front of them, they'll send them a stable coin, let's say, to get out of the way, I'm in a rush. Like, here's $1 or whatever, $5. Move to the side, I'm going to go through. And also crypto is going to authenticate AI. Like, how do you know you're talking to someone who you're talking to on Zoom, right? And so using cryptographic techniques to authenticate, how do you know that you're getting an official message from a government channel? So crypto authenticates AI, and it makes it possible to understand like who's who and what's happening. And so, I think they're super important technologies, and it's just beginning for both of them.
Yeah, 100%. And it brings me, like, you guys obviously have Winklevoss Capital, your family office. Yeah. I think you have more than 200 investments. Obviously, the beauty of that firm is that there's no requirement to return capital to investors. There's a very, very long time horizon, just like you invest in Bitcoin, invest in Bitcoin treasuries. What are some of the major themes you're seeing there, right? Because it's really your way of, I guess, contributing to value, society, to what you're seeing. So very curious to see what the themes are, given that, frankly, you've had social networks, right? You had Bitcoin, right? You're seeing these things now. I think the audience would love to hear what you're seeing in terms of themes.
Mm-hmm. Okay. Yeah, so a big focus is crypto, space, AI, defense tech. Those are sort of the big verticals we're focused on right now. But we definitely have our entire bodies in the crypto game, not just our skin in the game. As founders and operators of Gemini, as founders of Cypherpunk DAT and our investment in Treasury. So we're sort of all in on crypto, have been for a decade and will be hopefully for many decades to come, and really just building out this frontier of money, new money, decentralization, non-governmental money. I think it's just very important for human prosperity, liberty, and freedom, giving people more choice, independence.
Yeah, I mean, space is obviously a really exciting frontier, and I love drawing parallels back to history. It's almost like the Dutch East India Company, and they're sort of setting sail, but they haven't landed on the New World yet, or Christopher Columbus hasn't hit America yet. And I think that point is when we get humans to Mars, and then there's this whole economy back and forth. So it's just another frontier. I think we're super attracted to the frontiers, the frontier of money, whether that's Bitcoin, crypto, Zcash, whatnot, just any frontier. We want to be building there. We want to be investing there, and we want to be spending our time thinking and talking to people about ideas around it. It's really exciting. Maybe in the 19th century, early 19th century, we'd be really into railroads or steamships at some point. But definitely that frontier now is Bitcoin, and it's early.
And what are some of the craziest ideas you've seen? Maybe you didn't fund it, but what are some of the craziest ideas you've seen on these frontiers from entrepreneurs? Anything that springs to mind?
I couldn't quite hear that.
What are some of the craziest ideas you've seen from entrepreneurs? Like, I'm sure you've seen many ideas of...
Oh, right. So the idea that we talk about that a lot of people don't, or makes their heads explode is this idea that precious metals on Earth are actually not that precious and scarce in the universe. And so we think that in the future people will be mining asteroids, and there will be gold there, and silver, and many precious metals. So gold won't be scarce, is not scarce actually in the universe. It may be scarce on planet Earth, but it's not in the universe. More reason to own Bitcoin, which will always be fixed, no matter how many asteroids we mine. We're never going to find Bitcoin up there. So that supply is never going to get bigger. But a lot of people think that's way too sci-fi, that's way too far-fetched, which makes me think we're onto something, actually. Right. That's an idea that I actually think is going to happen sooner than people think. And I think it totally changes the game for Bitcoin, because all of a sudden, yeah.
Right. I mean, gold is as plentiful as sand in our galaxy. It's just a matter of time. And if the price of gold goes up, you just mine more gold. So the supply expands with demand. The supply of Bitcoin is truly fixed. It does not expand, and the same is true for Zcash. And that's a big light bulb for a lot of people. I think people don't quite realize that until they do, and then you can't sort of unsee it, and you realize, okay, this is truly, truly fixed. And I think there's something like 40 million millionaires around the globe, but there's only 21 million Bitcoin, so they each won't be able to own even one Bitcoin when it's all said and done. So it's really fixed, and I think that's a big aha moment for people to wrap their head around.
So, Saylor's right about everything he says. I can't believe people are selling me their Bitcoin.
So we wrote the case for $500,000 Bitcoin in August of 2020, because back then the market cap of gold was lower. So you divide 21 million Bitcoin into the market cap. Gold at that point in time, you get $500,000 a coin. That's about when Michael Saylor started smash buying in August of that summer. And the price of Bitcoin was $12,000 a coin. And I think people probably thought he was crazy then. And here we are at $100,000 Bitcoin, and I don't know how many 100 billion of Bitcoin in MicroStrategy. And there's still people who probably think he's crazy, and we're going to find out. But I think he's more right, more correct. So
still early. Great. I want to switch gears a little bit. We got to know each other through restructuring. As I always like to say is, in restructurings, you really get to know people. You get to know who you can trust, how people behave under stress, when you're on the different side of the table, all of that. And we're clearly still sitting here today. But one thing that I'd love you to sort of share with the audience is some of your, some of your values in life, right? You're still here. You're always pushing for new ideas, new initiatives, and always looking for new things. So what are some of the things you would tell people here in the audience, whether it's young entrepreneurs, parents with young kids or kids, anyone, what are some of the life lessons you would give to the audience? Maybe you want to kick it off, Tyler.
Yeah, so we just we love building. We love being on the frontier. So a lot of people they're doing stuff to maybe retire or do something else, right? They're like, I want to work, make a certain amount of money to then do something else. But I just want to be here doing what I'm doing. Like, this is the destination, and this is the thing I'm going to keep doing. So if you're like at this conference to not be here eventually, this is probably not your passion or what you should be doing. But, building new ideas, we're super curious about all of that stuff, is meaningful to us. It gives us meaning. Working, being productive, building stuff, trying to fix money, trying to invest in folks doing cool stuff. So that just excites us, and that is super meaningful. And you want meaning in life. You want to be working on hard problems and, applying yourself. So that's what we're here to do, I think, is to make a mark.
Yeah, I think curiosity is a big, I don't know if it's a value or a trait or how you quantify it, but we're just very curious about things. And I think when we saw Bitcoin, we were just really curious about, what is money and why doesn't it work like your email 24/7, 365? It should. It's just information. It's ones and zeros, and yet it doesn't work. And all forms of money that we used before Bitcoin sort of predated the internet, and that didn't make a lot of sense. So I think by just asking those questions and having an open mind, we call beginner's mind that concept, or first principles, and letting that curiosity just pull you and drive you to learn more. And I think that's a big part of our how we approach things. And get excited. I think also our father is an entrepreneur. He built a software company in the 90s, and he was working with computers in graduate school in the 60s. I think one of his professors said, if you don't get math and computer science, you'll be obsolete. And this was in the 60s, and that really scared him. So he started taking a lot of computer science courses, and he was programming on these large mainframes with punch cards. There wasn't even monitors back then, and writing software and then building companies. And so he was an entrepreneur, a risk taker. And I think growing up in that household, you just absorbed that. It doesn't even feel risky to put millions of dollars into Bitcoin in 2012. It feels like risky actually not to do that, because you're going to miss out on the next wave. So I think we see risk very differently. We see risk as opportunity, and if you don't have enough risk, you probably don't have a big enough opportunity in front of you. If you're not being misunderstood or people don't think you're crazy, then you're probably not doing something innovative. It's probably pretty boring and straightforward. So I think a lot of that has a lot to do with it. And then, as I mentioned, our days rowing, right? You have to intellectualize and get excited about getting a little bit better at the sport and pushing yourself. And nobody really cares other than you, by and large, right? There's no championship ring. I mean, there's the Olympics, of course, but by and large, it's a amateur sport, right? You're not getting paid. You're actually losing money to row, basically, opportunity costs. And yet you get to push yourself and see how far you can push the limits. And you're with great people, training and pushing yourselves together. and going to the line with people and battle tested, which reminds me of the restructuring that we did. You get to know someone when you train with them and you row with them. You get to really know them, and the same is, you know, through a restructuring in a different context, but similarly. And if you're trying to pick your founder, you should probably go through a restructuring. I know that's not realistic, but then you really understand who your founder is and what they're like under pressure, under fire. What are their values? It's the financial equivalent of going rock climbing with someone. That's like the old adage, right? You know, who would you go rock climbing with? Okay, if you trust them, then you might want to start a company with them if you have a good idea. And I think
that's why I hired Cameron.
Yeah, exactly.
to start Gemini.
But the trust variable out, right?
I mean, be curious, be a lifelong learner, learn how to take risks, be a high agency person. Realize that you can just go do that thing that you want to do. And so, you know, take action. Be a man of action. And it's okay to be disliked. Be disagreeable. Because everybody who got Bitcoin early was ridiculed and laughed at. So if that's not happening to you, you're probably not on the frontier, and your idea is probably not innovative enough. This is not scaring people, or they're not calling you crazy. And so the ability to be misunderstood, called crazy, piss people off, be disagreeable, piss off governments, politicians, that's like a superhero strength. Because that's how we got here. That's how you build Bitcoin.
There's the Gandhi quote.
So all those things, you know, and is it nature, nurture? I think you can learn that stuff, you know, a lot of it.
Yeah, and I think we're in this age where you've never had more leverage. Like, somebody will create $1 billion startup out of their dorm room, out of a garage, like in a very, very short period of time, right? Using AI and agents, and you don't even need like a lot of 10xers. You can basically 100x yourself with AI and a lot of the things that are being built right now. So it's a very exciting time. And there's that Gandhi quote that goes, you know, first they ignore you, then they laugh at you, then they fight you, then you win. And that's actually the quote that we built our entire presentation at Bitcoin 2013 around, describing this new technology, Bitcoin, and how it was being treated. And guess what? We were right. You know, that was probably...
They did fight us.
Yeah, they just got done fighting with us, and we won. And I think in 2013 we were in the ignore / laugh phase, and now look who's laughing now. So I think all technology does go through that arc and that experience, and I think treasury companies went through that. I think Michael Saylor went through that for years until people started to say, "Oh, wait a second, I get it." But he went through a lot of that, and Bitcoin's gone through that. So you need to be, you know, feeling and hearing some of that if you're innovating. So I think, you know, build and take agency and do things, and I think it's never been a greater time for that.
100%. That's great. Thank you, guys. Amazing. It's all about that conviction, and we see it every day with you guys. So, Cameron Tyler, really appreciate it. Super amazing that you were here. Thank you. We'll have the crowd. So let's give big hands for Cameron Tyler, guys. Thanks, man.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury. We're closing out the day. We just heard from the Winklevoss twins speaking with Treasury CEO Khing Oei. Super interesting conversations. One of the things that we were having a conversation about here at the live desk, and actually before we dive in, let me reintroduce everybody that's over here to my left. So again, Frank Korva here, Bitcoin journalist, joined by Jeff Walton, Chief Risk Officer at Strive. To his left, Henry Elder, CEO at Satsuma. And to his left, Christine Lee, crypto journalist extraordinaire. What we were talking about off camera was we were thinking about the Winklevoss, the first two people to ever put in an application for an ETF. And we were talking about just how quickly things have accelerated under the Trump administration. Sort of maybe 3 or 4 years ago, maybe in each of your wildest dreams, did we ever think we'd be here where we're so openly, we were even talking about the Winklevoss and how active they are in this, in this political process. I've personally been in the White House with them as they've been at bill signings and other events. Really exciting times. Just, did you imagine we'd ever be here, Jeff?
Yeah, no, I didn't imagine we'd be here, but it's incredible to see, and really it's a result of the alignment of incentives, right? I mean, now you've also got Larry Fink at BlackRock. This is the most successful ETF in history, reached $100 billion faster than any other ETF in history. And you can see that incentives flow through into the politics and how it's going this way as well. But yeah, it's been incredible to see, and really it's the open road in front of us.
Yeah, amazing. Your thoughts? Henry?
I mean, Frank, I've been operating in a regulated capacity in this space since 2017. I was trying to tokenize real estate in 2017, right? And then 2019, I joined Way Financial, registered investment advisor, Series 7, Series 66, all that stuff. It's insane. Yeah. We have such the amount that the Overton window has shifted, and the opportunity that we have right now to try to make that permanent, I think, is one of the most important things for everyone in our industry to be focused on.
I think that's a great way to put it.
I'm going to say that I actually thought it would happen sooner.
Is that right? Well, let's talk about this. You've been covering this for how long now, Christine?
Okay, so it was the Winklevoss twins that got me into Bitcoin because they I was working in traditional media at Bloomberg at the time, and they came to the office and they wanted to talk about their Bitcoin ETF. That was in 2014, so it was the second time they had tried to submit an application. And that's when I thought, okay, what? Bitcoin?
Yeah. What's this Bitcoin
it's still here. What is
about?
this?
Yeah.
And the more I researched it and dived into it, I thought, this is a really awesome technology. And I thought, I think they should pass a Bitcoin ETF. That would make a lot of sense. So they failed in that attempt. They failed the following several other attempts, and it surprised me actually how difficult and how many barriers there were in the system to a very innovative technology for the financial world. But of course, there's the argument that perhaps the incumbents don't want to lose their power to a decentralized technology.
Yeah. It's got precedent.
Yeah.
I mean, there's a reason that in the United States, it's not as common to be able to do everything on your phone, right?
100%.
The incumbents made it very, very difficult through various regulations for us to build super apps in the United States.
Yep.
And it retarded the progress of that technology in what should be the technological leader of the world.
Yeah, absolutely. And it is interesting to think about it in this way too. We're talking about Bitcoin, a permissionless technology, but on a certain level, back then it was just so taboo. Speaking again to what we talked about, we've come a long way. Bitcoin has gone from being this taboo thing that you just don't bring up. Maybe you're crazy person like me, nephew, uncle, whatever, talks about it at the Thanksgiving table and everybody wants to say, get out of here, we don't want to hear from you anymore, to now just being a macroeconomic asset, something we're talking about as a strategic Bitcoin, strategic asset that the government should be holding, that every human being should be holding for one reason or another. So it's exciting times. Very quick last thing. We have to cut to the main stage in 10 seconds. Very quick last question to everybody on the panel here. Have we seen the all-time high for this cycle, yes or no?
No.
Indecisive. We'll say it's a no. We're bullish over here, ladies and gentlemen. We're cutting back to our last talk of the day. We'll be hearing from Gilles Roth, the Luxembourg Minister of Finance. He's got something to tell us about how into Bitcoin, how excited about Bitcoin he is. So let's go to the Treasury stage. We'll be back after this.
Launch. You'll enjoy the fireside chat. I certainly did. Now it's my pleasure to introduce one of the most groundbreaking sessions of the day, featuring a newcomer to Bitcoin Amsterdam, another one. So it's a special honor to welcome our next guest, one of Europe's premier forward-thinking financial leaders,
Mr. Gilles Roth, the Minister of Finance of Luxembourg. He's joining us directly from today's ECOFIN meeting in Brussels, where Europe's finance ministers gathered to shape this region's strategic direction. So his presence this afternoon is actually really symbolic. It demonstrates how the conversation around Bitcoin is moving from side rooms, maybe just conferences, to the main stage of Europeans' financial policy. And Luxembourg has long been one of the most international and trusted financial centers. Under Mr. Roth's leadership, it's become a pioneer, regulatory-wise, etc. So most importantly, Luxembourg became the first European country to allocate 1% of its intergenerational sovereign wealth fund to Bitcoin. This is a seminal, forward-looking move that reflects a deep understanding of digital money and how it can strengthen Europe. So, gentlemen and ladies, please join and welcome to the stage Minister of Finance of Luxembourg, Mr. Gilles Roth.
Ladies and gentlemen, good evening, Amsterdam. Thank you for inviting me to speak, especially after such crypto pioneers as the Winklevoss twins. And what a pleasure to conclude this first day of great discussions. I just come from Brussels, where I met my fellow finance ministers from the Euro area and the European Union. We were discussing ways to make Europe more competitive in a challenging international environment. I believe that crypto, and in particular Bitcoin, are part of the solution. Make no mistake, even among political leaders in Europe, more and more study Bitcoin. As US Treasury Secretary Scott Bessent recently noted, 17 years after the white paper, the Bitcoin network is still operational and more resilient than ever. Bitcoin never shuts down. I realize that I was invited here because Luxembourg's Intergenerational Sovereign Wealth Fund was the first in Europe to invest in Bitcoin. And thank you. And actually among the very first in the world to officially disclose it. In Luxembourg, we do things sometimes differently from most other countries. We do not just promise, but we deliver. Our sovereign wealth fund, investing 1% of its assets in Bitcoin, is not an announcement to seek attention. It's already done. And while the fund's investment policy allows for an allocation in any crypto asset, it has chosen to invest only in Bitcoin. Thank you. Because, as Michael Saylor once said, there is no second best. And we're in it for the long haul. And let me be clear, Luxembourg hurdles. We are still early. I'm sure that others will soon follow our lead. As Minister of Finance, I meet with companies and financial institutions from all over the world. Digital assets are a topic that is high on everyone's agenda. Also, to set the context, I would like to tell you a little bit about Luxembourg. Not to give you a sales pitch, but to give you the facts. To explain why my country cares so much about the future of global finance. We are the world's leading cross-border investment hub with assets over 7.6 trillion euros. A third of this now in alternative funds. This makes us the US and the EU's largest alternative funds hub. We distribute these funds to over 80 countries worldwide, from Europe to Latin America to Asia. We have over 115 banks from more than 20 countries. From Luxembourg, they serve global high net worth individuals, families, and also corporates. We are also the EU's leading cross-border life insurance hub. In recent years, a whole range of cross-border fintech companies have set up in Luxembourg. They serve as payment gateways, tokenization platforms, and regulatory platforms for clients across the globe. And this quick glimpse helps you to understand why we care so much ensuring global finance flourishes, and why we think so much about the disruptions to the traditional models that you guys are working on. Over the past decade, we have built a trusted home for Bitcoin and digital assets in the heart of Europe. Our journey embracing crypto started with providing clarity. We moved early with national authorizations for crypto firms. In fact, we regulated the very first European crypto exchange, Bitstamp, nearly a decade ago. Back then, Bitcoin was priced less than 1,000 euros. Today, Bitcoin is close to 100,000 euros. Luxembourg is now home to a large ecosystem of crypto exchanges, custodians, service providers, advisors, and the very first digital asset control agents. With MiCA in force, we are now also fast becoming the EU home for serious crypto asset service providers or CASPs. This was underlined this summer when Coinbase chose to establish its EU crypto hub in Luxembourg. Luxembourg provides supervisory excellence with openness to innovation. And don't be fooled by those who claim that central supervision is the magic bullet to boost EU competitiveness. On the contrary, it will merely add layers and bureaucracy and cost and make Europe's nascent crypto industry less competitive. Luxembourg supports your industry in your efforts to make crypto a trusted asset class. We are convinced that the future of finance is digital. Bitcoin will be a mainstream asset class like gold. It actually is digital gold. Tokenization will be a game changer. To succeed, we need regulatory clarity and forward-looking legislation. In Luxembourg, we have modernized our securities and collateral law since 2019 in close dialogue with the sector. DLT issuance, settlement, and collateral are recognized and of equal footing to traditional securities. We have made central accounting and account keeping fit for blockchain-based markets. This was never about hype. It was about a bridge between code and capital. We did this within the European frameworks to enable institutional actors to safely manage their crypto exposure. While a European DLT pilot regime was an important step to test innovation, Luxembourg left the sandbox. We concluded that a security is a security, regardless of the rails. Pilots can never provide durable legal certainty. That's where Luxembourg has come in. With clarity in place, scale follows. Luxembourg is a scaling machine for cross-border finance. Our toolbox that powers our fund industry and capital markets now also supports institutional Bitcoin strategies. New and established players have chosen Luxembourg to serve this industry and offer crypto custody and alternative fund management services. Add institutional administration, audit and services, and you have a compliant route from idea to investor that can scale all over. Europe's first digital bonds have been issued under Luxembourg law. Luxembourg is home to tokenized money market funds and tokenized real-world assets. We became a home for some of the first alternative investment fund managers in the crypto space, the first European crypto funds, which of course are all heavily invested in BTC. Yes, institutions have entered the Bitcoin space, and many have done so through Luxembourg. And yes, in the process, Bitcoin has become an established asset class even for traditional bankers. So, when we speak about European Savings and Investment Union, we should also speak about Bitcoin. Like I mentioned earlier, I meet with European finance ministers very regularly, and we all agree Europe faces structural changes. We are not competitive enough in the global economy. Europe does not lack ideas. We do not lack funds, and we do not lack talents. The people here in this very room attest to that. What we lack is scale and simplicity. First, scale. The lack of scale is largely due to fragmentation of capital. This makes it hard to mobilize the necessary financing to large-scale projects. To put it simply, Europe is a continent of savers, not of investors. Over 11.5 trillion euros is held in cash or deposits. We struggle to challenge these savings into high-growth sectors, cross-border ventures, or infrastructure at scale. This is where Bitcoin, digital assets, and also tokenization can help. Bitcoin and digital assets are natively cross-border and auditable. Second, simplicity. European rules have become too complex, regulation too burdensome. What we need is more simplicity. If Europe combines simpler rules and more predictable supervision with cross-border payment and investments, we can finance, attract and mobilize more investments and make Europe competitive again on a global scale. But don't get me wrong. Europe is a market of 450 million consumers. There are plenty of good reasons to invest here already. And here is Luxembourg what offers to investors, founders, funds and institutions, and basically to all of you in this room. First, a regulated home for your business with a supervisor that is respected and trusted by institutions and clients alike. Second, institutional-grade infrastructure, the largest density of Tier 4 data centers and HPC computing power. Third, cross-border distribution at scale. Trade once and serve the whole of Europe using the passporting playbook that built our international fund center. Fourth, tokenization with legal certainty. From issuance to collateral to settlement, DLT is embedded into securities, law, so tokenized instruments plug into real balance sheets. And fifth, stability and an attractive legal framework that offers clarity and also predictability. Plus, AAA rated public finances with low debt, attractive taxation and tax incentives that encourage innovation and also talent attraction. And finally, an open dialogue. As finance minister, I encourage this. Our regulator, the CSSF, applies this on a daily basis. Ladies and gentlemen, by now you have understood that I have tasted the orange pill, but I'm not a Bitcoin maxi. In my mind, our economies will not switch to the Bitcoin standard, but at the same time, Bitcoin will, without any doubt, be part of the future of finance. I see TradFi and crypto complement each other. We will see a hybrid world where CBDCs, stablecoins, tokenized bank deposits and crypto will coexist. As they integrate further, risk becomes manageable, exposure becomes normal, and adoption becomes not only responsible but an obvious choice. In Luxembourg, we embrace Bitcoin and digital assets. And we invite others to follow that path. So Bitcoin can help shape the future of finance in a way that is safe, open, and good for the European and the global economy. If we succeed in building a continent that operates at scale, then we restore not only our competitiveness, but our ability to lead. And right now, Europe's leadership and shared values appear more important than ever. Thank you for your attention. Thank you.
Welcome back to the Bitcoin Magazine News Desk. We're here at Bitcoin Amsterdam 2025, presented by Treasury, closing out the day. We just heard from Luxembourg's Minister of Finance talking about Bitcoin as a strategic savings asset, something that Luxembourg should be embracing. Very, very exciting stuff. My name is Frank Corva, Bitcoin journalist, joined here to my left by Nick Hoffman, head of news at Bitcoin Magazine, a man who needs no introduction, Saifedean Ammous, author of many books, including The Bitcoin Standard. Exactly. Yes, we're not worthy. We're not worthy. And Christine Lee, crypto journalist extraordinaire. But Saif, I want to get to you, but I just want to quickly have Nick, who was paying very close attention to that talk, maybe give us a quick recap of some of the big talking points from the Minister of Finance there.
Yeah, at a quick high level, he just came from Brussels, where he was meeting with his other finance ministers, talking about how can they make Europe more innovative and competitive. And he said he believes that Bitcoin is a part of that solution. He was saying that more and more political leaders in Europe are beginning to study Bitcoin. And while he was saying that, we've yet to see it in the public. So I hope more leaders in Europe start coming out in support of Bitcoin. But he basically was touching on how Luxembourg's sovereign wealth fund had invested 1% of their holdings into Bitcoin, and that was announced earlier this year in October. And he said
Bitcoin ETFs, if we're being completely, I think it was the ETFs.
Yeah,
it was
Bitcoin ETFs.
Yeah.
Okay. First in Europe, though, to put some money in.
We like to differentiate here. Let's yeah.
So yeah, very important. Yeah, that's very important to know. But he did touch on a Michael Saylor quote. He said there is no second best, and he did specifically say that they invested in Bitcoin and they're not investing in crypto.
I did hear him say some other digital asset stuff, but we'll get to that another time. Saifedean, over to you. We were talking off camera a little bit about how you were writing the Bitcoin Bitcoin standard in 2017, was published in 2018. I'm curious, as you're writing a book like that, which was incredibly impactful, in your head as you were writing that, what was the timeline like? Were you expecting a few years down the road to see ministers like this talking about it? Were you expecting El Salvador's to happen as soon as they did?
I'd say I probably expected more bottom-up adoption, random people in places like Zimbabwe, Lebanon, Venezuela, Turkey, and Argentina to be using Bitcoin more. And I expected probably less official adoption. So I wouldn't have expected the governments to be stacking Bitcoin as much as they have. Okay. But, we have not only El Salvador, Luxembourg, but also Bhutan. Several other governments are involved in mining projects and so on. And when I wrote it in 2017 and 2018, I thought it would be something that governments would stay away from. And it would grow, but it would be much more of a grassroots thing. So less financial institutions and less government input into the buying process. But I was wrong on both, I guess.
I just want to say the Luxembourg finance minister did say he doesn't believe there will be a switch to the Bitcoin standard, but it will play a significant role in the future. What is your response to that?
I mean, obviously we'll see. None of us has a crystal ball, but I think ultimately the way that I see it is that it's not because governments accept a particular way of doing things, or governments are not going to mandate what money is. The market decides what money is, and then governments will follow. So, and the reason the markets will decide Bitcoin is money, in my opinion, is that it's going to continue to appreciate and increase in value over time, which is going to make it more and more valuable, which is going to increase the size of cash balances that people have in it. So inevitably it's going to grow as a percentage of the world's money supply indefinitely, because all the other monies are declining in value, whereas it is increasing in value.
Yeah, much appreciated. I want to quickly touch on this book you have in front of you there. I think you have an announcement for us. Can you tell us a little bit about the gold standard here?
Yes, it's my new book. It's out today. Today is the day that I'm releasing it, and I'm selling it here in the conference. It's the gold standard. It's my fourth book. So first there was the Bitcoin standard, then the fiat standard, and then there was Principles of Economics, and now the gold standard, completing the standard trilogy.
Okay.
But this one is a bit different. This one is economic fiction. I think I've invented a new genre of books.
All right,
because there's fiction, there's economics, and they usually don't meet. But in this case, I wrote an economic fiction book where it's an economic history of the 20th century, where fiat money never happened. Well, actually, fiat money happens, but fiat money dies in 1915. During World War I, while the world is fighting, gold becomes like Bitcoin. And, Bitcoin, it's a Bitcoin book. Even though it's called the gold standard, it's still about Bitcoin. But it imagines what would have happened to the world if gold had functioned like Bitcoin in 1915 during World War I. And that's through this plot that I cook up where airplanes are used for gold clearance in 1915. So imagine in early 20th century, airplane entrepreneurs set up the first commercial application of airplanes is to use it to clear gold, because they figure out that gold is the most valuable thing per unit of weight. So it's the thing that's most economical to move around with airplanes. So that's how they figure out they're going to make airplanes scale. So they build a business that can move gold around cheaply and quickly across Europe and the world. And the result is that during World War I, while central banks are printing money, in the real world, they could get away with the money inflation for 4 years because people had no other alternative. They had to leave their gold with the bank. But in this world, they have an alternative. They use the decentralized digital gold alternative, essentially, of gold on airplanes. And as a result, they rug their central banks. And fiat money dies in 1915. And World War I ends in 1915. And then we have a whole century of amazing peace, prosperity, abundance, and technological advancement with very little war, very little conflict. And it's a much better century. So it's a really elaborate thought experiment about just how the world would have looked, with the benefit of hindsight, because we know how the 20th century looked. We have 25 years hindsight, clarity on what happened in the 20th century. And now we can say, well, what would it have been like if we hadn't had this incredibly destructive technology that allows us to destroy people's wealth in order to finance wasteful and destructive and criminal activities.
Endless wars, things that go on
Endless
forever,
wars,
right?
exactly.
Yeah, it's important. So I think this actually ties in a little bit to what you'll be talking about tomorrow in your keynote. So maybe a little bit of a preview. Any other, obviously I'm assuming you'll be harping on some of these points and probably referencing the book to some degree, but anything else we might be able to expect from the keynote?
Yeah, well, I'm going to be talking about the story of the first few chapters, which is about the real-world story of World War I, how World War I came about, and the incredibly important role that fiat money had played in maintaining the war and allowing the war to happen in the first place and letting it last for as long as it did. Because, most government historians and most historians are paid by their governments because they're paid by universities who are paid by government. So most official regime historians don't like to emphasize the dirty secrets of inflationary money and how inflation was necessary for making these wars happen. And, even with all the information that we get about how the world's wars happened, we still don't talk much about the financial aspect of it because it's very, very, very shocking, particularly in the case of the Bank of England, which is a central theme in the book, and one of the main ideas. So we're going to be talking about how the Bank of England got into World War I, why it created fiat money, and why we are still paying the price until today as a species.
Let's go. Well, on that note, we're going to take a quick commercial break. We're here with the legendary Saifedean Ammous, and this conversation will continue in just a moment. A word from our sponsors. We'll be right back after this. Welcome back, everybody. We're here at the Bitcoin Magazine news desk, closing out day number 1 of Bitcoin Amsterdam 2025. And what better way to do so than with the legend himself, Saifedean Ammous, author of the Bitcoin Standard and the new book, The Gold Standard, as well as other books. So we're here. We just saw actually an ad for Bitcoin Mena. It looks like we likely, maybe it's a little bit of a teaser, we may have Saifedean speaking at Bitcoin Mena. But don't wait till then. Tomorrow, be sure to tune into this live stream to see Saifedean give his keynote talk tomorrow to actually close out Bitcoin Amsterdam 2025. We're all looking forward to it, Saif. We want to dive in a little bit deeper, though, to talking about Bitcoin adoption in the Middle East, where you're based. What are you seeing? Are people adopting it on the ground? Does it look like more government adoption? What's happening over there?
Yeah, I would say over the last couple of years, things have started picking up a lot more. People were pretty skeptical of it. And, particularly in the Gulf, they've not really had an inflation problem. Their currencies have been very stable, pegged to the dollar, in some cases appreciating more than the dollar. So people don't really have much of an incentive to look into something as an alternative to their local currency, because their local currency looks fine. And there's a lot of skepticism from just general financial innovation. People generally have the idea that it's likely illegitimate or it's likely forbidden in Islam. But I think the last couple of years there's been a massive change in the attitude, particularly from governments. There was always grassroots adoption that was growing in the region, but now I think governments are shifting. And, more and more governments in the Middle East are mining, and more are interested in mining from what I gather. And more are interested in Jordan, where I live, they just passed the law for regulating financial institutions getting into Bitcoin.
Okay.
So things are picking up. I think the governments are taking it more seriously, and I think we're going to see more adoption pick up pretty quickly, probably over the next few years in the Middle East.
Do you think on some level, just a quick follow-up, actually, Christine, over to you first. Yeah,
well,
go.
We're seeing that Bitcoin MENA is happening in Dubai, and the UAE has
Abu Dhabi, just to clarify.
Oh, sorry, Abu Dhabi. And the UAE has embraced Bitcoin, cryptocurrencies, etc. And so are other Middle Eastern countries seeing that as an example to follow?
I think so. I think this is what is probably happening because the UAE Oman and the UAE both were pioneers in this. They started off mostly with some mining projects initially, which was a good fit because they have a lot of waste energy and a lot of gas. And so some of them started mining with it, and that's worked out well, from what I understand, over the last few years. So, people in the region, they talk to each other, and it looks like word is getting out. I think now the leadership in many of the countries are interested. So, nothing concrete has happened in Saudi Arabia as far as I can tell, but I think they're a lot more open to it, and you're seeing more and more discussions of it. So I would imagine there will be more opening and more opportunities about it, because I think it's achieved a level of seriousness now where people there are beginning to pay more attention to it, particularly after the positive experiences of the Emirates and Oman.
Okay, appreciate that. One of the questions I had, do you think that, is it just something within human psychology where maybe they need to see the government sort of okay it first before they adopt it? And I say this, we were talking off camera, I lived in Venezuela under the Chavez regime, the beginning of hyperinflation, saw that with my own two eyes. We've seen in places like Lebanon, hyperinflation, people losing all of their wealth. I think certain people who are a bit more forward-thinking obviously did get some Bitcoin and preserve their wealth in it. Yeah. But I still get this impression that the everyday person almost needs this confirmation from the government that this thing is okay to hold. Yes. Do you think that's a piece of the equation?
I think there is an element of that. I think a lot of people just they don't have the agency to act on something like a monetary upgrade. They think of it as being something that needs to be arranged by the government. Right. So, if Bitcoin is so wonderful, then why isn't the government using it to replace our national currency? I think this is a pretty common thing all over the world. People have this. I particularly notice it in the Middle East. But I think, another aspect of it is that initially, as I was saying earlier, I thought there'd be more adoption in places that have hyperinflation. But I think the mental model that I had is my currency is collapsing, I need another currency. But I think it turns out that when people have their currency collapsing, they are unable to think about saving. They're unable to think about the long term. They're thinking about groceries today, next week, next month, So in that kind of situation, all the money that you have is just going to meet your basic needs, is going to put out fires in your individual life, and you don't have the ability to think long term. The people who have had the ability to think more and more long term about it are the other side of the spectrum, the people who have good financial markets, good currencies, access to saving, that they have plenty of cash on the side that they use usually for investment and saving. These are the people that it seems have taken this up. So that's why, in the Middle East, you see more adoption in places like some of
the wealth, kind of places where per capita wealth is a little bit higher, right?
Exactly.
Things like that. Yeah. It's interesting. I've thought about this a lot, and also I think about this through the lens of Venezuela. It was also very, very difficult to get your hands on dollars, and with things, we're going to talk about this a little bit tomorrow in a session in the deep, but often because of things like Tether also, they were like, I could just get dollars, and American dollars have been thought of as a flight to safety, or Swiss francs or Japanese yen. So this idea of maybe thinking of Bitcoin as the flight to safety versus just a stronger other fiat currency, I don't think people have fully sort of grokked that yet. It seems to be the case that that's there, but yeah.
I think there's the basic case of just maintaining the wealth that seems to fit better with dollars for most people, because ultimately, Bitcoin is less than 1% of the world's cash balances at this point. So in the terms of the total market for money, Bitcoin's at only 1% of the total market, and the vast majority of money is dollars and dollar-backed shitcoins, essentially, national currencies.
We can use these lines. It's not a family show. That's just
along those lines. While in the United States, folks are looking to, get out of the dollar. And we're seeing a rise in the price of gold vis-a-vis Bitcoin. But I wonder, when you look at that data, what is your read on these investors in terms of those that are thinking, gold is all the rage and we don't need Bitcoin?
Yeah. Well, it's nice that the gold bugs had their day in the sun. After
finally,
yeah. $4,000. I'm old enough to remember when gold bugs used to say, Bitcoin will never become more than 1 ounce of gold. Mm-hmm. Bitcoin will never overtake an ounce of gold. Mm-hmm. And that was when an ounce of gold was around 2,000 or 1,600 or something like that. Yep. And so Bitcoin has gone around 50x that level, and gold has barely overtaken it a couple of years ago, and now it's doubled over it. So still, I think in the long run, ultimately, I still believe Bitcoin has superior number go up technology, as I like to call it. It's going to continue to appreciate more and more. It's going to be more attractive as a financial asset because Bitcoin has lower inflation. Gold gets 1.5 to 2% of its supply added onto it every year. And at current value, that's an enormous amount because the current market capitalization for gold is about, I think, $28 trillion. So 1% of that is $280 billion being added on every year. So in order to just maintain the price at where it is, you need to have $280 billion a year of new buying on the gold on top of the existing demand. Whereas with Bitcoin, we only have, what is it now? We're doing...
About 6% left to mine, is that what you're going
for? 5% left to mine over the next century or so. So over the next year, the increase in the supply of Bitcoin is going to be about 0.8%. So if it's $2 trillion and you're going to be doing 1% of $2 trillion, that's $20 billion or a little bit less than $20 billion. So that's around 15 times less than gold. That's the new supply that's being added onto Bitcoin, and it's going to drop by half in another 3 years. So we have we have lighter bags. They have heavier bags. Their bags are constantly being made heavier, and people are going to dump. But ultimately, I still think the main reason why I don't think gold can take off and continue is that ultimately you can't have gold settlement. You can't have gold banking. So everybody who buys gold essentially has to sell it before they transact with it because there are no banks that deal with gold. And governments have centralized gold for a very long time. They control it and they've practically neutered it financially. So I don't think that we are going to be seeing much of a gold world, gold-based monetary system.
No big return to gold, So
No.
I think our lesson here, ladies and gentlemen, is Bitcoin, not gold, if you will. So to the gold bugs out there, we're not trying to start beef. But anyway, it's been an exciting day here at Bitcoin 2025. We're going to wrap it up here. Saifedean, thank you so much for joining us.
My pleasure. Thank you for having me.
Congrats on this new book. As I mentioned earlier, Saifedean is going to be giving the final keynote of the day tomorrow. Before Saifedean, we're going to have Adam back. We're going to have Jack Mahler. So obviously, we're going to need you to tune in tomorrow. We're starting here at the live desk. I'll be here with Christine Lee and maybe Nick Hoffman. 9 a.m. tomorrow, local time, CET. 3 a.m. EST if you feel like getting up in the middle of the night and following us. But sincere thanks to everybody out there watching today. It's been a blast over here at Bitcoin Amsterdam 2025, and we're going to run it back tomorrow. Take it easy, everybody. We'll talk soon.